Focused exploration into Datadog. That's ticker DDOG. A big name now in cloud security.
A huge name.
Yeah. And we've gathered some really interesting stuff for you. We're looking at technical charts, including something called rhythm analysis. It's financial health, market news, even what people are saying out there in the community.
Right, the unfiltered stuff.
Exactly. So the mission is to really sift through all that and figure out, what's driving Datadog now and maybe what's next.
Okay.
And you've probably heard the news, Datadog just got added to the S&P 500.
Big deal.
Huge deal. Stock jumped, 15% right after? It's hovering around $140 now.
Yep, around there.
So here's the question we really want to get into. Is this S&P thing just about more people trading it, more liquidity, or is there something, deeper going on? Does it signal more about its actual value?
That's the perfect place to start, I think. Because what our sources are suggesting is that, yes, the S&P inclusion, it's not just about liquidity. It's seen as real validation.
Validation. Okay.
Yeah, validation of the market's belief in Datadog's fundamental strength. And, well, what's driving that belief? It really comes down to performance.
Yeah, the numbers.
Exactly. Look at Q1. Revenue was up 25% year over year. Solid. And their EPS, the earnings per share, that blew past expectations significantly.
Okay, nice beat.
And crucially, they didn't just report good past numbers. They actually raised their forecasts for Q2 and for the full year.
Ah, so they see the momentum continuing.
Precisely. And this isn't just numbers in a vacuum. Our sources connect this directly to companies really leaning into AI strategies.
Makes sense. AI means more data, more complexity.
Exactly. A massive surge in data, new security challenges, and Datadog's platform, especially since AI-related cloud security is now, 35% of the revenue?
Wow, 35%.
Yeah, it's uniquely positioned to handle that. They offer the kind of monitoring and security these companies need as AI scales up. Oh, and they've got healthy cash flow, too. Always a good sign.
Okay, so the financial engine sounds like it's really firing on all cylinders, strong demand signals there.
Definitely.
But, for a lot of people watching the stock, the price chart tells its own story, or at least it gives a different angle.
Sure, the technical picture.
Yeah. Our sources get pretty deep into the technicals, suggesting some actual price strategies, like short-term support around $140.
Where it is now, basically.
Right. And then longer term, maybe $129, or even down to $123 as potential support. And upside targets, they're talking mid-150, maybe even hitting $180.
Quite a range.
It is. And the analysis uses these interesting terms like rhythm analysis and Elliott wave theory to get to those numbers. Can you maybe unpack those a bit? What do they actually mean for someone not, deep in the chart reading world?
Absolutely. Let's try. So rhythm analysis.
Yeah.
Think of it like listening to the stock's heartbeat. Sometimes the price action is fast and choppy. Then maybe it slows down, finds a steadier beat. This analysis tries to spot those changes in volatility, like how prices might trade in a narrow range and then suddenly expand outwards. And it uses this along with other things like RSI, that's the relative strength index.
Right. Overbought, oversold indicator.
Yeah, it uses these together to try and predict, potential turning points for the trend. Elliott wave theory. Well, that's a more established idea.
Heard of that one?
Yeah, it's based on this concept that market prices tend to move in these sort of predictable repeating wave patterns. It's driven by collective investor psychology, the thinking goes. Markets aren't just random noise.
So like ups and downs follow a pattern?
Sort of, yeah.
Yeah.
A natural progression. And then they mentioned TR resolution. That's, think of it like clearing out old inventory.
Okay.
If lots of people bought Datadog way higher, say near the old peaks, they might be feeling kind of trapped, just waiting to sell if it bounces back a bit.
Right. Get out even or with a smaller loss.
Exactly. So TR resolution is when maybe the price dips a little and those trapped sellers finally give up and sell. That selling pressure gets absorbed, it gets resolved. Fewer people are left waiting to sell, which, can make it easier for the stock to then move higher.
Ah, okay. Clears the decks, sort of.
Kind of, yeah. And those specific price levels you mentioned, the $140, $180, et cetera, they're often not just random numbers. They might be key Fibonacci levels derived from these wave patterns, or they could be previous price zones where a lot of trading happened, suggesting like a battleground. Rhythm analysis helps identify those zones too.
That's a helpful breakdown. So it's a way to gauge the underlying market pulse, maybe?
That's a good way to put it, yeah.
Okay. So beyond the charts and the strong financials, our sources also tapped into what real users are saying, like on Reddit, Twitter.
The ground truth.
Yeah. And it's interesting because while Datadog mentions are definitely up, it's not all sunshine and roses, is it? What's the chatter actually like?
No, it's definitely a mixed bag, and that's an important point. You get the full picture, right?
Yeah.
So, yeah, lots of positive comments, people praising the tech, the security features, but
What?
our sources definitely picked up on some recurring complaints too. For instance, some Reddit threads talk pretty openly about Datadog lag, especially during busy periods.
Performance issues.
Yeah. And cost is another big one that comes up often.
Yeah.
There was even one tweet, kind of joking, but maybe not entirely, saying something like, my Datadog invoice is bigger than my mortgage.
Ouch. Yeah, enterprise software can get pricey.
It really can.
Yeah.
So look, you have institutional money flowing in. It's a leader in this hot AI security space, but it's not perfect. There are operational hurdles, user frustration.
Context to have.
Absolutely.
Yeah.
And even with strong fundamentals and market position, no stock lives in a bubble. Our sources were also pretty clear about highlighting some broader market risks.
Right, the external stuff. Always got to factor that in. What are those wider currents Datadog needs to navigate according to the analysis?
Okay, so zooming out, the analysis points to a few key things. First, just the general high volatility you often see with tech stocks.
Yeah.
Even strong ones can swing wildly.
Yeah, tech can be a roller coaster.
Definitely. Then there are the bigger macro worries, concerns about a global economic slowdown potentially hitting company spending.
Budgets tightening.
Could happen. Interest rates are still kind of a persistent issue, right?
Yeah.
Higher rates generally make growth stocks a bit less appealing compared to safer options.
True.
And finally, the potential for short sellers to become more active. If more people bet against the stock, that can obviously put downward pressure on the price.
So macro headwinds, basically?
Yeah, exactly. Things outside of Datadog's direct control, the things you absolutely have to keep an eye on, they could definitely dampen even a really strong story.
Okay. So putting this all together, what's the big picture takeaway from this deep dive? It feels like Datadog is kind of sailing on two different currents.
How do you mean?
Well, on one hand, you've got these powerful growth drivers, right? AI, cloud security, the S&P 500 inclusion, giving it a nice tailwind. Looks pretty smooth.
Right, the bullish case.
But then at the same time, it's got to deal with the choppiness of the overall market, that tech stock volatility, plus those user friction points we talked about.
The headwinds and internal challenges, yeah.
So we've seen how the company has own strength, these big market events like the S&P inclusion, and then these quite intricate technical signals all kind of weave together into a complex picture.
That sums it up really well. And so maybe the final thing to leave you, the listener, thinking about is this.
Okay.
When you look at everything we've discussed, you essentially have two different narratives, right? On one side, you've got what seems like a pretty clear growth story. It's fueled by AI demand. The financials look undeniably strong.
The fundamental case.
Right. But then on the other side, you have these technical analyses, rhythm analysis, Elliott wave, which offer clues and price targets, but they do require some interpretation. They're not guarantees.
Sure, technicals are about probability.
Exactly. So the question to mull over is this. When you factor in those market risks we just talked about, the tech volatility, the economic worries, interest rates, potential short selling, which side of the scale do you put more weight on? Do you lean more towards that compelling growth narrative? Or do the signals from the technical charts and those broader market headwinds carry more weight for you right now?
Interesting dilemma.
It is. And I think wrestling with that question, figuring out where you land on that balance, that's probably the best way to really internalize and make sense of all this information we've covered today.
Datadog DDOG. Consolidation around $140 before renewed rally. What's the next upside target? Hello, this is Top Trader Jinlog. You can find the full analysis report on my blog. This video provides a talk show style commentary followed by a rhythm analysis report. Please check the full report on my blog. Summary: Datadog is consolidating around the $140 level in both short-term and swing timeframes, suggesting the potential for a medium-term trend shift once this base holds. The recent inclusion in the S&P 500 triggered a 15% price surge. Q1 revenue grew 25% year-over-year, and Q2 guidance implies 22 to 23% growth, underscoring strong AI-driven cloud security demand. Key entry points are $140 short, $129 swing, and $123 medium, with target ranges of $152 minus $165 and $169 to $184. Medium-term targeting awaits fresh rhythm confirmation. Investment opinion short-term target, $152 minus $165 zone. Recommend buying on confirmation of support near $140. Swing term target, Upon clearing $129, look for upside to $169 minus 184, managing volatility carefully. Medium-term view, monitor support at $123. Rhythm not yet fully measured, so proceed cautiously. Chart description. Here is the chart of Datadog DDOG NAS you requested. The circled areas mark short-term consolidation followed by uptrend continuation. Higher probability entry zones coincide with swing and medium-term trend lines. Always verify trend and wave structure on each chart before taking action. Rhythm analysis, short-term rhythm. In the expansion formation phase, showing bandwidth contraction and initial compression stage. Swing-term rhythm, also in expansion formation, attempting to recover toward the band center. Medium-term rhythm, entering weakening adjustment divergence phase with a shift from expansion back toward contraction. Recommendation. Monitor RSI and MACD histogram shifts alongside these phases. Financial flow, Q1 2025 revenue. $761.6 million, plus 25% YoY operating cash flow, $272 million. Free cash flow, $244 million. EPS, 46 cents versus 43 cents consensus. Q2 2025 guidance, $787 to $791 M revenue, plus 2223% YoY. Non-GAAP operating income $148 minus 152 M, approximately equals 19% margin. Full year outlook, raised to $3.22 minus 3.24 B from prior $3.18 minus 3.20 B, driven by robust AI security demand. News, risks, events S&P 500 inclusion early July, drove a 15% price jump on expectations of increased liquidity. AI-driven cloud security demand. Positive Reuters coverage highlights strength in this segment. Analyst upgrades. Bank of America and others raise target prices, boosting sentiment. Risks. Technology sector volatility, macroeconomic headwinds, and the potential for rising short interest. Strategy scenarios, short-term buy strategy entry zone. Around $140 consolidation area conditions. Trap relief is greater than or equal to 2/3 steps plus expansion formation rhythm plus volume surge plus S&P 500 inclusion tailwind swing term buy strategy entry zone. Around $129 conditions. Trap relief is greater than or equal to 2/3 plus expansion formation rhythm plus confirmation of market regime. High versus low volatility. Medium term buy strategy entry zone. Around $123 conditions. Trap relief is greater than or equal to 2/3 plus shift from weakening to adjustment in rhythm plus consideration of longer term macro context. Elliott wave analysis short term. Wave 3, positive 68%, negative 17%, neutral 15%. Key influencers at Datadog, Atop Stack X, Stack Overflow. Questions up 27%, 150 right pointing arrow, 190. Top tags DD Trace, Datadog API. Sentiment keywords positive. Performance, visibility, security, negative. Latency, cost, overhead. Outlook and risk summary. If $140 support holds, further short-term gains are likely, but tech sector volatility warrants risk controls. Medium-term outlook remains constructive given AI security tailwinds, though global macro uncertainty and rising short interest pose potential headwinds. Deep dive report institutional flows net inflow of 1.2 M shares over the past 4 weeks reinforcing the uptrend. AI business impact. AI security accounted for 35% of revenue, serving as a key growth driver. Order book pressure. MACD histogram turned positive. RSI approaching overbought territory. Monitor for momentum shifts. Brand disclaimer. This report is produced using the VPAR rhythm analysis methodology, combining chart rhythm flows with order book patterns to identify optimal trading points. All investment decisions are at the investor's own risk.
Welcome to the deep dive. Today, we're plunging into some really fascinating sources about a company that's definitely been capturing a lot of attention in 2025. That's D-Wave Quantum, ticker QBTS. If you've been keeping an eye on things, you'll know their stock has, well, surged nearly 90% this year. It's sitting around $16.68 right now. So our mission here really is to pull out the most important bits from the materials you've shared with us, everything from recent performance, financial health, expert predictions, technical signals, even the online chatter. We want to give you a shortcut to being, genuinely well-informed about D-Wave without getting bogged down in all the details.
Yeah, and what's really interesting is how these different sources kind of paint a picture from multiple angles, right? Yeah. You get the financials, the technicals, the broader market feeling. And their core tech, quantum annealing, it's pretty unique, designed for these super complex optimization problems. You can sort of think of it like trying to find the absolute lowest valley in a huge hilly landscape. That's basically what it does for really complex computational tasks like, route planning or even designing new materials. Let's unpack it.
Okay, so that sets the stage for D-Wave's unique spot in quantum. But to really get why they've shot up like this, we need to look at the numbers. And their Q1 2025 results seem like the place to start. That seems to be where the story really kicks off. What jumped out at you financially? Revenue, profit?
Well, the financials are pretty striking. Yeah, D-Wave's revenue, it just exploded to $15 million in Q1. That's a massive 500% increase compared to last year. But maybe even more critical is they actually hit profitability, reported an operating profit of $13.9 million. Moving from loss to profit like that, that's a huge milestone, especially, in a field like quantum computing.
Right. And on top of that turnaround, they also secured what was it, an extra $400 million through something called an ATM method, bringing their total cash now to over $550 million. So my first thought, is that like a sign of real strength, or are they scrambling? What's the story there?
That's a really good question to dig into. So the ATM method at the market offering, it's actually a pretty flexible way for companies to raise cash. They issue new shares, but directly into the market at current prices, kind of as they need the funds. So this big injection plus hitting profitability, that's a major signal. It gives them real momentum for operating their current Advantage 2 system, which is already out there commercially. And critically, it fuels the development of the next-gen Advantage 3 system. That one's slated for 2028, I think.
Okay.
So it's not really a scramble. It feels more like strategic fortification. Gives them a clear runway. Yeah.
Got it. Okay, so beyond the numbers, the sources also talk a lot about partnerships. They're teaming up with, well, quite diverse groups like Stark in the Middle East, Yonsei University in Korea, and Karasoft for distribution in the U.S. public sector. Seems like they're really spreading out across regions and industries.
Yeah, and these partnerships are really key. They show that the technology has real-world applications, right? And it shows their potential to actually expand their market reach. It's not just about the cool tech in a lab. It's about, practical integration and validation out there. It signals growing confidence in quantum annealing actually working.
It definitely looks impressive seeing that growth. But, often with these early stage tech companies, there's a bit of a lag, isn't there, between announcing a partnership and seeing it actually contribute to revenue. Do the sources give any clues on the timeline? When might these deals actually start hitting the top line? Or is it more about just getting a foothold for now?
That's a fair point. And no, the materials don't really give specific timing for revenue from these partnerships. I think it's safer to see these collaborations as more important for validating the tech and securing market position in the medium to long term. Less about immediate cash bumps, more like, laying the foundation stones for future growth, proving it works in the real world before the big money flows.
Okay, so we've got solid fundamentals, expanding reach. But how's the market actually taking all this? Because the sources seem to show this interesting split between what analysts are predicting and what the sort of technical charts might be suggesting about the stock itself. On one side, you have analysts like Cantor Fitzgerald putting average targets between, $15 and $20?
Yeah, that range.
And some sources even mention a short-term target near $19.07, like an 18% upside, and maybe even a swing target of $24, driven by Advantage 2 and the partnerships that clearly see more room to run.
Definitely an optimistic view from the analysts, yeah.
But then the technical analysis in the sources warns the stock's current rhythm might be in a weakening or adjustment phase. So, why the difference? If the fundamentals look good, why worry about these short-term market waves? Isn't that just noise?
Well, that's the million-dollar question, isn't it? It really highlights how different people look at the market. Technical analysis, it often reflects more the short-term psychology, supply and demand, which can definitely diverge from the long-term picture. The sources mention things like trap resolution. That's a technical pattern you sometimes see after a sharp fall and quick rebound. It can suggest maybe a short-term buying chance, especially around that $15.40 mark mentioned. And then there's Elliott wave theory, this idea that markets move in these kind of predictable wave patterns. From that view, after a strong run-up like D-Waves had, the third wave, you might expect a shorter-term pullback, a fourth wave correction, before maybe heading higher again. So yeah, long-term fundamentals and analysts look positive. But these technical signals, they're suggesting we could see some short-term bumps, maybe profit-taking. It's like a roller coaster, right? Even a great one has dips. So these signals are a bit of a caution flag, and how you read them really depends on your time frame and how much risk you're comfortable with. It's not just noise, it's the market processing everything.
Okay. And this kind of complex picture, this tension, seems reflected in the online community buzz too, right? The sources say there's been a big jump in mentions on places like the quantum computing subreddit, Twitter, StockTwits.
Yeah, quite significant increases.
Reddit mentions up 28%. Keywords like Advantage 2, scaling, public sector. Twitter up 54%, with sentiment mostly positive, 62% positive, only 18% negative. And StockTwits saw a 19% increase in mentions, heavily bullish at 74%.
Right.
But we're seeing positive keywords like breakthrough, expansion, partnership, but also worries about losses, dilution, competition. So what does that mixed bag really tell us?
Exactly. That mix isn't just noise either. I think it's actually a sign the conversation is getting maybe a bit more mature, more nuanced.
Yeah.
It shows that, yes, there's real excitement about the growth and the partnerships, but the market is also actively thinking about the real challenges. Things like, well, maybe quantum adoption takes longer than hoped. Or what if there's a broader economic slowdown that hits demand for these expensive cutting-edge tools?
Right. That makes sense.
It's kind of like scrolling through comments on a big tech announcement, Get the super fans, the skeptics, everyone reacting. But one positive signal in there. The short interest ratio is pretty low, below 3%. That suggests there isn't widespread extreme pessimism betting against the stock, which is, a good sign. So ultimately for you listening, evaluating D-Wave means balancing those bright growth prospects against these short-term technical cautions and the bigger market risks. Upcoming things like their Q2 earnings, probably early August, and just seeing how these partnerships progress, those will be really key things to watch.
Okay, so after diving deep into all these D-Wave sources,
Wise now and these partnerships growing,
what comes next in computing?
D-Wave Quantum, QBTS NYS Price Outlook. Hello, this is Trader Jinlog. In this video, after a talk show style discussion, we present the RHYTHMIX VIR 17.1 Rhythm Analysis Report for D-Wave Quantum. You can find the full written report on my blog. Be sure to subscribe so you can catch real-time index flows at key rhythm points during my live posts and streams. Summary: D-Wave Quantum, QBTS NYS has risen approximately 90% year-to-date, demonstrating strong positive momentum. The current share price is around $16.68. In Q1 2025, revenue reached $15 million, up 500% YoY, and operating income turned positive at $13.9 million. The company completed a $400 million ATM equity raise on July 1st, bringing total available cash to over $550 million. Analyst price targets range from an average of $15.14 to as high as $20, driven by Advantage 2 commercialization and expanding global partnerships. We recommend focusing on entry zones at 15.4 short-term, 15.7 swing, and 9.87 mid-term, aligned with rhythm and flow shifts. 5 investment opinion short-term target, $19.70 right pointing arrow, approximately 18% upside from current levels. Swing target, $24 right pointing arrow testing next resistance zone, midterm target, not specified, to be reassessed after upcoming earnings and macro developments. Chart explanation. The chart for D-Wave Quantum, QBTS NYS, shows highlighted circles at zones where short-term trend convergence meets an uptrend breakout. Entry probabilities and potential returns tend to be higher near swing and midterm bands. Always verify trend and wave progression on each chart before executing. 7. Rhythm analysis, currently in a weakening adjustment phase, expansion flow, as Bollinger Bands widen. Watch for oversold conditions and confirm a band center mean reversion attempt alongside RSI and MACD signals before committing. Financial overview. Q1 2025 revenue, $15 million, YoY plus 500%. Q1 2025 operating income, $13.9 million, turned positive cash position. Raised $400 million via ATM on July 1st. Total cash greater than $550 million. EPS consensus, -6 cents for Q2 2025, indicating narrowing losses. Next earnings, scheduled between August 6 to 11, 2025. 9. News, risks, events, Stack partnership. Accelerates quantum application adoption in Middle East. Yonsei University Alliance. Joint research and commercialization efforts in South Korea. Karasoft distribution. Expanded U.S. public sector procurement channel. Advantage 3 roadmap. Targeting 2028 launch for next-gen system. Risks, potential delays in enterprise adoption and global economic slowdown. Strategy scenarios. Short-term buy entry zone, approximately 15.4 conditions. Trap resolved at 3/3 plus rhythm flow reversal plus impact of ATM raise swing buy entry zone, approximately 15.7 conditions. Trap is greater than or equal to 2/3 plus rhythm flow reversal plus high volatility environment confirmation. Midterm buy entry zone, approximately 9.87 conditions. Trap is greater than or equal to 2/3 plus rhythm flow reversal plus consideration of longer-term macro context. 11. Elliott wave analysis. Short-term wave 3. Entered expansion in wave 3 after trap resolution swing wave 4. Expecting corrective wave 4 near swing resistance midterm wave 1. Observing initial wave 1 formation on longer time frame. Community flow. Reddit r quantum computing. Mentions plus 28% mom 4600 right pointing arrow 5900. Top keywords. Advantage 2. Scaling. Public sector Twitter. Hashtag D-Wave Quantum tweets 1200 right pointing arrow 1850. Plus 54% sentiment. 62% positive, 18% negative, 20% neutral. StockTwits mentions 3,200 right pointing arrow 3,800, plus 19% bullish bet 74%, bearish 26%. Sentiment indicators. Top positive keywords, breakthrough, expansion, partnership. Top negative keywords, losses, dilution, competition. Highlight any influencer with is greater than or equal to 5 mentions in this section. Outlook and risk summary. Institutional buying remains strong while short interest sits below 3%. Key risks include delayed enterprise uptake and a possible macroeconomic slowdown. Close monitoring of earnings results and partnership progress is essential. 14. Deep Dive Report. An upcoming deep dive will quantitatively detail institutional orders, AI adoption metrics, e.g., stack deployments, and further analysis of Von Tobel's increased holdings to inform advanced entry-exit guidance. 15. Brand disclaimer. This report is based on the VPAR rhythm analysis methodology, combining chart rhythm flows with order flow patterns to propose optimal trading points. All investment decisions are your responsibility.
Imagine a spring being compressed. Energy's building, but the immediate direction is uncertain. That's the trap phase. It means, in the immediate future, the stock's movement is uncertain, probably moving sideways in a tight, maybe frustrating range. Suggests high volatility, lack of clear direction. The trap implies it might be consolidating, catching out both short-term buyers and sellers. Makes predicting the next big move very tricky.
So caution in the short term.
Definitely. A wait-and-see approach often makes sense there. Now moving to the swing time frame. The rhythm is also contracting.
Still contracting.
Yes. But critically, the report notes that the trend is maintained. This is a subtle but really important distinction. It implies that while there's some short-term consolidation or pullback, that spring compressing the underlying broader trend for a swing trade, days to weeks, is still intact. The report even specifies a return possibility confirmed in the $17 to $18.8 range.
Ah, okay, a specific price range.
Exactly. Highly actionable. It suggests that even with the contraction, there's a strong chance the price will return to or find significant support within that specific range. For a swing trader, that's a potential entry point. Looking for a bounce or reversal to kick off the next upward leg, it's finding where the spring coils before release.
Got it. And the third time frame, medium term.
Right. Looking at the medium-term rhythm, the report sees an entry into a rhythm expansion flow, which sounds promising, right?
Expansion flow. Yeah, sounds better.
It is. This is where the spring starts to expand again, hinting at a sustained move. But it cautions about outward spread movement and emphasizes checking for full trend development. So, potential for a larger sustained upward move, maybe a new, stronger trend emerging. But the outward spread movement warning suggests that while the rhythm is expanding, the price action might be a bit erratic or volatile initially. You need confirmation that a stable, sustained trend is really developing before committing for the medium term. It's looking for the start of something big, but, cautiously, avoiding false starts.
So if I'm getting this right, it's less about just reacting to today's price and more about seeing these underlying, almost psychological patterns, feeling the market's pulse to anticipate the next big beat across different timescales.
Right.
That's a different way of looking at it than just a daily chart.
You've nailed the essence perfectly. It's understanding the market's dynamic internal state. The report even maps these rhythms to strategic opportunities for swing and medium-term entry points. Specific price levels become important because of these rhythm patterns. For instance, it clearly states a short-term target price of 25 was reached.
Okay, so it hit that target.
Right. The previous short-term upward move hit its expected peak. Now the analysis shifts. The movement after that is interpreted as a return scenario, meaning after hitting 25, the stock pulled back. So the current rhythm analysis is guiding investors on when and where to maybe reevaluate or consider getting back in. It's a dynamic framework. Markets don't move in straight lines. They breathe, they flow.
Okay. Beyond rhythm, the report uses another cornerstone of technical analysis, one that often sounds pretty esoteric. Elliott wave analysis. For those maybe unfamiliar, what's the core idea behind Elliott wave and how does this report apply it specifically to quantum biopharma?
Elliott wave theory. Yeah, it can sound a bit out there, but it was proposed by Ralph Nelson Elliott way back. The core idea is that market prices don't move randomly. They move in discernible, predictable patterns or waves based on recurring fractal structures. It's basically a grand psychological framework. It suggests collective human behavior and markets' greed and fear cycles create these recurring patterns.
Mapping the market's emotions, kind of?
Sort of, yeah. It aims to interpret crowd psychology and predict future price moves by seeing where the market is in a larger sequence of waves. The classic structure is impulse waves, usually 5 waves going with the main trend, and corrective waves, usually 3 waves going against the trend. And each wave has its own smaller waves inside it, like fractals.
Okay. So how does quantum biopharma fit into that structure right now?
In this report, the interpretation is that quantum biopharma is currently in a wave 2 correction flow.
Wave 2 correction. What does that mean practically?
Okay, so wave 1 is the initial strong impulsive move up, driven by maybe new optimism or news. Wave 2 is a corrective phase. It often retraces a good chunk of wave 1's gains. But importantly, a healthy wave 2 usually doesn't go below where wave 1 started. It's seen as a healthy pullback, consolidates gains, shakes out weaker investors, and ideally sets the stage for the next, often much stronger, leg up, Wave 3. So Wave 2 is a critical phase for savvy investors looking to get in or add to positions. It's seen as a potential buying opportunity before the next major move.
And what are the precise price implications? Does the report give us concrete numbers based on this Elliott wave analysis, something actionable?
It absolutely does. And that's why technical analysis, when applied carefully, can offer these actionable insights. The report gives clear, specific price targets for these waves. It paints a picture of potential future moves. It states the Wave 1 peak reached 25, so that initial surge hit exactly that level.
Okay, 25 was Wave 1's top.
Right. Following that, the expected Wave 2 correction range is 17 to 18.8. That's the current area to pull back we're talking about. The zone where the stock is expected to find support before the next potential move.
So 17 to 18.8, that's the correction zone.
Exactly. And here's the exciting part for bullish investors. If this Wave 2 plays out as expected, finds a solid base there, the report anticipates a potential Wave 3 target of 30 to 35.
Wow, 30 to 35. That's a significant jump from 17-18.
It is. In Elliott wave terms, Wave 3 is often the longest and strongest wave in the sequence, driven by broader market participation, growing optimism. It signifies a significant potential upward move if this scenario plays out. That's the big prize for those who position correctly during Wave 2. The analysis also suggests a collection zone formation before the Wave 3 entry.
Collection zone, meaning people accumulating shares.
Precisely. Aligns perfectly with the idea of astute investors quietly building positions during the Wave 2 correction, anticipating that big Wave 3 price increase. So, for you, the learner, understanding these technical patterns gives you a framework for anticipating moves, identifying potential entry and exit points. But it also really highlights the speculative nature of these predictions, right? These theories provide a roadmap, but markets are influenced by countless things. No single indicator guarantees anything. It raises an important question. Given the precision of these targets, based on this interpretive model, what other factors would you need to see to feel truly confident in such a forecast? It's not just lines on a chart, it's about confirming the story.
That's a great question, moving us nicely from theory to practice. The report frequently mentions a return scenario and specific re-entry considerations. What does that mean for someone looking to actually act on this info? Is it just about hitting a certain price, or is there more to it?
Yeah, you've hit on a critical distinction there, the return scenario idea. It implies that after a stock hits a previous target, like the $25 we talked about, it's pretty common for it to pull back. A correction. This pullback isn't necessarily bad news, like the rally's over. It's often a natural, healthy part of market cycles. And it offers a new opportunity for investors who missed the first move or want to add more at a better price. So the return scenario is about the stock pulling back to a point where getting back in becomes strategically viable, attractive.
So it's not just buy the dip blindly.
Absolutely not. The report specifically highlights that re-entry should be considered when the return conditions are met. That's crucial. It's not a blind re-entry. The conditions are paramount. It also notes strong return potential if supply and demand shifts are detected within the swing maintenance flow.
Supply and demand shifts.
Okay.
What does that look like?
It means you're looking for tangible, concrete evidence that buying interest is coming back, that sellers are maybe getting exhausted, that the market behavior confirms the technical signals. Like you might see selling volume decrease on down moves, buying volume pick up on up moves, or specific chart patterns signaling a reversal. It's about confirming the consolidation is truly ending and new upward momentum is genuinely building. Gives you a much higher probability of a successful re-entry, confirmation, not just prediction.
That emphasis on conditions is so important. Speaks to the discipline needed. Okay, the report then outlines distinct strategy scenarios for buying quantum biopharma, categorized by time frame. Let's unpack each one. Starting with the most immediate, the short-term buy strategy. What are the specifics and, crucially, those conditions?
Okay, short-term buy. The report identifies an entry range of 20.5 to 22.2. This is for active traders looking for quick moves. But as we just discussed, the conditions are critical, much more than just the price. The report lists them as trap resolution, stage 2 or higher, rhythm return flow, and confirmed supply and demand shift. Let's break those down.
Okay, trap resolution, getting out of that sideways phase.
Exactly. Moving definitively out of that frustrating trap phase. Stage 1 might be a small break, but stage 2 or higher means it's established a more definitive breakout, beyond just noise, confirms a real directional shift. Then rhythm return flow means that short-term rhythmic pattern, which was contracting, is now reversing and showing clear signs of expanding again. signaling renewed upward momentum.
And the supply-demand shift.
That means tangible evidence of buyers overcoming sellers, maybe increased volume on up bars, or sellers thinning out at key price levels. All these conditions together are essential for a short-term entry. Signals the immediate uncertainty is clearing, and renewed buying interest is real.
Got it. And for those looking a bit longer, more patient, the swing buy strategy, holding for days or weeks.
Exactly. The swing buy strategy targets the $17 to $18.8 range.
Ah, back to that wave 2 correction zone.
Precisely. Highly significant. Suggests this is where a pullback might find strong support, a healthy correction within a larger uptrend. The conditions here are, again, crucial. Trap resolution, stage 2, and supply and demand shift flow formation, which would then open up short-term return possibilities.
Oh.
So you're looking for a bounce after a more substantial correction, where the stock is reset and new buying interest is clearly forming to push it higher for that swing trade. A more deliberate entry after a dip, aiming for the rebound.
Okay. Finally, the most patient approach, aiming for the bigger wave. The medium-term buy strategy. What's the plan there, the entry point?
The medium-term buy strategy. This one looks for an even lower, more patient entry at $15.
$15. Okay, that's the lowest point mentioned.
Right? Very patient, potentially high reward, targeting a longer-term trend. This entry is contingent on specific powerful conditions. Early rhythm expansion, and concentrated supply and demand inflow, which could lead to trend expansion potential. This isn't just about a bounce. It's about catching the very beginning of what could be a significant, sustained upward move, that big wave 3 scenario. Trying to get in before the broader market fully recognizes the new trend, maximizing potential upside. Concentrated supply and demand inflow would mean seeing large blocks of buying, suggesting maybe institutional accumulation or a big shift in conviction. It's the most aggressive strategy in terms of anticipating a major foundational shift.
Wow, okay. So 3 distinct strategies, each with very specific conditions, not just prices.
Exactly. The distinct conditions for each strategy are key. It's not just hitting a price. It's the underlying market behavior confirming the opportunity. This level of detail really emphasizes that successful trading or investing, especially using technicals, needs more than just watching numbers. It demands a deep, nuanced understanding of market dynamics, the confluence of indicators. It raises another practical question for you, the listener. How do you actually verify these trap resolutions or supply and demand shifts in real time? It highlights these aren't set-and-forget strategies, right? You need to be watching.
Absolutely. Okay, we've dissected the company's internals, the chart predictions, but no investment exists in a vacuum, right? What does the report say about the broader outlook, the external risks that could derail even the most perfect technical setup, and that subtle dance of supply and demand that truly moves markets? Let's start with the human element, community flow. Sentiment from places like Reddit, StockTwits, Twitter. What's the vibe there? Are people optimistic? Cautious?
It's a fascinating mix, actually, which is pretty typical for a stock that's seen big moves and is now in this kind of complex corrective phase. On Reddit, the sentiment is generally described as optimistic and decentralized. The report notes insider buying is interpreted positively. That's common. Retail investors often see insider buys as a strong vote of confidence.
Makes sense. If the insiders are buying.
Right. There are also high IPO expectations for Umbers, aligning with the company's strategy and that potential big liquidity event. Keywords like QNTM, Lucid, Umbers are mentioned a lot, showing high engagement. And it's quite telling. Reddit mentions increased 1.3 times compared to institutional supply. Suggests a very active retail-based driving discussion, maybe ahead of or just differently from the big institutions.
So Reddit sounds pretty bullish overall. Driven by insider confidence, future hopes. But what about StockTwits and Twitter? Same vibe or different takes? Maybe more cautious.
On StockTwits, while there's definitely robust discussion, you see hashtag QNTM, hashtag FSD02, there's also a noticeable increase in trap mentions.
Ah, the trap phase again.
Exactly. And concern about a sharp drop at $25, directly linked to that short-term target being hit and the price pulling back. So many investors who bought near that peak might feel trapped or just waiting to get out even. This leads to many observing for re-entry, suggests a more cautious wait-and-see approach after getting potentially burned by that volatility.
Okay, so StockTwits is a bit more wary. What about Twitter?
Twitter, similar complexity. While MS drug expectations remain high for QNTM and MS drug clinical trials are still anticipated, that reflects the long-term potential of Lucid MS, the optimism around biotech breakthroughs. There's also a clear caution for short-term fluctuations.
So long-term hope, short-term caution.
Pretty much. A blend of anticipation about clinical progress, combined with a realistic awareness of the immediate price swings and the unpredictable nature of these kinds of stocks. Overall, it tells us that even within the community, opinions and risk tolerance vary widely, from strong optimism about IPOs and insider buys to real caution about price traps and short-term volatility, especially among those watching daily prices. This connection to the bigger picture shows how sentiment, especially on social platforms, can amplify technical signals or sometimes contradict them. Adds another layer. It's a powerful, sometimes irrational force.
It's clear sentiment matters, but it's not just one voice. Now, pulling back to the broader view, the overall outlook and the risks that could seriously impact quantum biopharma. What does the report highlight as the big potential opportunities and, crucially, the major pitfalls you really need to be aware of?
Okay, the overall outlook presented is, I'd say, cautiously positive, especially if that Elliott Wave 3 scenario unfolds. It anticipates strong supply and demand expected upon Wave 3 entry, meaning if the stock does enter that powerful third wave, significant buying interest large, sustained capital inflows are expected to drive the price higher. That's a bullish view based on the technicals and pipeline potential.
Cautiously positive, but the risks.
The risks. They are significant and absolutely crucial for you to consider. They include the possibility of clinical trial failure.
The big one for biotech.
The biggest, arguably. Common but devastating if it happens. Even promising drugs can fail late-stage trials for safety or efficacy reasons. That can just destroy value overnight. Another major risk, subsidiary IPO delay. That directly hits the Umber's IPO conversion momentum we mentioned. Delays tie up capital, extend that no-revenue state, kill investor enthusiasm, patience wears thin.
And the lawsuit.
And the lawsuit outcome variable. That's a huge, unpredictable unknown. That $7 price manipulation lawsuit could result in massive fines, reputational damage, legal setbacks impacting finances, and, critically, investor trust. These are external factors outside the lab that could dramatically change everything, no matter how nice the charts look. They're the potential black swans.
Those risks are definitely sobering, especially trial failure. It's always the elephant in the room. And on the actual mechanics, the buying and selling, what's the report say about supply and demand factors? Who's buying, who might be selling? How's that influencing things?
The report offers some really interesting insights there. It notes continuous insider fund inflow. As we said, generally seen as very positive. Those closest to the company believe in it.
Right. Insiders buying is usually good.
Usually. However, on the flip side, institutional buying is unconfirmed and negligible. That's significant.
Big money isn't in yet.
Doesn't seem to be. Not in a big way.
Yep.
Large, sophisticated institutional investors, mutual funds, pension funds, hedge funds, haven't committed significantly. Could mean lack of broad conviction, skepticism, or maybe they're just waiting for more certainty trial results, lawsuit resolution before deploying big capital. That absence of institutional backing can limit upside momentum and might signal caution to others.
Interesting dynamic. What else on supply demand?
Furthermore, it mentions an undisclosed short-selling ratio, meaning you don't know exactly how many people are actively betting against the stock. That can be hidden, selling pressure, create instability, and continuous spread widening. The difference between the bid price, what buyers offer, and the ask price, what sellers want, is increasing.
Richie.
It can indicate lower liquidity, harder to trade large amounts without moving the price, can increase volatility for everyone. The report also mentions an AI supply and demand estimate, which is fascinating. Suggests a weakening after late June, but recovery possible in July. A glimpse into how AI is being used to predict market flows.
AI predictions.
Yeah, adds another layer. And finally, reiterating a point from the technicals, the rhythm return status is identified as a primary buy condition, underscoring its importance in actually triggering investment decisions. Shows how technical signals merge with broader market dynamics.
So what does this all mean for you, the informed learner? We've just taken a really deep dive into quantum biopharma using this very specific, highly technical investment report as our guide. We've seen a company that, yeah, it's burning cash, but it maintains stable debt. It's pinning its hopes squarely on promising drug pipelines, LucidMS, FSD02, all while navigating this unconventional digital asset strategy and a serious looming price manipulation lawsuit. It's a complex beast, lots of moving, sometimes contradictory parts.
And we've absolutely explored the intricate, almost artistic world of technical analysis, haven't we? From rhythm, contraction, and trap phases signaling current uncertainty, to Elliott wave theory's precise predictions of a powerful wave 3 surge, maybe to $30, $35. But that's contingent on a successful Wave 2 correction settling between, what was it, $17 and $18.8. We've seen how these technical signals underpin very specific short-term, swing, and medium-term investment strategies, each with its own precise conditions for entry, emphasizing that timing and confirmation are paramount. It's way beyond just a price point.
And perhaps most importantly, we've seen how external factors layer onto this complex picture, from the diverse, often contradictory sentiment bubbling up on Reddit, Twitter, StockTwits, to those critical, potentially catastrophic risks like clinical trial failure, IPO delays, pending lawsuits. It's a perfect, almost textbook example of how you need multiple lenses, financial, technical, qualitative, to truly understand an investment opportunity. It stretches far beyond just a simple balance sheet.
Which raises a truly important question for you to consider as you process all this. In an information-rich world where incredibly detailed analyses like this are out there, how do you personally balance the precision of technical indicators and hard financial data with the often unpredictable nature of external events and shifting, sometimes irrational, market sentiment? What stands out to you as the most compelling factor here? Or maybe the greatest unknown? Is it the huge promise of a successful drug pipeline? Is it the stark warning of that ongoing lawsuit? Or is it the intriguing precision of those technical targets? Something to think about.
A profound question to ponder as you reflect on quantum biopharma and its place in your own investment thinking. Thank you so much for joining us for this deep dive into the rhythms and risks of high-stakes biotech investment. We hope it's given you a shortcut to being well-informed and maybe sparked some new curiosities for your own exploration.
Upside risk increases beyond $190. Keycap 8 advanced metrics. Institutional flow. 3-week net buying short interest. 2.4% below average. Community sentiment. Rising AI signal model. 71% probability of upward continuation. Checkmark brand disclaimer. This report is generated based on the proprietary VPAR rhythm analysis methodology.
Okay, let's unpack this. Imagine for a moment that the sprawling, often chaotic financial markets aren't just random noise, but that beneath the surface there's a hidden pulse, the discernible rhythm guiding asset prices.
Interesting way to put it.
Today, we're taking a deep dive into exactly that concept, focusing on a truly unique approach to understanding stock movements. We're zeroing in on Royal Gold, ticker RGLD, a fascinating company in the precious metal space.
Right. RGLD.
But honestly, this isn't just about one stock. Our real mission here is to explore a proprietary analytical method that claims to identify these underlying market rhythms and, well, it offers some truly surprising insights into what might be coming next for a company like RGLD.
Yeah, this methodology, it's quite something.
Our source material for this deep dive is a detailed market strategy report. It's packed with multi-time frame analysis and this rather fascinating methodology we mentioned.
Very detailed.
And our goal, well, it's to extract the most important nuggets of knowledge and insight from it, making even these dense market signals clear, compelling, and hopefully actionable for you, our curious listener, as you navigate complex information.
Making sense of the noise, essentially.
Exactly. We want to understand how this VAR rhythm analysis methodology, as they call it, spots opportunities that maybe traditional analysis might miss. What it tells us specifically about RGLD's current trajectory and what it might mean for anyone looking to gain a deeper, almost intuitive understanding of market dynamics. So let's try and tune into the market's hidden beat.
Let's do it.
So right out of the gate, our source material introduces us to something that sounds quite technical. It's called Rhythm Recovery Phase Trap Breakdown Flow for Royal Gold.
Yeah, that's a mouthful.
It really is a mouthful, I know. And it probably feels a bit like trying to read sheet music without knowing the notes.
Rarely daunting at first glance.
But trust me, this is where it gets really interesting because it describes the foundational idea behind what's called the VAR rhythm analysis methodology.
Okay.
In essence, this method doesn't just look at, standard price charts. It actively searches for these underlying, almost biological rhythms in how the market behaves.
Like a heartbeat.
Exactly. It's like trying to find the unique heartbeat, the consistent cadence of a stock amidst all the daily fluctuations and noise.
It's a powerful concept because at its core, what's fascinating here is how the report synthesizes multiple sort of disparate signals across various time frames. It's almost like conducting an orchestra.
An orchestra. I like that analogy.
Yeah, it's not just looking at one chart in isolation, Instead, it's seeing a synchronized symphony of data signals on monthly, weekly, daily, and even the very granular 120-minute charts for Royal Gold.
Wow, all of them.
all converging and pointing towards a specific high-probability pattern. This multi-timeframe alignment, that's really what gives the analysis its predictive power.
Okay, so it's the combination that matters.
Precisely. Now, to truly appreciate the symphony, let's break down some of the core terms the report uses, because they're fundamental to understanding this methodology.
Good idea. Let's get into that jargon.
Okay, first up is trap breakdown. Think of the market as like a bustling bazaar. Sometimes a seller might cleverly drop something, making it look like a bigger mess than it is, maybe luring buyers in, only for the price to suddenly move in the opposite direction. In market analysis, a trap is essentially a deceptive move, a false signal that lures a large number of traders, often those chasing what looks like a clear trend, into taking the wrong side of a trade.
So they get caught.
They get trapped in a losing position, exactly. Now, when a trap breakdown occurs, it means that this false deceptive move has definitively failed. The price then reverses sharply, often with significant momentum, moving against the direction of the original trap. This is crucial because it signifies that the market has effectively shaken out the weaker hands, those who fell for the initial deceptive signal. It sort of clears the path, if you will, for the genuine underlying trend to emerge with renewed force.
So it acts as a precursor.
A powerful precursor to a new, often sustained move. It's the market basically saying, psych, that wasn't the real direction.
Right, clearing out the noise. Makes sense.
Then we have MACD convergence. MACD stands for Moving Average Convergence Divergence. It's one of the most widely used momentum indicators in technical analysis.
Yeah, I've heard of MACD.
Right. At a basic level, MACD visually shows you the relationship between two moving averages of a stock's price. It's often represented by two lines and a histogram. Think of it like this. If you're driving a car, MACD doesn't just tell you your current speed. It tells you if you're accelerating or decelerating, and maybe if you're about to change gears. When the MACD lines are converging, it means they are drawing closer together.
Okay, coming together.
Exactly. This often signals that the momentum in the current trend is starting to weaken, and a change in direction or a potential reversal is on the horizon. It's like a spring coiling tighter and tighter, building up potential energy just before it unleashes a new push in a different direction.
So it's a warning sign, potentially.
A key signal that a shift might be imminent, yeah.
Okay.
And finally, central to this unique proprietary method is rhythm band recovery. Imagine a stock, much like a dancer, has a natural, inherent rhythm to its movement.
A rhythm.
The rhythm band is a key component of the VAR rhythm analysis that identifies this established channel or cycle within which a stock's price typically moves, like a natural sine wave.
Like boundaries.
Sort of, yeah. When the price deviates from this band, maybe it swings too far up or too far down, it's considered an anomaly, a temporary imbalance. So its recovery indicates that the stock is stabilizing and snapping back.
Snapping back, right.
Returning within its expected natural cyclical pattern after such a deviation. It's very much like a pendulum that swung too wide, maybe pushed by some fleeting external force, but is now finding its way back to its natural oscillation, its equilibrium point.
Okay, finding its balance.
This rhythm band recovery suggests a return to a more stable, predictable movement within its inherent market rhythm. And critically, it often precedes a renewed significant move in the direction of that rhythm. It's the stock finding its balance and getting ready to move with purpose.
Got it. So trap breakdown clears the noise, MACD convergence signals a change, and rhythm band recovery means it's back on its natural path.
You nailed it. This powerful combination, the trap breakdown, the MACD convergence, and the rhythm band recovery, strongly suggests what the report calls a pre-expansion accumulation zone.
Pre-expansion accumulation zone. Okay.
This isn't just random market noise or some coincidence. It's a specific and identifiable pattern that indicates a quiet but significant buildup of buying interest, often by more informed investors, before a significant upward move.
Like the calm before the storm.
Exactly, but a bullish storm. A period where smart money might be quietly accumulating shares because they see the underlying rhythm aligning for an upward expansion. The report highlights a box consolidation currently in play, offering strategic entry zones.
Ah, the box consolidation. That sounds important for timing.
absolutely crucial for anyone considering Royal Gold or, applying this method to any stock. It means the price is currently moving sideways within a defined, relatively tight range. And for this analysis, that very consolidation presents a calculated window,
A window of opportunity.
a strategic entry point before the anticipated next leg up. It's the stock pausing to gather strength, a critical moment for strategic positioning.
That's a fantastic breakdown. Really paints a clear picture of how these technical elements aren't just isolated data points, but are telling a cohesive story.
Right, they connect.
So what does all this mean for us, the listeners, when we look at Royal Gold? It means there's a strong, technically driven picture being painted here. It's not just a hunch or some speculative guess. It's a methodical identification of very specific, reinforcing market behaviors.
Based on their methodology, yes.
But a stock's rhythm isn't just one note, is it? Like you said, it's an orchestra. How do these intricate signals look across these different time frames, from the very long-term monthly view down to the daily, weekly, and even that very short-term 120-minute chart? How does this symphony truly play out across these varying durations?
You're absolutely right. A true rhythm isn't just a single beat, but a recurring pattern across different speeds, different tempos.
Okay.
So if we connect this to the bigger picture, the report gives us a remarkably detailed look at how these signals manifest and synchronize across different durations. This multi-time frame approach is fundamental to the VAR rhythm analysis methodology.
Why is that so fundamental?
Because it allows us to both pinpoint precise, immediate timing opportunities and simultaneously maintain a comprehensive understanding of the overarching long-term trend. It's like having different lenses with a microscope for the short-term action and a telescope for the grand trajectory.
Microscope and telescope. Got it.
Yeah.
So where do we start? Short term.
Let's start with the most immediate pulse, the 120-minute chart insights. Here, the report notes that MACD shows tight convergence. On such a granular time frame, this isn't just a casual observation, it's a powerful signal suggesting a very immediate and intense buildup of momentum.
Like that coiled spring you mentioned.
Exactly. Think of it as a tightly coiled spring ready to release its energy.
Right.
This indicates that buying and selling pressures are reaching a critical point of balance, primed for a decisive breakout move very soon.
Okay, very soon.
Simultaneously, the rhythm center line is being reclaimed. This is a swift sign of short-term stability within the stock's established rhythm, almost like a rubber band snapping back to its original shape after being stretched.
Back to normal, quickly.
It indicates that any recent short-lived deviations have been corrected, and the price is quickly snapping back to its natural expected short-term path. Furthermore, the report says the recent breakdown has stabilized with a return to rhythm range structure.
Meaning the dip was temporary.
Clearly tells us that any recent dip or downturn was temporary and corrective, not indicative of a larger problem, and the price has rebounded back into its expected operational range. This raises an important question for immediate action. If no new lows are set from this point, then expansion may follow. This gives us a very clear, actionable, short-term condition to watch, a critical indicator for imminent price action for those looking for rapid opportunities.
Okay, so watch for it holding that recent low on the short-term chart.
Precisely. Now let's zoom out a bit to the daily chart observations. This offers a broader perspective, but with reinforcing signals that add weight to the short-term view.
So daily should confirm the 120-minute.
Ideally, yes, and add more context. The report notes price consolidating below the swing trend line. This indicates a pause in the immediate upward movement, a moment where the market is catching its breath after a prior surge.
A pause. Okay. Is that bad?
Not necessarily. Quite the opposite, potentially. Crucially, the report mentions Bollinger Bands narrowing. This suggests that volatility is decreasing significantly.
Bollinger Bands. Remind me.
They essentially measure a stock's price range around a moving average. Think of them as volatility bands. When these bands squeeze together or narrow, it's like that spring being compressed again. It often precedes a sharp, decisive move in either direction once the pressure is released.
So low volatility now means high volatility soon.
Often, yes. The narrowing here indicates an impending surge in volatility, often leading to a directional breakout. And the report says the MACD is ready for reversal on the daily too, which strongly reinforces the idea of an impending shift in momentum from this consolidation phase, confirming the coiling action we saw on the 120-minute.
Okay, so multiple signs pointing to a potential move soon.
And what's particularly significant here is that this box range compression is aligning with typical rhythm recovery zones. This tells us that this period of consolidation isn't random. It's happening precisely in an area where the rhythm analysis methodology predicts and expects recovery to occur.
So it's consolidating where it's supposed to.
Exactly, making it a high probability zone for a bounce and a strong foundation for the next upward leg, according to this analysis.
Interesting. What about the weekly chart? Even broader view.
Stepping back even further, yes, the weekly chart perspectives offer an even broader view, truly indicating the strength of the underlying trend and offering greater conviction.
Okay, conviction. I like that.
The report highlights a pullback from expansion highs holding just above rhythm support. This is vital. It suggests that while the price has retraced from its recent peaks, which is a healthy market correction, by the way,
Right. Stocks don't go straight up.
the larger trend is still decisively upward. The pullback is merely a natural ebb to a key support level identified by the rhythm analysis, rather than a reversal of the overall bullish trend. It's like the stock touching down to refuel before its next ascent.
Refueling, okay.
And here we again see a converging Mansi-D and band compression signal. But the fact that this confluence of signals appears on a weekly time frame points to a much more robust and longer-lasting possible base formation.
A base on the weekly chart. That sounds significant.
It implies significant accumulation over a longer period, acting as a very strong foundation for a sustained upward move rather than just a fleeting bounce. It signals deep underlying strength.
Wow. Okay, so short term, daily, weekly, they all seem to be lining up. What about the really big picture, the monthly?
And finally, yes, let's look at the monthly chart, the big picture. This chart provides the macro view of Royal Gold's rhythm, the grand sweep of its movement over years.
The long game.
Exactly. It shows that rhythm lines remain in wideband, but price is regaining its footing on the central axes. This indicates the stock is well within its long-term established rhythm, comfortably operating within its natural cyclical boundaries. Any recent dips have merely been a return to the center of that long-term trend, a return to equilibrium after a wider swing.
So even the dips are part of the long-term rhythm.
According to this analysis, yes. The core insight here is truly profound. A momentum reset appears complete, setting up for next breakout phase.
Momentum reset.
Think of it like a massive pendulum. It swings wide, maybe reaches an extreme in one direction, but eventually settles back towards the center or its equilibrium point before gathering momentum and swinging strongly in a new, often opposite direction.
Okay.
The monthly chart shows this comprehensive resetting of the pendulum for Royal Gold, positioning it for its next significant, sustained, long-term upward swing. It's the ultimate confirmation in this view that the longer-term forces are aligning.
Wow, that truly is a symphony. You weren't kidding. This comprehensive, multi-time frame analysis is what really makes this deep dive unique, helping us understand the granular, immediate details while always keeping the bigger overarching picture clearly in view.
It's about seeing the forest and the trees.
Exactly. It's like watching a high-resolution film of the market in slow motion. The report also references VPR chart notes. You mentioned those earlier. It's fascinating how they reinforce these observations so beautifully.
Yeah, the VPR notes summarize it well.
They highlight the universal presence of trap breakdown and subsequent rhythm recovery attempts across all charts. So that pattern shaking out the weak hands, returning to the path, isn't isolated. It's a recurring theme everywhere.
Across all time scales they looked at, yes.
We also see MACD signal line convergence, specifically on the lower frames, like the 120-minute, confirming that immediate momentum is indeed building, that spring is coiling tight.
Right, the immediate trigger.
The Bollinger Bands indicate compression, signaling that a period of high volatility and potential expansion is ahead, just as you described.
That squeeze.
The calm before the potential storm.
And crucially, the report notes that price is stabilizing near rhythm support zones, which strongly signals that a well-defined entry timing window is forming for those looking to position themselves strategically.
That's the actionable part, the where and when.
Okay, so we've thoroughly explored the technical rhythm. We understand how this multi-time frame analysis paints a compelling picture of Royal Gold, almost predicting its dance moves, you could say. Now, this isn't just about recognizing patterns for patterns' sake. Let's talk about what all this means for potential investment strategies, according to the report's clear investment opinion and its strategic playbook. This is where the theoretical analysis truly gets practical, offering actionable insights for you, the listener. Absolutely. This raises an important question. what are the potential upside scenarios this sophisticated analysis points to? And maybe more importantly, how confident is the methodology in predicting those outcomes? Because that's where the rubber meets the road, isn't it?
Exactly. Targets and probabilities.
The report provides clear, tiered price targets, and crucially, it assigns associated probabilities to each. This is incredibly useful for understanding the conviction behind the forecast, giving you a sense of both potential reward and the likelihood of achieving it. It doesn't just give you a number, it gives you a calculated probability.
Okay, so what are these targets?
All right, for the immediate term, there's a 2-week price target of $189.60 with a very high 72% probability.
72%? That's quite high conviction for 2 weeks out.
It indicates a strong, high conviction immediate signal, suggesting a high likelihood of Royal Gold reaching this level quickly based on the short-term rhythm recovery and mass CD convergence we discussed.
Okay. What about further out?
Looking a bit further out, the 2-month price target is $199.65 with a 66% probability.
Still high, but a bit lower probability. Makes sense.
While still quite high, the slightly decreased probability naturally reflects the inherent uncertainty that increases with the longer time horizon. The further out you try to predict, the more variables can intervene.
Sure, more things can happen in 2 months.
Exactly. And for the long-term price target, it's $214.10 with a 58% probability.
58%. Okay. Still better than a coin toss, but acknowledging more uncertainty.
This tiered approach allows you, the listener, to consider different time horizons for your interest. Whether you're looking for a relatively quick swing trade or a more sustained, longer-term position, the higher probabilities for shorter terms suggest a stronger immediate signal and more confidence in the initial move. While the decreasing probability for longer terms is simply a realistic acknowledgement of inherent market unpredictability over extended periods.
Got it. So probabilities help gauge the confidence at different time scales. What about getting in? Does it talk about entry points?
Oh, yes. The report is very explicit about the precise entry conditions it identifies. It states that entry conditions align with rhythm recovery, MCD convergence, and trap breakdown across multiple timeframes.
The whole trifecta we discussed.
Exactly. It's not just one signal flashing green, it's the powerful confluence of all these critical technical indicators, precisely synchronized across various charts. This alignment, the report argues, forms a strong base for swing to midterm positioning.
Swing to midterm, meaning not just a quick flip.
Right. This means it's not just an opportunity for a quick scalp or an intraday trade. Instead, this analysis suggests a compelling opportunity with the potential for a sustained, meaningful price move over weeks to months, rather than just hours or days.
So it has legs, potentially.
That's the idea. It's about getting in during this identified accumulation zone, when the smart money might be quietly building positions just before the expected expansion phase truly kicks in. It's about catching the wave early.
Fascinating. So this isn't just theory or vague predictions. The report gives us concrete strategy scenarios, a veritable playbook, as you called it. It outlines specific, actionable entry zones, each complete with precise conditions, target price ranges, and even expected durations for the consolidation before the anticipated move. Let's look at how someone might actually use this in a real-world scenario to make decisions. It's about transforming analysis into action.
Precisely. The report meticulously outlines 3 distinct entry zones. Each one is thoughtfully tailored to a different time horizon and risk tolerance. This provides a practical, adaptable roadmap for potential engagement based directly on the deep insights from the VAR rhythm analysis.
Like different paths up the mountain?
Kind of, yeah. Like choosing the right gear for the terrain you're about to tackle.
Okay, what's the first zone?
First, we have the short-term entry zone. This is designed for those who are looking for a relatively quick move, perhaps capitalizing on an immediate bounce, and who are comfortable relying heavily on very immediate technical signals.
For the nimble trader.
You could say that. The primary condition for this entry is trap resolution confirmed plus MACD convergence. This means that initial deceptive false move has been definitively negated and reversed, and short-term momentum via MACD is clearly building.
Okay.
The recommended price range for this entry is quite tight, $176 and $279.80.
Very specific range.
And the expected consolidation duration within this specific zone is remarkably short, 5 to 9 trading days, indicating an anticipated rapid resolution.
Quick turnaround expected.
The rationale behind this precise timing is a confirmed rhythm centerline reclaim on the 120-minute chart, that very immediate and strong signal we talked about, the stock snapping back into its short-term rhythm.
Right, the 120-minute signal.
And the report suggests a possible partial exit at the 2-week target of $189.06, indicating a short-term profit-taking opportunity. So this entry is ideal for an agile trader who is watching the market closely and wants to capitalize on a rapid, technically driven bounce, aiming for a swift return.
Okay, clear. What's the next zone? A bit longer term.
Next, we move to the swing entry zone. This offers a bit more room for the move to develop and leverages a stronger, more robust weekly signal. It's for those seeking a medium-term play rather than just a quick scalp.
Okay, holding for maybe weeks instead of days.
Potentially. The condition here is rhythm reclaim on the weekly chart. This signifies a more substantial and confirmed return of the stock to its broader cyclical pattern after a deviation, providing higher conviction than just the 120-minute signal.
Based on that stronger weekly chart signal.
Exactly. The suggested price range is slightly lower and broader, $170 to $176.20. This allows for a potentially deeper entry during a minor pullback within the broader trend.
A wider net, potentially better entry price.
Possibly. The expected duration for the move to play out from this entry is 8 to 14 trading days, indicating a sustained move is anticipated. The compelling rationale here is a support zone overlap with historical rhythm reaction levels, meaning this specific price area has a historical track record within the VAR rhythm framework of seeing strong buying interest and subsequent recovery. History repeating itself, potentially.
So it bounced from here before in a similar setup.
That's the suggestion. The linked target is the 2-month target of $199.65, which the report says enables swing positioning. This suggests that this entry provides a solid, more patient foundation for capturing a significant medium-term swing higher, building on the weekly rhythm confirmation.
Makes sense. And the third zone, the longest-term one.
Finally, for those with a longer time horizon, maybe a higher conviction, and perhaps more patience, there's the midterm entry zone. This strategy is deeply grounded in the strongest, longest-term rhythm signals identified in the entire analysis.
Based on the monthly chart?
Primarily, yes. The condition for this entry is monthly rhythm center line support confirmed. This is a powerful macro signal that the stock is confirming its long-term cyclical bottom and is truly ready for a sustained multi-month expansion, according to the analysis.
Okay, the big picture confirmation.
Right. The price range for this entry is the lowest and broadest, $160 to $168, presumably catching it during a more significant but still healthy consolidation within the overall rhythm.
So buying a bigger dip, potentially.
If it gets there, yes. The expected duration for the move to materialize from this entry is 12 to 20 trading days, indicating a longer holding period to capture the full scope of the rhythm's expansion.
And the rationale?
The rationale is highly compelling. Historical recovery repeats from the same rhythm zone, meaning the VAR rhythm methodology has observed this exact pattern leading to powerful, sustained upward moves on prior occasions from this very area.
Wow, so it's a repeating long-term pattern.
That's the claim. The linked target is the long-term expansion scenario toward $214.10, indicating that this entry is strategically positioned for the most substantial upside potential identified by the analysis, allowing for patient investors to capture the maximum benefit from the stock's inherent rhythm.
That's incredibly detailed and frankly quite empowering to see how granular this analysis can get in terms of actual strategy. You've got short, medium, long-term options let out.
A full playbook, as you said.
Now, it's easy to get lost in the technical charts, right? The squiggly lines, the complex indicators. But for a company like Royal Gold, which operates in the real economy, the report also gives us crucial context beyond just the technicals. Its fundamental financial health and the broader news environment.
That's critical context.
So what does this all mean for RGLD? Beyond the rhythm, does the company itself have the underlying strength to support this bullish technical outlook? Or is it just, a beautiful but fragile pattern on a chart?
That's an excellent point, and it really raises an important question. Is this just a speculative technical play, or does the underlying company possess the fundamental strength to truly support the technical outlook? This is where the report adds a crucial layer of validation.
The fundamentals.
Exactly. The financial data it provides paints a very robust picture, adding a strong fundamental underpinning to the technical rhythm recovery we've been discussing. It's about ensuring the company's financial heartbeat is strong and steady.
Okay, let's hear it. How strong is it?
Let's delve into the key financial metrics detailed in the report, because they are genuinely impressive, especially for a company in the mining and resource sector, or related to it.
Okay.
Royal Gold's quarterly revenue stands at $193.4 million. Out of that, they reported a remarkable net profit of $113.5 million.
Wow, over half the revenue is profit.
Now, what truly stands out here is that this translates to an astonishing net margin of 52.6%.
52.6%, that's huge.
To give you some context, achieving profit margins above 50% is incredibly rare across most industries, let alone in resource extraction, where costs can be highly variable. This figure indicates exceptional cost control, highly efficient operations, and a very lucrative business model.
How do they do that? Isn't mining expensive?
While unlike traditional miners who bear all the operational costs and risks, Royal Gold operates primarily on a streaming and royalty model.
Ah, the royalty model, right.
This means they provide upfront financing to mining companies in exchange for the right to purchase a percentage of future production at a fixed low cost or receive a percentage of the revenue from their mines. This model significantly de-risks their business compared to operating miners, provides those high margins, and generates very predictable cash flows.
Less risk, high margins.
Yeah.
Sounds like a good model.
It can be very effective. Beyond profitability, the company also pays a consistent quarterly dividend of 45 cents, approximately a 1.0% yield. In today's market, a consistent dividend from a financially sound company that also shows strong growth is a significant positive for investors seeking both capital appreciation and income.
Dividend plus growth potential. Nice combo.
And perhaps most importantly for long-term stability and resilience, the report notes that Royal Gold is debt-free.
Debt-free? Seriously?
Right.
In this sector?
It's an exceptionally rare and highly desirable financial position for any company, especially one tied to commodity cycles. It eliminates a major source of financial risk that many companies face, providing immense flexibility.
Huge advantage.
Coupled with this, they demonstrate strong free cash flow generation, meaning they consistently generate significantly more cash than they need to run their operations and pay dividends. This surplus cash can then be used for more dividends, share buybacks, or future growth opportunities without having to borrow.
So they're making money hand over fist and have no debt.
Pretty much sums it up. The report explicitly states that this is a rare mix of consistent profitability, dividend growth, and financial resilience. This financial strength truly provides a solid, almost unshakable fundamental underpinning for the technical rhythm recovery we've been discussing.
Okay, that definitely adds weight.
It suggests that the technical patterns identified by the VAR rhythm analysis aren't just wishful thinking. They are powerfully supported by a fundamentally sound, well-managed business that has the financial muscle to not only weather potential storms, but also to execute on its growth potential. It's the sturdy ground beneath the dancing feet, so to speak.
The sturdy ground beneath the dancing feet. I like that. That's a powerful validation, truly. It's one thing to see a pattern. It's another to know the underlying company is robust enough to follow through. But what about all the external noise? You know, geopolitical events, shifts in market sentiment, broader economic tremors? How does the report factor these external influences into its overall assessment for Royal Gold? No company operates in a vacuum after all, and gold in particular is often seen as sensitive to global events.
Indeed, no company exists in isolation, and this is where the report's nuanced perspective really shines. If we connect this to the bigger picture, the report is very pragmatic in acknowledging external factors that could influence gold prices and, by extension, Royal Gold, given its business model.
Okay.
However, it doesn't just list these factors. It interprets them within the context of the stock's intrinsic rhythm, providing a unique lens.
Interprets them.
How so?
Well, the report specifically mentions geopolitical volatility, citing Trump's 2-week deadline on Iran as a recent example. Such events could, in theory, send shockwaves through global markets and typically drive demand for safe haven assets like gold.
Right. Usually gold goes up on that kind of news. Usually. However, what's particularly insightful is how the report interprets the market's reaction to this specific event. Markets interpreted the move as delayed military action.
Ah, delayed, not immediate conflict.
Exactly. This suggests that the immediate panic or the expectation of an escalating full-blown conflict was somewhat muted or even seen as a temporary reprieve. This likely led to a less dramatic initial impact on gold prices than a direct confrontation might have caused. This nuanced interpretation is key to understanding why the report doesn't see it as a fundamental threat to Royal Gold's rhythm.
Okay, so context matters. not just the headline.
Absolutely. There's also mention of easing gold demand concerns and a minor gold price dip driven by short-term profit-taking. For those of you who follow gold, you know its price can fluctuate significantly.
Oh, yeah.
This tells us that any recent dips in the price of gold itself are largely seen as temporary corrections, primarily due to traders cashing in on recent gains after a run-up, rather than a fundamental shift in global gold demand or a long-term bearish outlook for the metal itself.
So just profit-taking, not a change in the trend for gold.
That's the interpretation here. This distinction is crucial because Royal Gold's revenue and performance are intrinsically linked to the price of gold. If the underlying commodity is only experiencing minor temporary pullbacks due to profit-taking, it bodes very well for the company's revenue streams and profit margins moving forward, supporting the bullish outlook.
Right, because their model depends on that gold price staying relatively strong.
Precisely. And the report's conclusion on macro risk is a powerful takeaway and truly critical for understanding its overall investment thesis. It states that macro risk still exists, but serves as a timing cue more than a trend reversal.
Okay, break that down. A timing cue, not a trend reversal.
This is a profound insight. It means that while external events, geopolitical flare-ups, economic news might indeed create short-term volatility, perhaps causing minor price fluctuations or offering more attractive lower entry points, they are not expected to derail the overall bullish rhythm identified for Royal Gold.
So the rhythm is stronger than the noise.
That's the thesis. Instead, these macro events are seen as valuable opportunities for discerning traders and investors to time their entries more strategically, perhaps getting in at a slightly better price point during a temporary dip caused by the noise, rather than signals to abandon the fundamental and technical outlook altogether.
So use the volatility generated by news as an entry opportunity if you believe the rhythm holds.
That's exactly the implication. It emphasizes the remarkable resilience, according to this analysis, of the identified rhythm against broader market noise, positioning these external factors as opportunities to fine-tune entry, not to abandon the overall thesis.
Okay, that's a really interesting perspective on risk. So tying all these incredibly diverse threads together, the intricate VAR rhythm analysis, Royal Gold's demonstrably robust financial strength, and this nuanced interpretation of the external environment. What's the overall forecast for Royal Gold according to this deep dive? For someone watching this stock, what's the bottom line, the ultimate summation of all these insights?
You've encapsulated it perfectly. What's truly compelling here is how the report synthesizes the convergence of all these signals into a clear, concise, and high-conviction outlook. The core forecast, the very heartbeat of the entire analysis, is that converging MACD plus rhythm recovery equals multi-time frame setup for expansion.
That's the formula.
That's the core takeaway equation, yes. It's the culmination of everything we've meticulously discussed. The trap breakdown having cleared the path, the MACD signaling that coiled spring, and the price having successfully returned to its natural rhythm band. This powerful alignment across all relevant timeframes sets the stage for a significant upward move. It's the market, according to this analysis, taking a deep breath before a big leap.
A big leap. Okay. Are there specific levels to watch for confirmation?
Yes. The report emphasizes key thresholds that act as critical confirmation or alert levels for investors. It explicitly states that holding above $176 maintains bullish structure.
$176. That's a key support line then.
It sets a critical support level for you, the investor, to watch very closely. As long as Royal Gold's price remains above this specific point, the bullish outlook derived from the VAR rhythm analysis remains firmly intact. It provides a clear line in the sand.
And if it breaks below $176?
Well, should the price fall decisively below that level, it would, of course, prompt a necessary reevaluation of the bullish thesis presented here.
Makes sense. What about on the upside?
Furthermore, the report notes that upside risk increases beyond $190, indicating a significant breakout point.
Upside risk increases. You mean upside potential?
Ah, good catch. Yes, essentially upside potential, or perhaps the probability of a faster move higher, increases. What this means is that once the stock not only reaches but surpasses this $190 level, the probability of further rapid price expansion dramatically increases, according to the report.
So $190 is like an accelerator pedal.
It suggests a clear signal for accelerated momentum and significantly reduced resistance to higher prices. This gives a very clear roadmap for what to expect and, crucially, what price points to watch for confirmation or potential shifts in the outlook.
That's a remarkably precise forecast, providing not just a direction, but also key milestones to watch along the way. Very useful. And beyond this core analysis and forecast, the report provides some additional, what it calls advanced metrics. These aren't necessarily core to the rhythm analysis itself, but they offer like extra layers of confirmation, almost independent checks that add even more confidence to this positive outlook for Royal Gold.
That's a good way to think about it.
It's like getting a second, third, and fourth opinion, and they all seem to be aligning perfectly.
Exactly. These advanced metrics provide external validation, almost like independent checks from different analytical perspectives, that strongly reinforce the technical rhythm analysis and fundamental strength we've already explored. They add another layer of objective confidence to the identified rhythm and potential expansion.
Okay, what are these advanced metrics?
All right, first, on institutional flow, the report mentions 3-week net buying from institutional players.
Institutional buying, the big money.
This is incredibly significant because large institutional money flows, we're talking hedge funds, mutual funds, large pension funds, can often precede major price movements in the market. They have extensive research capabilities and significant capital.
Right, the smart money.
Their sustained net buying, especially over a period of weeks, suggests they are quietly accumulating shares because their own rigorous research, perhaps totally independent of this rhythm analysis, has also indicated a compelling opportunity. This provides a powerful tailwind for the stock price, signaling that big players believe in this underlying story.
Like seeing the big ships moving into position before the fleet sails.
Exactly. It's a strong positive sign. Next, we look at short interest. The report notes this as 2.4% below average.
Short interest as people betting against the stock, right?
Precisely. Short interest represents the total number of shares sold short by investors hoping the price will fall, but who haven't yet covered or closed their positions. When short interest is below average, as it is here, it indicates that fewer traders are betting against the stock.
And why is that good?
It's a positive signal for two main reasons. Firstly, it reduces potential selling pressure that could come from short covering later. If the price rises, you don't have as many shorts needing to buy back shares. Secondly, it simply means there's less bearish sentiment, less skepticism, and fewer positions that might create overhead supply and resistance to upward moves.
So fewer people fighting the potential uptrend.
Essentially, yes. Lower short interest means less skepticism and less potential selling pressure. The report also highlights community sentiment as rising.
Community sentiment, like retail investors.
This refers to the broader retail interest and confidence in the stock, often observed through trends on social media platforms, online investor forums, general investor chatter. While it's not a standalone predictive indicator on its own, rising community sentiment can absolutely fuel demand and create a powerful self-reinforcing buying pattern as more individual investors become interested in and confident about the stock's prospects. It represents collective enthusiasm and can add to buying pressure.
The power of the crowd sometimes.
It can be a factor, and perhaps most intriguing and a testament to the modern analytical tools available in finance today is the AI signal model.
Ooh, AI. What does the AI say?
The report states that this model, leveraging advanced algorithms, shows a 71% probability of upward continuation.
71% from the AI model, too. That aligns with the other probabilities.
It's a powerful technological validation of the human-driven rhythm analysis we've been discussing. It means that an artificial intelligence, likely trained on vast amounts of historical market data and complex patterns, has independently corroborated the bullish outlook identified by the VAR rhythm methodology.
Wow, so the machine agrees with the human analysis.
It adds another layer of objective, data-driven confidence to the forecast. This confluence of traditional, sophisticated technical analysis, robust fundamental strength, positive market sentiment from institutions and the community, and cutting-edge AI validation, well, it creates a very compelling and multifaceted picture for Royal Gold.
A truly holistic view, like you said.
Yeah.
We've taken a truly comprehensive deep dive today into Royal Gold, exploring how this unique VAR rhythm analysis methodology, this idea of finding the market's hidden pulse, combined with Royal Gold's robust financial health and a nuanced understanding of the broader macro context, can paint such an incredibly detailed and, frankly, surprisingly precise picture of a stock's potential trajectory.
It's a fascinating synthesis of different approaches.
It really is. We've seen how Royal Gold is showing synchronized signals across multiple time frames, monthly, weekly, daily, even the 120-minute charts, all converging and suggesting it's in that pre-expansion accumulation zone, poised, it seems, for its next leg up, according to this source.
The setup looks quite defined in the report.
It's a powerful reminder, I think, that sometimes the most profound insights come not from simply reacting to daily headlines, but from looking beyond the surface, recognizing these underlying repeatable patterns, and diligently synthesizing information from multiple angles, just as this proprietary report has done for us.
Digging deeper.
It's about listening to the quiet, persistent rhythm beneath the noise.
Well said. And this deep dive into Royal Gold's rhythm recovery truly highlights a compelling idea that markets, despite their apparent chaos and unpredictability, often move to discernible patterns and underlying rhythms that, once identified, can offer significant clarity. This raises an important question, I think, for all of us, for you listening. How often do we overlook these subtle repeating rhythms in other areas of our lives simply because we aren't equipped with the right tools or perspectives to perceive them?
That's a really interesting thought. Rhythms beyond the market.
Think about the cycles in business, the ebb and flow of projects, maybe even the patterns in personal productivity or creativity. Consider how applying a structured, multi-layered analytical approach, much like the VAR rhythm analysis methodology we've explored today, might unlock unexpected insights not just in finance, but in any complex system you encounter.
Applying this kind of thinking elsewhere.
It might allow you to anticipate change and act with greater intention. There are rhythms everywhere. The challenge and maybe the opportunity is in learning to listen for them.
For their aircraft engines, component services. It shows they are not just maintaining, but actively expanding their market share and capture rate in critical sectors like commercial aviation and defense. This isn't passive growth, it's active market penetration.
Okay, strong top line. What about profit?
Net profit, a very healthy $2.2 billion. This figure goes beyond just sales. It demonstrates the company's strong ability to translate those impressive sales into tangible earnings for the business.
Turning sales into actual profit.
Right, and this is profit that can be reinvested, used to pay down debt, or maybe returned to shareholders. It signals financial discipline and efficient operations.
Good stuff. And margins.
Operating margin came in at a robust 23.8%.
Wow, nearly 24%.
Yeah, this is a crucial metric. Speaks volumes about operational efficiency. It tells us how much profit a company makes from its core operations for every dollar of revenue after covering all variable and fixed costs. A margin like that is exceptionally strong for a manufacturing-intensive industry like aerospace.
Definitely.
It indicates excellent pricing power, tight cost control, and efficient production processes. It suggests a really well-oiled machine.
Okay. And cash flow. That's always key.
Absolutely. Free cash flow. They generated an impressive $1.3 billion. Now, free cash flow for many analysts and investors is arguably one of the most important financial metrics.
Often called the king.
It really is. It represents the cash a company has left over after paying its operating expenses and capital expenditures, essentially. The money available for debt reduction, potential dividends, share buybacks, or further strategic investments. $1.3 billion is a substantial figure. Indicates excellent financial liquidity, strong cash generation capabilities, and significant strategic flexibility to pursue growth opportunities.
So solid numbers across the board in Q1. But does this translate into the future? What about longer-term confidence?
Yeah, that immediately raises that important question. Do these strong quarterly numbers translate into sustained future growth? And the report provides a powerful answer by highlighting a strong backlog of $170 billion in aerospace and defense orders.
Whoa, $170 billion. That's huge.
It's absolutely massive, a massive forward-looking indicator. It means GE Aerospace already has firm contracts in hand that will generate an astounding $170 billion in revenue for years to come.
Incredible visibility, then.
Incredible revenue visibility, stability, and predictability. It significantly reduces the risk of sudden downturns and gives investors immense confidence in the company's long-term earnings power and market position. It's essentially a multi-year runway of guaranteed business.
Amazing. Are they investing that cash flow wisely, too?
Seems so. Furthermore, they're making major investments in LEAP engine reliability and, crucially, the future RISE engine, which is slated for the 2030s.
LEAP and RISE. Okay.
Yeah. This isn't just about managing current business. It vividly demonstrates a clear, long-term strategic vision, a deep commitment to innovation that extends far into the future.
Right.
Investing in the reliability of existing, highly successful engines like LEAP ensures continued revenue from the vast fleets currently using them, bolstering their in-service support business. That's smart.
Keeps the current customers happy.
Exactly. But developing the future RISE engine, that's a potential game changer. It positions them at the absolute cutting edge for the next generation of sustainable aviation. It reflects a forward-thinking approach that underpins their dominant market position and suggests sustained competitive advantage for decades.
Thinking way ahead.
Yeah. This commitment to R&D and future-proofing their product line is a powerful signal of their long-term viability and growth potential.
So the numbers look incredibly strong, both current performance and that massive future pipeline. And they're not just sitting back, they're actively investing in the tech that will define the future of flight, securing their edge for decades.
That sums it up well.
That's a really powerful counter-narrative to any short-term market pressures or those technical squeezes we've been discussing. It suggests that while the stock might be experiencing some technical volatility, the underlying business, the engine itself, is incredibly robust and looking well into the future.
The fundamentals seem very solid indeed.
Now, let's zoom out a bit further. Let's talk about the external factors, the global news cycle, the broader macro environment, and the specific risks and opportunities that can impact a company like GE Aerospace.
Right, that context.
The report mentions a Boeing 787 crash with GE engine that triggered a temporary sell-off of approximately 4%. How significant was that event? How did it play out in the market, and what was its lasting impact on GE Aerospace?
Yeah, this incident is a perfect illustration of how companies, manage crisis and how the market reacts to unforeseen negative events.
Right.
Initially, any news of a plane crash, especially one involving a specific engine model, can cause an immediate, almost visceral knee-jerk reaction in the stock market.
Fear takes over.
Exactly. The 4% temporary sell-off in GE Aerospace stock is a clear example of this. Investors, often operating on incomplete information or maybe initial sensational headlines, tend to sell first and ask detailed questions later, just to mitigate perceived risk.
Shoot first, ask questions later.
Pretty much. It's a natural, albeit sometimes irrational, market response to uncertainty.
But it was temporary, you said.
Yes. And the critical detail here, which speaks volumes about GE Aerospace's integrity and the market's eventual rationality, is that GE confirmed no core fault, leading to limited long-term impact.
So it wasn't the engine's fault, fundamentally.
Correct. And this demonstrates a few key things. First, the company's swift, transparent, and factual communication in clarifying the facts quickly. That's crucial.
Builds trust.
Absolutely. Second, it highlights the remarkable resilience of a company with such strong underlying fundamentals and a diverse, proven product line. The market quickly reevaluated once the facts were established, understanding the issue wasn't a systemic flaw in GE's engine design or manufacturing. So this incident, while initially disruptive and causing that temporary dip, ultimately turned out to be, just a blip. It serves as a powerful reminder that initial panic can sometimes create a short-term dip, maybe even a temporary buying opportunity for an otherwise healthy and well-managed company. The market eventually gravitates back to the fundamentals.
Makes sense. So, looking ahead, any positive catalysts on the horizon?
Well, there's significant anticipation building toward the Paris Air Show. This event isn't just another conference, it's a major biennial highlight for the global aerospace industry. A real nexus for deals, innovations, strategic partnerships.
The big one for aerospace.
Exactly. The report specifically notes that AI-integrated tools in new engine models will be in the spotlight for GE. This is a potential positive catalyst that could generate substantial momentum for the stock.
How so?
Well, major announcements of new multi-billion-dollar engine orders, the showcasing of cutting-edge technologies like their AI-integrated tools for engine maintenance and optimization, or maybe strategic alliances formed at such a prominent global event. All of that can capture immense market attention and directly drive investor enthusiasm and stock price appreciation.
Okay, big potential news flow from Paris.
Definitely. It's where the future of aviation is often unveiled, and GE will want to make a splash.
What about navigating other challenges, like tariffs?
Yeah, the report highlights GE Aerospace's impressive adeptness at navigating macro challenges, too. It mentions that a $500 million tariff impact was neutralized by operational efficiency plus policy strategy.
Neutralized? How?
This isn't just a minor detail. It speaks volumes about the company's astute management team, its proactive ability to adapt and mitigate significant external headwinds, like trade tariffs, through a combination of internal improvements and intelligent strategic planning.
So they didn't just take the hit.
No, they didn't just absorb the cost or pass it on. They actively worked through lean operational efficiency initiatives and smart policy engagement to offset it, shows real agility and foresight.
Impressive. And how has the company done since spinning off its other divisions?
That's another key point. The post-spin-off performance in 2024 showed a TSR, total shareholder return, of plus 65%, alongside stronger R&D output.
Wow, plus 65% TSR, that's huge.
It's truly remarkable performance following a major corporate restructuring. Spinning off major divisions like healthcare and energy could have been disruptive, right?
Definitely risky.
But a 65% total shareholder return in a year indicates immense value creation for investors. Combined with stronger R&D output, it strongly suggests that the newly focused GE Aerospace entity, post-spin-off, is more agile, more innovative, and highly effective, driving both superior financial returns and accelerating technological advancements.
So the focus is paying off.
It certainly looks that way. This isn't just about weathering storms. It's about transforming, thriving, and adapting at a very high level.
You know, here's where it gets really interesting for me. These external events, even initially negative ones like the crash incident or challenging tariffs, they can create short-term volatility, cause temporary jitters in the market.
For sure, noise.
But what we're clearly seeing with GE Aerospace is that incredibly strong fundamentals, decisive strategic moves by management, and a highly resilient operational structure can quickly neutralize those impacts and even drive significant long-term gains.
Yeah. The signal shines through the noise eventually.
It's a powerful lesson, isn't it? Looking beyond the immediate headlines and the daily market noise to the deep-seated strength, adaptability, and strategic vision of a company. Okay, so for someone looking at this from a practical investment or, trading perspective, the RHY Think Mix report provides something incredibly valuable. It gives very specific strategic scenario entry targets with precise price ranges and clear conditions.
Right, getting down to brass tacks.
This is where the rubber truly meets the road, isn't it? Moving from abstract analysis to concrete, actionable insights. Can you walk us through these different entry zones? What do they signify, and how might a listener approach them based on their own investment horizon or risk tolerance?
Yeah, absolutely. This section basically rolls out the red carpet for you, offering an incredibly precise roadmap for potential entry points. It's designed for different time horizons and risk appetites, all rigorously based on the technical signals and market rhythms we've meticulously discussed.
Okay.
Think of it as a detailed playbook for when and how to consider taking a position in GE Aerospace. So first, let's look at the short-term entry zone.
Short-term first, got it.
The condition for this entry is very specific, near short-term trend line plus support confluence. Okay, so what does that mean? It means the price needs to be touching or very close to both a recent immediate trend line and a key minor support level simultaneously. Creates a strong, albeit temporary, floor.
Okay, a double support point.
Pretty much. If the price is hovering near this specific range, and the report gives numbers, $234.20 and $236.50, then you should be on high alert for those two critical signals we dove into earlier. Trap recovery plus mass deconvergence.
The key combo.
The key combo. If these emerge together, a rapid expected bounce is anticipated.
How rapid?
The expected box period for this bounce is quite immediate, till the 5 sessions, meaning you'd expect the move to play out within roughly 1 week of trading.
Okay, pretty quick.
And the reason for this expectation, it's precisely the trap resolution plus mass ED flow convergence, confirming that those trap sellers are being forced to cover and the underlying momentum is definitively shifting upwards.
Makes sense. And the target.
This short-term entry is directly linked to a 2-week target of $248.75. Offers a potential plus 4.2% gain. And the report assigns a 65% probability of success to this scenario.
65% probability, that's pretty high conviction for short term.
It is, making it a high conviction opportunity for, let's say, more aggressive traders looking for quick, sharp moves.
Okay, that's the short term. What about a slightly longer view? Swing term.
Exactly. Next, we move to the swing term entry zone. The condition here indicates a slightly deeper, more significant support level. Price touches swing trend line or support level if confirmed. So this is about the price testing a major pivot point or a more established support level.
Okay, a more solid floor, potentially.
Potentially, yes. The entry range is slightly narrower and lower here, from $228 to $231.30.
Okay.
The expected box period extends slightly, suggesting a bit more patience might be required, 5 to 9 sessions, for the bounce to fully materialize.
A week or two.
Roughly. The reason for the expected move remains fundamentally the same. Trap resolution plus MACD flow alignment, indicating the same powerful forces are at play, but potentially on a larger scale or requiring a deeper pullback to trigger them.
And the target for swing term?
This swing term entry is linked to a 2-month target of $264.30. It presents a more substantial potential gain of plus 10.7%. The probability of success here is rated slightly lower, at 60%.
Still pretty good odds, 60%.
Still strong, yeah. A strong opportunity for traders with maybe a multi-week to multi-month outlook.
Okay. And finally, the longest horizon mentioned, midterm.
Right. Finally, for those with perhaps a longer-term perspective, there's the midterm entry zone. This is a deeper entry. The condition is touching midterm trendline support. This implies a more significant pullback to a very robust long-term support level. Suggests a more patient, potentially larger-scale investment approach.
Okay, buying a bigger dip.
Essentially, yes. The entry range for this scenario is $218.50 to $222.
Lower still.
Yeah. The expected box period is the longest, 9 to 15 sessions, signifying that the recovery from this deeper level might take a couple of weeks, maybe 3, to truly establish itself and gather momentum.
Needs more time to build.
Exactly. The reason for the expected rebound is consistent. Trap resolution plus Mackie convergence, as these core technical signals are universal across different timeframes and scales.
Okay, and the long-term target here. This midterm entry is linked to a long-term target of $287. Offers a substantial potential gain, though the percentage given is plus 2.2%. That might be a typo in the source, given the target price. Maybe it meant plus 22% or more. Let's assume the target price is the key focus.
Right, $287 is a big jump from $220.
It is. Crucially, the probability for this deeper entry is slightly lower again, at 55%, suggesting that while the ultimate upside is significant, it relies on a more pronounced, perhaps less common, dip in the stock price to trigger.
So higher potential reward, slightly lower probability, requires more patience.
That's the trade-off, exactly.
You know, this isn't just theory or academic analysis then. It's a really detailed, condition-based playbook.
It really is.
It gives you precise numbers, probabilities, timeframes, tells you exactly what technical signals to look for and what to expect in terms of potential return. It's about being prepared for different market scenarios and having a clear, data-driven plan for each rather than just, reacting emotionally.
Exactly. Proactive, not reactive.
Okay, so looking ahead now, we have these potential entry points. What's the overall forecast for GE Aerospace stock? Are there any major upcoming triggers, particularly that Paris Air show you mentioned, that could truly set off the next big move for the stock and help it break out of this current compression?
Yeah, the forecast places significant emphasis on the upcoming Paris Air show. It's highlighted as a critical event that will determine momentum sustainability.
Determine sustainability, okay.
It's not simply a trade show. For GE Aerospace, it's a potential inflection point, a major stage for the company. As we said, major announcements of new engine orders, showcasing cutting-edge tech, strategic alliances, all formed at this prominent global event can dramatically influence market sentiment and the stock price trajectory.
It's a catalyst.
A potential major catalyst. It's where the industry looks for future direction, and GE Aerospace will be front and center.
And technically, are things still looking positive for a potential move?
Technically, yes. The indicators are indeed lining up for potential upside, reinforcing that fundamental strength we discussed. We've heard that MACD is converging, which, as we know, powerfully signifies that immediate selling pressure is diminishing and momentum could be shifting decisively upwards.
Right.
Additionally, the RSI is neutral, leaving room for upside. RSI, Relative Strength Index, it's a momentum oscillator measuring the speed and change of price movements.
Okay.
A neutral RSI means the stock is neither overbought nor oversold, indicating there's ample room for the price to move higher without immediately hitting resistance from being too high or exhausted from a prior rally.
So it's not stretched thin yet.
Exactly. This combination converging Mackie neutral RSI suggests a market that is primed for a significant positive move, but not yet overextended, creates ideal conditions for a breakout.
Which brings us to the trigger. What's the ultimate trigger for this potential move? That specific event or pattern that will unleash the coiled spring.
The report pinpoints it clearly. Breakout from triangle compression will be the key trigger for the next trend leg.
Breakout from the triangle.
Yeah, imagine the stock price moving within a narrowing triangle pattern on a chart. This pattern indicates consolidation, a period where volatility is decreasing, buyers and sellers are reaching an equilibrium.
The squeeze getting tighter.
Exactly. It suggests the stock is currently coiling, building significant energy like that compressed spring before a potentially decisive move. The breakout from this compression, meaning the price moves forcefully and decisively above the upper boundary of that triangle, would signal a powerful release of that pent-up energy.
Pop.
Yeah, and the start of a new sustained upward trend, or what the report terms the next trend leg. It's really the moment of truth for the stock's direction out of this consolidation.
So if we go back to our analogy of that coiled spring, it's not just sitting there waiting. We know the specific events or technical formations that could be the ultimate trigger for its release. The Paris Air Show, with potential major announcements, or that clear, decisive breakout from this triangle compression pattern, that could be the very event that sets it free, signaling the start of a new, powerful upward phase for GE Aerospace.
That's the setup. It's about recognizing that precise moment of release to potentially capitalize on the unfolding trend.
Okay. Finally, let's go beyond the charts and the company financials for a moment. Let's look at who's actually buying this stock and what's the general market sentiment. The report has a fascinating deep dive section on institutional flow.
The smart money.
Exactly. How does this give us an even more complete, sort of holistic picture of GE Aerospace's current standing and future prospects?
Yeah, this is where we get to peek behind the curtain, see what the big players, the smart money in the market, are actually doing with their vast capital. And the report clearly indicates institutional flow accumulation by BlackRock and Vanguard.
BlackRock and Vanguard. The giants.
The absolute giants. For those unfamiliar, these are two of the largest, most influential asset managers in the world, collectively managing trillions of dollars.
Trillions.
When major institutions like BlackRock and Vanguard are consistently accumulating shares in a company, it often signals strong, long-term confidence in that company's prospects.
Why is that?
Well, they conduct exhaustive due diligence, they have vast research capabilities, and they typically hold positions for extended periods. So their buying activity is seen as a powerful endorsement of a stock's potential, acts as a significant underlying support that can underpin future price appreciation. It's a massive vote of confidence.
Okay, so the big institutions are buying. What about other sentiment indicators?
Beyond institutional activity, other sentiment indicators also paint a remarkably positive picture for GE Aerospace. Short interest is below 3%, which indicates minimal short risk.
Short interest, meaning people betting against the stock.
It's exactly. Short interest represents the number of shares sold short by investors betting the stock price will fall. A very low percentage, like under 3%, means that relatively few professional or retail investors are betting against GE Aerospace.
So not many bears around?
Pretty much.
Yeah.
This suggests the market doesn't perceive significant downside risk, or that bearish sentiment is largely absent. And when there are a few short sellers, there's less selling pressure from them needing to cover, making it potentially easier for the stock to move up.
Okay. What about the retail crowd, like social media?
Good question. Then we look at community activity, which provides a pulse on retail investor sentiment. The report shows positive sentiment over 65% on Reddit and X, formerly Twitter.
Over 2/3 positive. That's pretty strong.
It is. This captures the collective mood of individual investors and traders. And over 2/3 positive sentiment is a strong signal of optimism and enthusiasm among that large segment of the market. While, retail sentiment can sometimes be fickle,
True.
it can also contribute significant buying pressure and act as a tailwind.
Interesting. Anything else? AI sentiment.
Yeah, and finally, embracing cutting-edge analysis, the AI sentiment also detects an ongoing accumulation signal in recent algo flow.
Okay, what does that mean?
It means that even advanced algorithmic trading systems, which crunch vast amounts of data at lightning speed, are recognizing and potentially participating in buying activity for GE Aerospace.
So the bots are buying too.
Looks like it. This powerful combination, you've got institutional buying, minimal short interest indicating little bearish conviction, strong positive retail sentiment, and even sophisticated algorithmic accumulation, signals it points overwhelmingly to a positive outlook for GE Aerospace.
Wow, that's a lot pointing the same way.
It's a compelling convergence of confidence from virtually all segments of the market, which further bolsters the technical strength and fundamental robustness we've already meticulously discussed. When the big money, the crowd, and even the machines are all leaning in the same positive direction, it creates a powerful, multifaceted tailwind for the stock's future trajectory.
So it's really not just that the charts are aligning or that the financials look incredibly promising. It's that the smart money, the retail crowd, and even the algorithmic traders are all sort of moving in a positive direction, reinforcing the potential for a significant upside.
It's a remarkable convergence of all the forces that tend to drive a stock. Seems like a very strong setup overall. #TechTagOutro.
Wow. We've just navigated a pretty complex, but I think incredibly insightful RHYT mix report on GE Aerospace.
Yeah, there was a lot packed in there.
We started by understanding how those intricate technical signals like Mackey deconvergence and trap recovery can indicate a powerful rebound, even when the stock is under immediate selling pressure right at that critical swing zone.
Technical setup.
Then we dove deep into the impressive financial backbone of the company. Its strong Q1 results, that massive $170 billion backlog, still can't get over that number.
He's staggering.
And those important strategic investments in future technologies like the RISE engine.
Looking ahead, yep.
We also saw how external events like that Boeing incident or the significant tariffs were effectively managed and factored into the overall resilient outlook.
Showing management adaptability.
Exactly. And crucially, we looked at those specific, actionable scenarios for potential entry points, complete with precise price ranges, probabilities, and even time frames for different investment horizons.
Giving people concrete ideas based on the analysis.
Right. The comprehensive picture that emerges then is of a company that, while it's currently navigating a critical technical juncture,
It's got squeeze zone.
it's profoundly supported by incredibly robust financials, forward-looking strategic initiatives, and, as we just discussed, overwhelmingly positive sentiment from virtually every segment of market participants.
Yeah, from the institutions like BlackRock and Vanguard to the individual investor on social media and even the algorithms.
It's quite something. The potential for a significant expansion phase seems substantial, driven by both upcoming industry events like the Paris Air Show and that key technical breakout from its current triangle compression.
The ingredients seem to be there for a potential move.
This deep dive really reveals how that intricate dance between technical analysis, fundamental strength, and prevailing market sentiment can converge, doesn't it? To paint a compelling, high-probability picture of a company's trajectory.
It's rarely just one thing. It's the confluence.
It's not just about one signal or one set of numbers. It's about the confluence of many, each sort of whispering its own piece of the story. So as you listening consider GE Aerospace, or indeed any company you're researching in the market, how much weight do you give to each of these distinct but interconnected layers of analysis? The technicals, the fundamentals, the sentiment.
It's a great question. Everyone's process is different.
And could understanding the deeper rhythm of a stock, that cyclical pattern of compression, recovery, and expansion we talked about, could that fundamentally change how you approach market opportunities and identify those key moments for action?
Food for thought.
Definitely something to chew on as you observe the markets.
And MACD angle steepening, ARQQ may attempt a new yearly high if consolidation near resistance remains tight. Deep dive analysis, institutional flow. No major buys, but momentum pickup evident short interest, 7.8%. Trending lower community buzz. Spike in mentions across Reddit and StockTwits, AI-based flow. Algorithmic sentiment signals expansion entry. Brand notice. This report is based on the proprietary VPAR rhythm analysis methodology.
Welcome back to the Deep Dive. This is the show where we really try to sit through all the noise, stack up the sources, and pull out the most important bits of knowledge to get you well informed. Sometimes with a few surprises, too. Today, we're plunging into, well, a really intriguing case study from the financial markets. And our journey kicks off with this statement right out of our main source. RAI quantum swing recovery completed, with a high probability expansion ahead.
Right.
Now, I know that might sound a bit like a cryptic message from, some Wall Street analyst. And you might be asking, okay, what does that actually mean? And maybe more importantly, why should I care about AR quantum or ARQQ? That's its ticker symbol.
Yeah, that's the question.
Well, that question is exactly what we're tackling today. We're doing a deep dive into this fascinating space where, like, technical stock analysis, the actual financial health of a company, and all that market sentiment stuff. It all comes together around this one company, ARQQ.
And just so you know where we're getting this info, our source material today is, it's like a really detailed analyst report, almost like a private brief,
Okay.
It's absolutely packed. It's got specific financial data, really detailed chart interpretations, the latest news hitting the stock, and even some very specific strategy recommendations, potential entry points, that kind of thing.
Oh.
Yeah, it's quite a find. Gives us a real insider's look at how pros break down and forecast a company's market position.
That's great. So our goal for you today is to cut through all that dense info, the jargon. and pull out those key insights. We want you to walk away with a really clear picture of ARQQ's current spot in the market, what's actually driving its price, and what the future might look like for it. Think of this as your shortcut to being really clued in on this specific case without having to spend hours on charts and financials yourself.
Exactly. And we're going to look at it from, well, all angles. It's not just about spitting out numbers or news headlines. It's about connecting the dots, right?
Right.
We'll dig into the what, the data, the events, but also the why. Why does it matter? We'll link those technical signals to the real-world financials and, importantly, to how the market feels about ARQQ overall. Trying to build that complete picture for you.
Okay, sounds good. Let's start then with ARQQ's recent journey, because the report kicks off with this kind of compelling story of resilience. It says about a month ago, ARQQ bounced back pretty strongly from what the report calls a short-term support cluster. But the interesting bit is it actually dipped below that support level first, just for a bit, like it was testing the waters maybe.
Yeah, it could be.
And then bounced back hard, triggering what the report calls a second wave of upward momentum. Now, that sounds like a recovery story, definitely. But for our listener, what do terms like support cluster and second wave of upward momentum actually, mean when you're looking at stock charts?
That's a great starting point because it gets right into the language of technical analysis, which is really all about trying to read market psychology through price movements.
Exactly.
So when the report mentions a support cluster or maybe a swing support line, it's pinpointing a price area where historically a lot of buying interest tends to show up.
Like a floor.
Exactly. Think of it like an invisible floor, a level where buyers usually step in and overwhelm the sellers, stopping the price from falling further. Now, what makes ARQQ's recent move interesting, as you pointed out, is that brief dip below the floor. That's often called a trap break. Imagine sellers see the price break that floor. They think, okay, this is it, it's going down, and they rush to sell, right?
Yeah, makes sense.
But then, bam, it quickly reverses and pushes back above that support level. It basically traps those sellers who bet against it. They might have to buy back shares to cover their losses, which adds fuel to the fire, pushing the price up even more.
Okay, so it shakes out the nervous sellers.
Precisely. It shakes out the weak hands, confirms the underlying strength of those buyers who held firm or bought the dip. And then that second wave of upward momentum just confirms it wasn't a fluke bounce. It suggests a renewed, sustained buying interest with real conviction behind it.
Gotcha. So it's not just bouncing. It's like it faked a fall, proved its strength, and then sprang back even harder. That sounds like a pretty powerful signal for chart watchers.
It really is a strong confirmation. And so, bring us to the present. The report says ARQQ is now testing the upper limit of the short-term resistance.
Okay, so if support is the floor, resistance is the ceiling.
Exactly right. It's a price level where selling pressure is expected to kick in. Maybe people who bought lower are taking profits, or maybe sellers think it's gone high enough.
Makes sense.
But what's really critical here, the report notes this test is happening with price tension and volume spike.
Tension and volume spike. Okay, why is that combo important?
Well, think about it. Price tension suggests energy building up, like a coiled spring. Buyers and sellers are really battling it out at this key level. And the volume spike, that's the proof. A lot of shares are changing hands.
Okay.
It tells you this isn't just a quiet nudge against the ceiling. It's a major confrontation. The outcome could be a really significant move.
And this whole situation, this tension and high volume at resistance, is pointing towards a potential expansion zone initiation. That phrase sounds significant. What does an expansion zone mean for ARQQ? What could be coming?
It's a really core concept in this type of analysis, yeah. An expansion zone basically suggests a period of significant price movement is likely coming soon, often quite rapid movement.
Okay.
Think of that coiled spring finally uncoiling. After a period where the price has been kind of consolidate, that's the tension part. An expansion zone means the stock is likely poised for a strong directional move. Could be breaking out to new highs, potentially.
Right. Yeah.
So testing resistance with that high tension and volume, it implies that if the buyers win this battle, the upward move could be pretty powerful and quick. It's signaling a high probability moment for a real shift, breaking out of the current range.
That paints a clear picture. Building pressure, potential release. And what's really interesting is the report gets specific. It gives actual price targets with probabilities. That's not something you always see.
No, it's quite detailed.
Okay, so for the short term, like 2 weeks out, it's predicting a plus 4.8% gain up to $43.60, and it gives that a 70% probability.
Pretty high confidence there.
Then Looking 2 months ahead, it's a much bigger jump, plus 38.1% to $52.45. But the probability drops a bit to 60%.
Still quite confident, but acknowledging more uncertainty.
And then the long-term target, plus 61.1% gain to $61.20, with a 45% probability. So what are these numbers, especially the way the probabilities decrease? Tell us about the analyst's thinking and the risks involved.
Well, it shows a really interesting balance, doesn't it, between the potential upside and the simple fact that forecasting gets harder the further out you look.
Right. Makes sense. More time, more unknowns.
Exactly. That decrease in probability is totally normal, totally logical. More things can happen, economy shifts, company news, market mood changes. But let's look at that 70% for the 2-week target. In the stock market, 70% confidence for a short-term move. That's actually quite high. It suggests a strong belief in the immediate path, likely based heavily on that technical setup we just discussed.
Yeah, 70% feels pretty strong for the market. It's like saying, we're pretty sure it's going to rain this afternoon.
Good analogy. Compared to, there's a decent chance of snow next winter.
Right. Okay. And those percentage gains, 38% in 2 months, over 60% long term. Those are substantial.
They really are. We're not talking minor wiggles here. This suggests the analysis sees potential for a major move, a significant reevaluation of the stock. And while that long-term probability is down to 45%, that's still considered, a pretty plausible outcome in forecasting, especially for that kind of return. It just acknowledges the higher risk. So it's telling you, high confidence in the short-term direction, good potential for much bigger gains longer term, but with, naturally, more uncertainty attached. Which leads us to the next question, right? How do these optimistic targets actually line up with the deeper details, the technicals and the fundamentals?
Exactly. Let's dive deeper into that technical picture then, because the report really seems to hang its hat on it. It mentions a green circle area on the chart.
A visual cue.
And says the current zone forms a setup of trap break recovery, plus MACD flow reversal, making this a high probability continuation area for the existing bullish wave.
Okay, that sounds complex. Let's unpack that. Trap break recovery again, and then what's a MACD flow reversal?
Right. This is where you see the power of combining signals. The trap break recovery, as we kind of touched on, is powerful because it's psychological. Price dips below support, sucks in sellers.
Traps them, exactly. And then it snaps back above support. It forces those sellers to cover. New buyers jump in, seeing the strength. It basically confirms that support level is really strong. It shakes out doubt.
Okay, got the trap part clearer now. It's like a fake out.
It is. Now add MACD flow reversal. MACD, that's moving average convergence divergence, is basically a momentum indicator.
Right, measures speed and direction.
Sort of, yeah. Think of it like a momentum gauge. A flow reversal here, shifting from down or sideways to clearly up, means buying momentum isn't just there, it's picking up steam, it's accelerating.
Okay, like hitting the gas pedal.
Exactly. So when you get both the trap break showing solid support and resilience, and the MACD reversal showing accelerating upward momentum, analysts call that dual confirmation.
Dual confirmation. Sounds strong.
It's considered very strong. It suggests the upward trend isn't just likely to continue, it's got a high probability of gaining real traction. That's why the report calls it a high probability continuation area. It's a key piece of the bullish puzzle here.
That really clarifies why they're so confident there. Multiple signals agreeing. Okay, moving to the chart view itself. The report talks about key technical convergence and short-term trend plus support alignments. What are these visual things telling us on this bar chart they mentioned? What happens when different lines kind of come together?
Yeah, key technical convergence is when you see several different technical tools pointing to the same price level. Imagine maybe a moving average line, a trend line drawn from past lows, and maybe a Fibonacci level all meeting up around, say, $35.
Okay.
When multiple independent indicators all highlight the same price area as being important, it gives that level much more significance. It's like getting the same direction from several different maps. You pay more attention.
Right, strengthens the signal, like multiple witnesses confirming a story.
Exactly. And short-term trend plus support alignments. That's looking at where the current upward trend line meets up with those established support levels, especially this swing or midterm support line.
Swing support. That's a more major level.
Generally, yes. It relates to a larger price move over weeks or months, so it's considered more significant psychologically. When the price finds support right where the current trend meets these bigger support lines, the report says it significantly increases both probability and expected returns for a move higher. It shows strong demand is right there at that critical intersection.
Okay.
The report also mentions wave structures and tension zones. Technical analysis often looks for repeating patterns or waves in price action to forecast moves, and tension zones are those tight consolidation areas we talked about, where pressure builds before a potential breakout.
So the chart itself is telling a story of pressure building at points where lots of signals agree.
Got it. Let's go even deeper on this rhythm analysis. The report seems to really value this. It says, price has rebounded from the swing support zone after a short-term breakdown, currently testing the short-term resistance line near the upper dotted limit, approximately equals 90 halves, approximately 3 level. Okay, that last part is a bit technical.
Yeah, that sounds like a specific level calculation from their proprietary model. Right. But crucially, it says the rhythm structure shows a shift from contraction to expansion. What exactly is this rhythm structure, and why is shifting from contraction to expansion so important?
This is absolutely central to their bullish view based on this VAR rhythm analysis they use. Think of it like breathing. Contraction is when the market is inhaling, so to speak.
Yeah.
Price movements get smaller, tighter, volatility drops, it's consolidating, maybe building energy quietly, like coiling that spring.
Okay, quiet period, building energy.
Then expansion is the exhale. Volatility jumps up, the price starts making big, decisive moves. It's the release of that stored energy. The spring uncoils.
Okay, so contraction leads to expansion.
Often, yes. That shift is a key signal analysts look for because it frequently precedes and predicts the start of a significant sustained price move. They're trying to catch the market right as it transitions from that quiet buildup to the explosive release.
Gotcha. So if it's shifting into expansion now, that suggests the big move might be starting.
That's the interpretation, yes. And importantly, the report says this shift is backed up by the MACD flows on different timeframes, which adds more weight. It notes short-term maxi flow transitioning from convergence to upward trend, meaning immediate buying momentum is accelerating now.
Okay.
And at the same time, swing maxi flow maintaining upward momentum with upper support forming, meaning the bigger intermediate term trend is also still strong and finding support at higher levels. Healthy sign.
Right.
So you have short-term momentum kicking into high gear and the medium-term trend still firmly positive. That's another dual confirmation. It builds a really strong case, technically speaking, for entering a significant expansion phase. It suggests the recent bounce isn't just noise. It could be the start of something much bigger.
That's a really compelling technical picture they're painting. Very bullish signals stacking up. But okay, let's pivot. Time for the financial reality check.
The numbers.
Because while the charts look good, what about ARQQ's actual business performance? The report states, FY25 H1 revenue $0.067 million year-over-year, down 44%.
I mean, 0.067 million, the $67,000, right? And down 44%. That sounds pretty bad.
It does, and this is where you see that stark contrast we mentioned.
Yeah.
A 44% drop in revenue year-over-year is, well, it's significant. It clearly shows a major challenge in generating sales right now. That's a huge contraction in the first half of their fiscal 25.
Yeah.
And it gets worse. An operating loss of $7.8 million. That means their core business isn't even covering its own costs. And then a net loss of $17.2 million overall.
Wow. So revenue of $67,000 and a net loss over $17 million in the same 6 months.
Yeah. The disparity is massive. It screams immediate financial weakness. They're burning through cash at a pretty high rate. No question about that. That's quite a gap. Definitely challenging present. But then the report throws in some lifelines, some counterpoints. It notes cash on hand, $24.8 million with ATM access up to $75 million. And looking ahead, active contracts, GOD, TI1 Telecoms, license-based revenue expected soon.
How much do these things help? Can they really balance out those losses?
This is really the crux of the investment thesis here, isn't it? Balancing the current pain against future potential. First, that $24.8 million in cash. That's their runway. It's vital. It means they can keep the lights on, keep operating despite the losses without immediate panic.
Okay, so they have time.
They have time.
Yeah.
And the ATM access up to $75 million is also really important. ATM stands for at the market offering.
Right.
It lets them sell new shares directly into the market gradually over time up to that $75 million limit. It's way more flexible and less disruptive than a big sudden stock offering. Think of it like a credit line from the stock market they can tap into as needed. It's a major safety net for funding R&D operations, bridging that gap until revenue picks up. That sounds like a smart tool to have, especially if you're burning cash but have plans.
It is. But maybe even more crucial for the future story are those active contracts, specifically mentioning the DoD Department of Defense and TI-1 Telecom, and saying license-based revenue expected soon.
Right, expected soon. That's key.
It is. It means they've actually landed deals with major players. Defense contracts especially can be huge and long-term, even if the revenue takes time to show up on the books. License-based also suggests potential for recurring revenue. This is the pipeline value the report talks about.
Ah, the pipeline. What's coming down the track?
Exactly. So the report is very clear. Financials are weak short-term, but backed by sufficient liquidity and pipeline value. It's acknowledging the current struggle, but highlighting the financial staying power and the tangible future contracts as major mitigating factors. It's that classic growth company story. Lose money now to build something valuable for the future. It's definitely not a simple good or bad picture.
Yeah, it's a very nuanced situation. Struggling now, but with cash, a way to get more cash, and confirmed future business on the horizon. Okay, let's bring in external factors. News, risk, sentiment. The report flags a few recent news items. June 17th, ARQQ joins Oracle Defense Ecosystem, May 27th, acquired Amplify IP to strengthen encryption, and then May 22nd, the FY25 H1 earnings revenue delays, sustained losses, news we just discussed. How do these pieces fit together? Positive, then negative.
It's a fascinating mix, isn't it? And it really shapes how the market sees the company right now. Let's take them one by one. Joining the Oracle Defense ecosystem, that's potentially huge.
Why Oracle specifically?
Well, Oracle's a giant in enterprise tech, and their defense work is serious business. Being part of their ecosystem gives ARQQ credibility, validation. It could open doors to significant defense contracts, which are notoriously hard to get into, but can be very lucrative and stable long-term. It signals they're playing in the big leagues, strategically.
Okay, so that's a big positive signal for future business.
Definitely. Then, acquiring Amplify IP to strengthen encryption, that's another smart strategic move. For a company dealing in quantum tech and defense, top-notch encryption isn't just nice to have, it's absolutely critical.
Right, security is paramount.
Exactly. This shows they're actively investing in making their core technology better, more secure, more competitive. It enhances their product offering for those high-stakes customers.
Okay, so two solid strategic wins. Looks like they're building for the future.
Absolutely. Clear forward momentum on the strategic front. But then, smack, you get the May 22nd earnings news, the revenue delays, the losses.
The reality check.
The reality check. It grounds all that strategic optimism. It confirms the financial weakness we talked about, and maybe explains why things are delayed. It costs money to innovate and land big deals. It's the here and now financial picture contrasting sharply with that future vision.
So you've got this real tension. Good news about the future strategy. Bad news about the current finances. And the report boils this down nicely. Sentiment is rising, but actual monetization still pending. What's the significance of that gap between feeling good about the company and the company actually making money?
Oh, that gap is critical. It's where a lot of the risk and opportunity lies for growth stocks. Rising sentiment means the good news Oracle Amplify IP is working. It's creating buzz, optimism, excitement among investors. People are buying into the story, the future potential, and that drives the stock price up, sometimes way ahead of actual earnings.
Right, buying the promise.
Exactly. But actual monetization still pending is the necessary anchor to reality. The positive developments haven't yet turned into dollars flowing onto the bottom line. This creates that tension you mentioned. It's the market's perception versus the company's current financial performance. And the risk is clear, right? If that monetization takes too long, if those contracts don't start generating revenue as expected, or if there are more delays, that positive sentiment can evaporate pretty quickly, and the stock price could correct sharply. Investors are betting on execution, and execution always carries risk.
That makes a lot of sense. That sentiment monetization gap feels like a tightrope walk. Okay, let's widen the lens a bit more beyond just official news. The report's deep dive analysis section brings in things like community buzz, spike in mentions across Reddit and stock twits, and also AI-based flow, algorithmic sentiment signals, expansion entry. What do these more modern indicators tell us?
Yeah, this shows how market analysis is changing, incorporating these newer data streams. Community buzz, especially spikes on places like Reddit or StockTwits, that's the retail investor crowd getting interested.
The meme stock effect, potentially.
Well, it can be, though not always. But it definitely shows growing awareness and discussion among individual investors. These platforms can genuinely move stocks short-term. So a spike in mentions means ARQQ is on the radar of that potentially powerful group. It's collective interest building momentum.
Okay, so the internet crowd is talking about it.
They are. And then you have the more sophisticated layer. AI-based flow, algorithmic sentiment signals. This means complex computer programs are scanning everything, news, social media, trading data, you name it, in real time to gauge sentiment.
Oh, right.
And if these AI systems are flashing an expansion entry signal, it suggests their algorithms are also detecting patterns that point towards a strong potential price increase. It's like getting a confirmation from the machines based on data processing far beyond what humans can do quickly.
That's fascinating. AI agreeing with the bullish technicals. What about the big money? The report said no major buys from institutional investors, but also momentum pickup evident. What's that mean? Are the big funds interested or not?
It's nuanced. No major buys means you're not seeing huge funds filing paperwork saying they just bought a massive chunk of ARQQ. They might be cautious because of the current financials, or maybe their investment rules require profitability first. Institutions often move slower.
Okay.
But momentum pickup evident is key. It suggests that even without those huge buys, the underlying price action and the buzz we've talked about is building. It could mean institutions are watching closely, maybe taking small initial positions under the radar, or just getting ready to jump in if things solidify. It implies ARQQ is on their watch list, even if they haven't fully committed yet. The momentum might attract them soon.
So retail and AI are keen. Institutions are maybe warming up on the sidelines.
That seems to be the picture. And one more piece. Short interest, 7.8% trending lower. Short interest is the percentage of shares bet against the stock.
Right. People betting it will fall.
Exactly. If that number is trending lower, it means fewer people are making those negative bets. Some might even be buying back shares to close their shorts. That reduces selling pressure and is generally seen as a bullish sign, less conviction among the bears.
Okay, so multiple fronts: retail buzz, AI signals, potential institutional interest building, fewer bears, all kind of leaning positive, despite the lack of big institutional buys yet. Which brings us neatly to the strategy part, the really practical bit. The bullseye entry zones.
Yes, this is where the report gets very actionable, offering specific setups based on all the analysis we've discussed. Precise ranges, targets, time frames, tailored for different approaches.
All right, let's break them down. First, the short-term buy zone setup. It looks for a return to short-term trend support convergence, trap recovery, plus MACD convergence. Entry range, $35 to $36.80. Duration, 5 to 9 trading days. Target, that 2-week goal of $43.60. What's the play here?
This is definitely for the quick tactical trader. It's basically saying, wait for a specific kind of pullback, not just any dip, but one that comes back to a confirmed short-term support area where multiple signals line up. Convergence.
Okay.
Then you want to see that trap recovery confirming the support is strong, and the MACD convergence showing momentum is turning back up right there. It's about catching a confirmed bounce off a strong level for a quick move towards that $43.60 target. High probability, short time frame. Ideal for active traders who can monitor closely and act fast on those specific signals.
Got it. Wait for the confirmed dip and recovery signal, then aim for the short-term target. What about the next one, the swing buy zone setup? This targets a retest of swing trend support level. Entry, $30.50 to $33. Duration, 6 to 12 trading days. Target, the 2-month goal of $52.45. This sounds like waiting for a bigger dip.
Exactly. This is for someone with a slightly longer horizon, aiming for a larger piece of the potential move. A swing trend support level, remember, is generally stronger and more significant than a short-term one.
Right, related to a bigger price move.
Yeah. So this strategy involves waiting for a deeper pullback, potentially offering a better price, a lower entry point. The idea is to get in closer to that more substantial support for a multi-week hold, aiming for that bigger $52.45 target. The probability is slightly lower, 60%, but the potential reward is much higher. Suited for a swing trader, someone comfortable holding for weeks, not just days, trying to capture that larger upward swing.
Okay, deeper pullback, bigger target, slightly longer hold. Makes sense. And the last one, the midterm buy zone setup. Lowest entry range here, $27 to $29.80. Longer duration too, 10 to 20 days. Target, The long-term $61.20 goal. This is described as midterm rhythm base forming post-swing line breakdown. Sounds like waiting for a potentially serious weakness.
It does. This is the most patient and potentially highest risk, highest reward entry. It anticipates a scenario where the price might actually break below a major swing support line, maybe due to market fear or some temporary negative news, a significant shakeout. The strategy then is to wait until after that breakdown and watch for a new base to form, a period where the price stabilizes in that lower range, $29.80, showing the selling is exhausted and buyers are stepping back in to build a new foundation.
Buying after the storm is past and things settle down.
Precisely. If you can catch that new base forming, you could get the absolute lowest entry for that potential big move towards $61.20. But it requires patience, discipline, and the nerve to buy when things might look scary after that breakdown. And you risk the breakdown continuing, of course. But for a long-term investor willing to ride out volatility for maximum upside, this could be the most attractive entry, assuming the core bullish story remains intact.
Wow, 3 very distinct strategies there, tailored to different risk levels and timeframes, really practical stuff. So bringing it all together, what's the overall forecast? The report says ARQQ is currently in an overbought state after recovery from a prior swing low with support flows confirmed and Magid angle steepening. Now, overbought usually sounds like a warning sign, right? Time to sell?
It often does, yeah. Overbought usually means the price went up fast, maybe too fast, and a pullback could be coming. But context is everything here.
Okay.
The report immediately qualifies it with support flows confirmed and MACD angle steepening. Support flows confirmed means buyers are still actively stepping in even at these higher prices. Demand is strong. And MACD angle steepening, that means the upward momentum isn't slowing down, it's actually getting stronger, accelerating.
So it's like, yes, it ran up fast, but the engine is still revving harder, not sputtering.
Exactly. It suggests the buying pressure is so strong it might just keep pushing higher, overriding the typical overbought pullback expectation. It's a high energy state.
Gotcha. And the conclusion, it says, ARQQ may attempt a new yearly high if consolidation near resistance remains tight. What does that tight consolidation look like, and why is it important?
Tight consolidation near resistance means the price hovers just below that ceiling level we talked about, maybe trading in a very narrow range without any sharp drops. It's like the buyers are patiently absorbing any selling that comes in at that level, building pressure steadily.
Like water building up behind a dam.
Good way to put it. If it can stay tight like that without backing off significantly, it builds enormous pressure for potential breakout through resistance. If that happens, the path could be clear for a move to a new yearly high. It's laying out the specific condition that tight consolidation needed for the most bullish outcome to play out. It's that sophisticated, if this, then that analysis.
Fascinating. Well, we have certainly covered a lot of ground today on ARQQ. We've gone through the specific price targets, the probabilities, dug into those really specific technical signals, trap breaks, MCV reversals, rhythm shifts. We've looked hard at that contrast between the weak current financials and that strong future potential from the pipeline and liquidity. And we explored how news, sentiment, algorithms, institutional flows all kind of mix together. It's been a real multi-layered look.
And that's really the goal, isn't it? For you, the listener, to see how all these different pieces, technicals, fundamentals, sentiment get woven together to build a full picture. It's about understanding how they interact. How strong liquidity and a good pipeline can offset weak earnings for now, how powerful chart patterns can suggest future moves even when the current numbers aren't great. It gives you that holistic view, which is just crucial for making sense of the market, seeing the whole puzzle, not just the pieces.
Absolutely. So as we wrap up this deep dive on ARQQ, here's a final thought for you to chew on. Given this situation, weak financials now, but a strong pipeline, good liquidity, and this compelling technical setup suggesting expansion, how do you weigh that promise of future revenue against the reality of current losses? When you're looking at a company's path, where's the balance point for you between betting on the future and seeing those present red flags?
And maybe add this layer too. For a company like ARQQ in these advanced tech fields with potentially strategic government links like the DoD contracts and partnerships like Oracle, how much weight do you give that strategic importance? How much is that potential worth, the value of the technology, the partnerships, even if the big money isn't flowing in yet? It really makes you think about how the market values innovation and future promise versus cold, hard cash flow today, especially in these potentially world-changing tech sectors.
Applied Digital, APLD, swing support holding. Is expansion resuming? Hello, this is Top Trader Jinlog. This report provides a rhythm-based analysis for Applied Digital, APLD. using our RHYTHMIX system. We also offer a podcast in a talk show format for easier understanding, and a full visual post is available on our blog. If you want timely delivery, priority requests are available. Subscribe or comment for continuous updates. Summary: APLD recently broke below its short-term rhythm line and is now consolidating near the swing level support zone. The stock surged after securing a 15-year AI HPC lease contract with CoreWeave, but is now stabilizing. This creates a potential rhythm recovery scenario, especially if MACD alignment confirms bottoming. Price, forecast, target analysis indicates a possible short-term rebound is taking shape. Investment opinion: 2-week target. Plus 16.2% right pointing arrow $13.33. Probability 68% 2-month target. Plus 34.5% right pointing arrow $15.44. Probability 62% long-term target. Plus 63.2% right pointing arrow $18.74. Probability 52%. Right pointing arrow strategic rhythm re-entry based on consolidation near swing support. Right pointing arrow long-term upside remains strong due to structural demand in AI data infrastructure. VPAR rhythm analysis. Current rhythm zone. Near swing support band, daily swing support visible. Rhythm flow is transitioning from compression to potential recovery. Short-term supply, MACD, converging. Potential reversal swing supply, MACD. Still under downward pressure but signs of easing. Watch for breakout over $12.70 to $13.30 to confirm expansion phase. All rhythm analysis is based solely on rhythm lines visibly displayed on the chart. If no lines are visible, rhythm interpretation is omitted by default. Rhythm flow is evaluated using the natural pattern. Compression right pointing arrow recovery right pointing arrow expansion. Financial snapshot, FY 2024 revenue. $165.6 million. YoY growth plus 199%. Recent quarter. Revenue $52.9 million per net loss $36.1 million growth fueled by high-scale AI HPC data center contracts. Capital expansion funded via SMBC loan and preferred equity. Financial recovery hinges on revenue realization and margin improvement. News and risk summary. Major catalysts: 15-year, 250 megawatts AI data center lease with CoreWeave. $5 billion preferred equity agreement with Macquarie. $900 million upfront. Risks: delayed revenue realization, persistent net losses and capital-heavy expansion. Market sentiment: plus 103% weekly spike after CoreWeave announcement. High retail interest in AI HPC exposure. Strategy scenario: bullseye entry zones. Short-term buy zone price, $10.80 to $11.30 condition. Trap resolution plus MACD convergence box period 5 to 9 trading days. Target based on 2-week target $13.33. Swing buy zone price $9.90 to $10.50 condition. Swing support hold plus recovery signal box period 6 to 12 trading days. Target link to 2-month target $15.44. Midterm buy zone price $8.80 to $9.40 condition. Long-term rhythm recovery after breakdown box period 10 to 20 trading days. Target link to long-term target $18.74. All entries must be based on visible rhythm convergence plus MACD confirmation. Forecast: APLD stock forecast. Structural momentum from AI infrastructure investments. Rhythm flow may shift into recovery above swing support. MACD and RSI show signs of potential bottoming. Expansion scenario becomes active if short-term resistance breaks. Advanced analysis. Institutional flow. Net buying over past 5 sessions. Short interest approximately 10 to 12% with short covering bursts. Community signals. High volume on Reddit. XI related topics. AI trading flow. Algorithmic activity detected on daily bounce zones. Brand. This report is based on the RHYTHMIX rhythm analysis system developed by top trader Jinlog. All interpretations are rhythm-based and technical in nature and do not constitute financial advice. Rocket Lab, RKLB. Will drone policy momentum sustain the bullish rhythm? Hello, this is top trader Jinlog. You can check the details along with the chart on my blog. If you want continuous analysis, please subscribe or leave a comment. If you want to receive reports quickly, please choose the priority option. Summary checkmark. What breakdown triggers should we watch for in this rhythm analysis? Let's check below. RKLB recently surged on UAS and drone policy momentum and is currently consolidating after a strong breakout. Chart analysis. 120-minute. Strong bullish wave. Right pointing arrow upper box trap. Right pointing arrow volume declining. Right pointing arrow reacceleration possible. Daily. Multiple bullish candles. Right pointing arrow testing box center support. Weekly. Breakout above box top. Right pointing arrow consolidating. Right pointing arrow midterm bullish intact. Monthly. Breakout from mid box. Right pointing arrow entering large bullish wave. Right pointing arrow midterm bullish rhythm intact with potential for reacceleration post consolidation. Investment opinion. Pushpin short term. Consolidating inside box. Right pointing arrow buy the dip opportunities valid. Pushpin midterm. Bullish rhythm intact. Right pointing arrow reacceleration potential remains. Pushpin policy trigger. Drone executive order plus defense sector momentum supportive. Right pointing arrow performance expectation. 2-week target. Plus 5.5% right pointing arrow $30.80. Probability 60%. 2-month target. Plus 19.3% right pointing arrow $34.85. Probability 68%. 2-year long-term target. Plus 112.4% right pointing arrow $62. Probability 78%. VPAR chart explanation. This is Rocket Lab, RKLB. as requested for analysis. The circled areas in the past and present are potential short-term trend, yellow consolidation and upward trend points. These points have a higher probability and potential return when they are near the swing line, white or medium-term line, orange. Each chart has its own wave trend and tension. Currently, after finding support at the medium-term resistance supply level in March to April, it is showing the flow of the medium-term trend monthly wave again, and is being considered as a potential point for a short-term or swing trend. For specific entry points, please refer to the strategy scenario and report. VPAR rhythm analysis monthly rhythm. Breakout from mid-box right pointing arrow large bullish wave ongoing bands. Above dotted top right pointing arrow no overbought signals, MACD. Upward divergence maintained, weekly rhythm. Breakout above box top right pointing arrow consolidating right pointing arrow midterm bullish intact bands. Testing support after breakout RSI. Normalizing after overbought, daily rhythm. Multiple bullish candles right pointing arrow testing box center support bands. Testing box center right pointing arrow potential for breakout continuation, MACD. Maintaining upward divergence 120-minute rhythm. Strong bullish wave right pointing arrow upper trap right pointing arrow declining volume right pointing arrow potential reacceleration volume. Decreasing right pointing arrow possible re-entry zone trap. Upper trap right pointing arrow monitoring for breakout recovery. Financials Q1 2025 revenue. $123 million right pointing arrow, Y plus 32% net loss. $26.2 million right pointing arrow narrowing backlog. $603 million right pointing arrow all-time high cash. $216 million right pointing arrow very strong liquidity. News and risk summary news drone executive order right pointing arrow strong policy momentum. Defense and military contract expansion driving backlog growth. Continued growth in space launch services risks post-surge price pressure drone defense policy uncertainty. Could slow momentum defense budget volatility risk. Strategy scenario bullseye entry buy in the $28.80 to $29.20 range. Bullseye targets. First target. $30.80, probability 60%, second target. $34.85, probability 68%, third target, long term. $62, probability 78%, prohibited stop loss below $27.80, right pointing arrow trim half, below $25.50, right pointing arrow, full exit. Outlook midterm bullish rhythm remains valid, supported by drone policy and defense sector momentum. Currently consolidating inside box right pointing arrow potential re-acceleration if key supports hold. Right pointing arrow policy trigger continuity will be key for sustaining the bullish rhythm. Deep report institutional flow. Increasing institutional buying short interest. Approximately 3.2% right pointing arrow below average social trends. Keywords like drone executive order, defense sector gains, backlog expansion, aerospace growth trending checkmark summary. RKLB is currently in a bullish rhythm consolidation phase, supported by strong policy momentum and defense sector tailwinds. Buy the dip strategy remains valid. Right pointing arrow watch for re-acceleration signals. Bitcoin Depot BTM. After high volatility consolidation, will the rally continue? Hello, this is Top Trader Jinlog. You can check the details along with the chart on my blog. If you want continuous analysis, please subscribe or leave a comment. If you want to receive reports quickly, please choose the priority option. Summary checkmark. Is there still a short-term breakout potential in the current rhythm? Let's analyze now. BTM recently surged plus 23% on new CFO appointment and earnings optimism, breaking its recent highs. Chart analysis. 120-minute. Large bullish candle right pointing arrow upper trap right pointing arrow volume declining right pointing arrow consolidation likely daily. Multiple bullish candles right pointing arrow upper box breakout right pointing arrow overbought signal weekly breakout above box top right pointing arrow maintaining bullish structure. Monthly, large bullish candle right pointing arrow strengthening midterm bullish rhythm right pointing arrow a classic post breakout box consolidation phase with potential for another bullish leg if key support holds. Investment opinion pushpin short term. Overbought right pointing arrow likely entering box consolidation right pointing arrow buy the dip opportunities. Pushpin midterm. Bullish rhythm intact right pointing arrow potential for re-acceleration pushpin. BTC price correlation up pointing arrow. Sector wide fundamentals improving right pointing arrow performance expectation 2-week target. Plus 6.2% right pointing arrow $6.60. Probability 55% 2-month target. Plus 24.9% right pointing arrow $7.77, probability 65%, 2-year long-term target, plus 142.2% right pointing arrow $15.07, probability 75%. VPAR chart explanation. This is Bitcoin Depot BTM NAS, as requested for analysis. The circled areas in the past and present are potential short-term trend, yellow consolidation and upward trend points. These points have a higher probability and potential return when they are near the swing line, white or medium-term line, orange. Each chart has its own wave trend and tension. Currently, after breaking through the medium-term resistance supply in mid-May, it is continuing the short-term trend daily wave, and is in a state of a 33% sharp upward move, shooting, although the minute chart shows divergence. If $6 holds as support, there is a possibility of continuing the upward trend, even if it breaks below $6. As long as Bitcoin's swing trend is not broken, consider entering on dips to the short-term or swing line. For specific entry points, please refer to the strategy scenario and report. VPAR rhythm analysis, monthly rhythm. Large bullish breakout right pointing arrow midterm bullish rhythm strengthening bands. Broke upper box right pointing arrow overbought signal MACD. Strong bullish crossover. Weekly rhythm. Breakout above box top right pointing arrow consolidation likely bands. Above dotted top right pointing arrow testing center support. RSI. Overbought right pointing arrow potential short-term pullback. Daily rhythm. Multiple bullish candles right pointing arrow upper trap right pointing arrow possible consolidation bands. Above box top right pointing arrow monitoring for mean reversion MACD. Forming bullish divergence 120-minute rhythm. Large bullish candle right pointing arrow upper trap right pointing arrow volume declining right pointing arrow box consolidation likely volume. Decreasing after spike right pointing arrow watch for re-acceleration signals trap. Upper trap right pointing arrow recovery attempts to be monitored. Financials TTM revenue. Tilde $699 million right pointing arrow YoY plus 13.4% net loss. Tilde $14.6 million right pointing arrow losses continuing aggressive expansion strategy in Bitcoin ATM market right pointing arrow leadership intact cash. $8.5 million right pointing arrow sufficient for next 12 months. News and risk summary news. New CFO appointed. Ex-American Express right pointing arrow increased confidence. Expanded strategic partnership with NCR right pointing arrow new growth potential. Institutional buying increasing right pointing arrow confirmed through recent flows risks overbought post-surge competitive pressure in ATM market. High BTC price correlation right pointing arrow volatility risk. Strategy scenario bullseye entry buy in the $6 to $6.22 range. Bullseye targets. First target. $6.60, probability 55%. Second target, $7.77, probability 65%. Third target, long term, $15.07, probability 75%. Prohibited stop loss below $5.75. Right pointing arrow trim half below $5.20. Right pointing arrow full exit. Outlook, currently entering a post-breakout consolidation phase. Midterm bullish momentum remains valid, with BTC price and sector news likely to act as key triggers. Right pointing arrow monitoring box support. Right pointing arrow buy the dip strategy is valid in this rhythm. Deep report institutional flow. Net buying by institutions increasing short interest. Approximately 2.6% right pointing arrow below average for crypto stocks social trends. Keywords like new CFO, Bitcoin ATM growth, BTC rally linked stocks trending. Summary BTM remains in a high volatility rhythm consolidation phase, with valid midterm breakout potential aligned with BTC market movements. Buy the dip strategy. Right pointing arrow re-acceleration watch is valid. IMNN. After high volatility consolidation, can it soar again? Hello, this is Top Trader Jinlog. You can check the details along with the chart on my blog. If you want continuous analysis, please subscribe or leave a comment. If you want to receive reports quickly, please choose the priority option. Summary checkmark. What breakdown triggers should we watch for in this rhythm analysis? Let's check below. IMNN recently surged plus 95% in 3 trading days, driven by clinical trial and technology optimism, entering a high volatility phase. Chart analysis. 60-minute. Upper box trap right pointing arrow consolidation attempt inside box. Daily. Large bullish candle right pointing arrow testing upper box right pointing arrow potential correction weekly. Strong bullish candle right pointing arrow exceeded upper box right pointing arrow pullback attempt. Monthly. Breakout from low right pointing arrow overbought signals present right pointing arrow classic post breakout box consolidation phase, with midterm bullish continuation potential depending on support. Investment opinion pushpin short term. Consolidating at upper box right pointing arrow watch for buy the dip opportunities. Pushpin midterm. Breakout continuation valid. If trend restores pushpin clinical news trigger could lead to another breakout right pointing arrow performance expectation. 2-week target. Plus 12.0% right pointing arrow $1.49. Probability 60%. 2-month target. Plus 39.0% right pointing arrow $1.85. Probability 65%. 2-year long-term target. Plus 185.7% right pointing arrow $3.80. Probability 75%. VPAR chart. Explanation. This is IMNN, as requested for analysis. The circled areas in the past and present are potential short-term trend, yellow consolidation and upward trend points. These points have a higher probability and potential return when they are near the swing line, white or medium-term line, orange. Each chart has its own wave trend and tension. Currently, after breaking through the medium-term resistance supply, it is in a state of reaching or being close to the swing and medium-term resistance supply levels. However, there is a possibility that the tension may decrease. So consider re-entry after checking the support trend or event timing within approximately 2 weeks. For specific entry points, please refer to the strategy scenario and report. VPAR rhythm analysis monthly rhythm. Breakout from low right pointing arrow large bullish candle right pointing arrow overbought bands. Exceeded upper dotted band right pointing arrow attempting pullback MACD. Bullish crossover right pointing arrow midterm strength intact. Weekly rhythm upper trap right pointing arrow consolidation in progress bands. Testing box center after exceeding upper box. RSI. Overbought right pointing arrow correcting daily rhythm. Large bullish candle right pointing arrow upper trap right pointing arrow consolidation bands. Testing Bollinger Center Band MACD. Divergence forming after sharp rise 60-minute rhythm. Upper trap right pointing arrow consolidating inside short-term box volume. Declining after spike right pointing arrow awaiting next move trap. Monitoring for breakout recovery. Financials Q1 2025 net loss. $4.1 million right pointing arrow continued losses minimal revenue right pointing arrow clinical stage company cash. $11.2 million right pointing arrow liquidity stable for next 12 months dilution risk. Possible future capital raises. News and risk summary news immunotherapy platform. Celsion, right pointing arrow positive institutional reports. Ongoing phase 1/2 clinical trials right pointing arrow FDA related optimism potential external biotech fund investment interest risks post rally overbought zone dilution risk. Convertible notes, warrants, potential delays in clinical progress. Strategy scenario bullseye entry buy in the $1.25 to $1.30 range. Bullseye targets. First target. $1.49, probability 60%. Second target. $1.85, probability 65%. Third target, long term. $3.80, probability 75%. Prohibited stop loss below $1.18 right pointing arrow trim half below $1.05 right pointing arrow full exit. Outlook, currently entering a post-breakout consolidation phase. Midterm bullish momentum remains valid, with clinical tech news likely to serve as triggers. Right pointing arrow box center support will be critical for confirming a next breakout. Deep report institutional flow. Recent small net buying by institutions short interest. Approximately 4.8% right pointing arrow average for high volatility biotech social trends. Keywords like clinical success, FDA approval hopes and breakout biotech trending. Summary IMNN is in a high volatility rhythm consolidation phase, with midterm breakout potential still valid. Right pointing arrow watch box center support right pointing arrow buy the dip strategy recommended, but caution is advised as current phase is still overbought. Griffin Digital Mining, GRIP. After consolidating, will it soar again? Hello, this is Top Trader Jinlog. You can check the details along with the chart on my blog. If you want continuous analysis, please subscribe or leave a comment. If you want to receive reports quickly, please choose the priority option. Summary checkmark. Is there a chance for a short-term breakout in the current rhythm? Let's analyze now. GRIP recently surged 442% in May following Bitcoin's rally and the American Bitcoin merger news, and is now forming a box consolidation phase after the breakout. Chart review. 60-minute. Upper box trap right pointing arrow retracement right pointing arrow retesting box top daily. Peak trap right pointing arrow consolidation near Bollinger middle band weekly. Breakout from lower box right pointing arrow strong bullish candle right pointing arrow mid consolidation monthly. Breakout from major low right pointing arrow large bullish candle right pointing arrow possible correction phase conclusion. Currently consolidating after high volatility. Box re-acceleration is possible, but confirming support at the center of the box is key. Investment opinion pushpin short term. Box consolidation right pointing arrow watch for buy the dip opportunities. Pushpin mid-term. High volatility phase right pointing arrow valid re-acceleration if box center holds pushpin strong correlation with Bitcoin. Potential repeat breakouts on news triggers right pointing arrow performance expectation. 2-week target. Plus 15.4% right pointing arrow $1.35. Probability 60%. 2-month target. Plus 42.7% right pointing arrow $1.67. Probability 65%. 2-year long-term target. Plus 218.8% right pointing arrow $3.73. Probability 70%. VPAR chart explanation. This is Griffin Digital Mining, GRIP, as requested for analysis. The circled areas in the past and present are potential short-term trend, yellow consolidation and upward trend points. These points have a higher probability and potential return when they are near the swing line, white or medium-term line, orange. Each chart has its own wave trend and tension. Currently after breaking through the medium-term resistance supply, it is above the swing trend weekly wave. While observing the process of absorbing short-term supply, consider it a point for potential swing entry. For specific entry points, please refer to the strategy scenario and report. VPAR rhythm analysis, monthly rhythm. Breakout from major low box right pointing arrow large bullish candle right pointing arrow potential correction bands. Exceeded upper dotted band right pointing arrow returning to box MACD. Bullish reversal right pointing arrow midterm strength remains weekly rhythm. Lower box breakout right pointing arrow bullish trap right pointing arrow consolidation bands. Approaching upper box right pointing arrow testing center support RSI. Cooling down after overbought. Daily rhythm. Peak trap right pointing arrow testing Bollinger middle band bands. Center test in progress. MACD. Bearish divergence right pointing arrow short-term pullback underway 60-minute rhythm. Upper trap right pointing arrow mid-box consolidation volume. Declining after spike right pointing arrow preparing for next move trap. Watching for recovery from recent trap. Financials Q4 mining revenue. Plus 4.2% right pointing arrow $3.85 million net profit. $0.4 million right pointing arrow turned positive debt reduction. $13 million Anchorage debt converted to equity cash. $0.735 million right pointing arrow liquidity risk remains. News and risk summary news American Bitcoin merger. Triggered 285% rally Cactus Energy acquisition. Building 4 gigawatts green mining infrastructure mining capacity expansion. Plus 22% planned risks Q1 EPS minus 0.089 right pointing arrow missed expectations insider selling, tilde $441,000. Ongoing net loss right pointing arrow FFO negative. Strategy scenario bullseye entry buy in the $1.10 to $1.15 range. Bullseye targets. First target, $1.35. Probability 60%. Second target, $1.67, probability 65%. Third target, long term, $3.73, probability 70%. Prohibited stop loss below $1.05, right pointing arrow trim half, below 88 cents, right pointing arrow full exit. Outlook, currently in a high volatility box with potential for re-acceleration. Since this stock is highly sensitive to Bitcoin price and news triggers, confirming support at the box center is essential before taking positions. The next breakout timing after this consolidation is key. Deep report institutional flow. Primarily volatility players, limited institutional positions, short interest, approximately 3.2%, decreasing trend, social trends, keyword surging, merger, American Bitcoin, crypto mining, breakout stock. Summary grip remains in a high volatility rhythm with valid breakout potential. Strong correlation with Bitcoin and merger news could trigger the next surge. Watch the box center level for optimal buy entry. Coupang, CPNG. Is it time to buy? Will the rhythm lead to a breakout above $32? Hello, this is Top Trader Jinlog. You can check the details along with the chart on my blog. If you want continuous analysis, please subscribe or leave a comment. If you want to receive reports quickly, please choose the priority option. Summary checkmark. Where is the key rhythm zone this time? Check the points below. Coupang recently entered a re-acceleration attempt phase after a 52-week high breakout and slight pullback. Technically, both monthly and weekly charts show a consolidation at the upper rhythm box, with an attempt to expand upward. Fundamentally, improving EBITDA margins, share buyback news and odd growth support the midterm bullish momentum. Investment opinion, pushpin short term. Wait and buy on dips, right pointing arrow focus on rhythm, consolidation phase, pushpin midterm. Upward trend potential remains valid. Pushpin likely to repeat breakout phases driven by news policy catalysts. Right pointing arrow performance expectation 2-week target. Plus 4.2% right pointing arrow $29.65. Probability 60% 2-month target. Plus 2.5% right pointing arrow $32. Probability 70%, 2-year long-term target. Plus 2.8% right pointing arrow $43.50. Probability 80%. VPAR chart explanation. This is the Coupang chart, CPNG, as requested for analysis. The circled areas in the past and present are potential short-term trend, yellow consolidation and upward trend points. These points have a higher probability and potential return when they are near the swing line, white or medium-term line, orange. Each chart has its own wave tension and trend. Currently, it has clearly transitioned to a long-term trend yearly wave since April 2024 and is showing an upward sloping box pattern centered around the medium-term resistance, supply. When the short-term swing deviation correction is complete, there is a possibility of a sharp upward move, shooting, if an event occurs. If it breaks below the current support box, consider it a point to enter the medium-term resistance supply box. VPAR rhythm analysis, monthly rhythm, testing upper box trap zone, right pointing arrow, watching for re-acceleration bands. Approaching upper dotted band, right pointing arrow expansion potential remains valid. Momentum. RSI MACD holding strong, right pointing arrow midterm bullish weekly rhythm. Box breakout, right pointing arrow current consolidation bands. 20 EMA, 60 EMA in bullish alignment, right pointing arrow ready for further upside after pullback volume. Consistent inflow, right pointing arrow bullish signal, daily rhythm. Rise, right pointing arrow consolidation, right pointing arrow early re-acceleration bands. Mid-box consolidation, upper test, ongoing MACD. Bullish crossover, right pointing arrow rebuy zone approaching 60-minute rhythm. Failed breakout, right pointing arrow currently consolidating within short-term box volume. Decreasing right pointing arrow momentum, rebuilding needed trap, upper trap formed. No full pullback, right pointing arrow re-entry valid. Financials revenue growth continues, $7.9 billion. Plus 11% EBITDA margin improved to 4.8%, net profit positive, $154 million, strong liquidity, $6 billion cash. News and risk summary. News, $15 billion credit secured, right pointing arrow enhances growth flexibility. $1 billion share buyback, right pointing arrow supports shareholder value. Coupang play showing strong growth, right pointing arrow expanding odd base risks. Insider selling reported, right pointing arrow may cause short-term sentiment dip, global expansion costs increasing. Strategy scenario, bullseye entry, buy in the $27.80 to $28.20 range. Bullseye targets. First target, $29.65. Probability 60%. Second target, $32. Probability 70%. Third target, long term, $43.50. Probability 80%. Prohibited stop loss below $26.90. Right pointing arrow trim half position below $25.50. Right pointing arrow full exit. Outlook. A new re-acceleration phase is unfolding after consolidation. The midterm bullish momentum remains valid, supported by fundamental drivers. Watch the next 2 to 4 weeks for potential breakout above key resistance zones. Deep report institutional flow. Foreign net buying continues, institutional selling slowing, short interest reduced to approximately 1.1%. Social trends. Positive keywords on Coupang play, share buyback 52-week high. Summary. Coupang remains in a midterm bullish rhythm. Current phase offers a buy the dip opportunity, with potential for re-acceleration in coming weeks. Can Joby Aviation soar above $10 again? eVTOL commercialization hopes versus rhythm in convergence phase? Hello, this is Top Trader Jinlog. You can check out this report with full charts on my blog. For continuous analysis, feel free to subscribe or leave a comment. If you want priority access to reports, please choose the priority processing option. VPAR chart explanation. This is Joby Aviation, Joby NYS, as requested for analysis. The circled areas in the past and present are potential short-term trend, yellow consolidation and upward trend points. These points have a higher probability and potential return when they are near the swing line, white, or medium-term line, orange. Each chart has its own wave tension and trend. Currently, it is showing a trend of short-term swing trend conversion above the medium-term monthly wave resistance supply level. With the closing price above the short-term line, this stock is being considered for trading within a box range or entering for a swing trade, looking for a re-establishment on the short-term line or a return to a box pattern. Investment opinion: pushpin short-term wait and buy on dips, right pointing arrow focus on rhythm convergence phase. Pushpin medium-term upward trend potential remains valid. Pushpin potential for repeated surge cycles driven by commercialization news policy support. 2-week expected return plus 5.3% right pointing arrow $8.55. Probability 68%. 2-month expected return plus 14.2% right pointing arrow $9.27. Probability 63%. 2-year long-term target plus 67.9% right pointing arrow $13.63. Probability 52%. Summary: Joby Aviation is gaining traction with recent MO in Saudi Arabia, additional Toyota investment, and supportive Trump executive order. Technically, monthly weekly charts show rhythm convergence. Daily 60 minutes charts indicate an attempt to break out of short-term consolidation. Avoid chasing highs, rather employ a buy on dip strategy within the current range. VPAR rhythm analysis: full moon monthly resistance confirmed at $11 level, right pointing arrow price returning to mid-range box. Rhythm moving from convergence, right pointing arrow incomplete acceleration, right pointing arrow back to convergence. Strong support around $6.80 to $7.00 range. Green circle weekly acceleration, right pointing arrow trap, right pointing arrow ongoing convergence and consolidation. Bandwidth narrowing, right pointing arrow potential for re-expansion detected. Key support $7.007.30. Resistance $9.209.50. Blue circle daily recent sharp rise, right pointing arrow overbought reset, right pointing arrow now in box range consolidation. MACD attempting to turn up from lows. RSI neutral. Momentum needed. Box center $8.008.40. Breakout above $9 needed for strong uptrend. Purple circle 60-minute trap confirmed, right pointing arrow retested lows, right pointing arrow attempting breakout post-convergence. Currently in mini convergence. Breakout could trigger swift upside move. Intraday focus on breakout above $8.20. Financials net loss continues. $608 M Q1 2025, right pointing arrow deep in red. Cash reserves $812 million, right pointing arrow very strong short-term liquidity. Debt-free, right pointing arrow zero leverage. Sustained investment required until commercialization phase is reached. News and risk summary: Saudi Mo with Abdul Latif Jamil, right pointing arrow up to 200 EVTOL units. $1B potential value. Trump administration executive order boosting EVTOL sector. Clear policy tailwind. Toyota $250 million additional investment, right pointing arrow strong support for manufacturing and certification. Key technical milestone. Successful test flight of 2 EVTOLs simultaneously. Warning risks: potential delays in FAA certification process. Uncertainty over exact commercialization timeline. Potential for renewed overvaluation concerns. Strategic scenario: bullseye entry, initiate buys at $7.90 to $8.15 zone. Consider adding on dips towards $7.50, $7.70. Bullseye targets: first target, $8.90. Probability 68%, second target, $9.50. Probability 63%, long-term target, $13.63. Probability 52%, prohibited stop-loss cut position if closing below $7.20. Outlook: when technology surpasses imagination, the market often anticipates the change first. Joby Aviation remains a visionary growth stock with both high potential and high risk. From a RHYTHMIX perspective, it is now in a phase of stepwise consolidation rather than immediate breakout. Policy momentum and industry tailwinds remain supportive. Gradual medium-term accumulation is a valid approach. Deep dive: institutional flows. Net buying detected over past 2 weeks, right pointing arrow institutional interest gradually increasing. Short interest 13.5%, right pointing arrow relatively high, right pointing arrow potential for squeeze remains. Social trends: EVTOL mentions rising for 4 consecutive weeks, right pointing arrow increasing public interest. Positive buzz particularly around Saudi US Japan Toyota collaboration. His report is based on VPAR rhythm analysis and is for informational purposes only. Investment decisions are at your own risk. Updates will be provided if significant trend changes occur. Roblox. Is this the top or just the start of a bigger move? Hello, this is Top Trader Jinlog. When the market converges on a zone, multiple technical signals align, and that one critical entry or resistance point can shift everything. VPAR is a rhythm-driven report that visually captures these key market moments so you can navigate with precision. You can view charts and breakdowns on the blog. For more stock requests, feel free to comment or message anytime. VPAR chart explanation: this is Roblox, RBLX NYS, as requested for analysis. The circled areas in the past and present are potential short-term trend, yellow consolidation and upward trend points. These points have a higher probability and potential return when they are near the swing line, white or medium-term line, orange. Each chart has its own wave tension and trend. Currently, it is in the process of transitioning to a medium-term, weekly wave trend from the top of the weekly box. With the medium-term, monthly wave trend still in place, the short-term trend is continuing, and if there is a break due to market influences, consider potential buying points at the weekly resistance around 75, and the monthly resistance around 65. Lightbulb Investment Opinion Roblox, RBLX, posted a solid Q1 surprise and continues its momentum through a blend of platform growth and monetization expansion. Technically, the stock recently hit a 52-week high and is now in a short-term overbought zone, but trading volume and order flow remains strong, suggesting potential for further upside after this pause. 2-week target plus 5.7% right pointing arrow $91, prob 68% 2-month target, plus 102.9% right pointing arrow $97.25, prob 64% long-term target, plus 304.1% right pointing arrow $115.40, prob 59%. Brain summary momentum brings peaks and peaks bring rest, but this pause might be preparation for the next leg higher. Chart signals suggest the rhythm isn't done yet. Paperclip key takeaways: MACD has peaked but structure remains intact, support holding near short-term center line, RSI cooling down post-peak right pointing arrow, possible re-acceleration breakout above $89.50 could trigger next wave toward $97 plus. Bar graph VPAR analysis, visual phase alignment rhythm, time frame structural summary, blue circle monthly MACD wide expansion, RSI overbought right pointing arrow consolidation phase, yellow circle weekly 3-wave rally cooling off, center support at $84. Holding orange circle daily $85 to $86 range forming box support. Volume declining red circle 120-minute short-term consolidation above key moving averages. Right pointing arrow current rhythm structure. Overheat right pointing arrow compression right pointing arrow potential expansion right pointing arrow breakout above $89.50 would validate next impulse leg. Upward trend rhythm analysis technical indicator rhythm hourglass monthly rhythm RSI still above 70 right pointing arrow extreme zone MACD peaked. Now stable long-term center line at $68 per resistance around $96.20 downward trend weekly rhythm, MACD slowly reverting, $84 support reaffirmed, slight divergence but not broken yet. Stopwatch daily rhythm boxed consolidation between $85.05 to $86.05 MACD tapering off after expansion volume. Declining right pointing arrow calm before movement, 1 o'clock 120-minute rhythm, short-term trend remains upward RSI rebounding from mid-40s checkmark pattern match. 5 of 6 prior setups showed breakout right pointing arrow AVG plus 6.2% in 3 to 6 sessions. Moneybag financial highlights metric value pushpin comment, Q1 FY25 revenue $1.035 billion, plus 29% beat expectations, strong growth EPS minus 32 cents versus minus 40 cents est. Net loss narrowed, improved margins, daily active users, DO, 97.8M plus 26%, growing user base engagement hours 21.7 B hours, plus 30%, strong user stickiness, free cash flow $427 million, plus 123% excellent cash generation and reinvestment potential. Newspaper news and risk summary pushpin FY25 bookings guidance raised to $5.28 billion. $5.36 billion pushpin partnership with Google to integrate reward-based ads pushpin, $282 million paid to developers in Q1 alone. Warning RSI in overbought territory, right pointing arrow risk of minor corrections, warning highly sensitive to gaming metaverse industry sentiment. Bullseye strategy scenario plus simulator small diamond entry zone $84.50 to $86.50 right pointing arrow strong support near short-term center line. Prob 69% bullseye target zones, first target $91, prob 68% second target $97.25, prob 64% long-term $115.40 prob, 59% prohibited stop loss or risk strategy if price drops below $82.50. Structure breaks right pointing arrow exit immediately if accompanied by volume increase upward trend pattern simulator, 7 out of 10 pattern matches hit target AVG return, plus 7.4% within 5 to 6 trading days. Most reach target after MACD wide restart. Rainbow outlook rhythm doesn't vanish, it reorganizes. Roblox's monetization and platform data speak for themselves, and the chart rhythm reflects it. What looks like stillness might be preparation. Don't mistake silence for weakness. Paperclip structural summary MACD expansion cooling, RSI softening price holds above center line equals bullish setup $89.50 breakout zone triggers new wave, higher timeframe momentum remains intact. Porch Group, is this pullback over? A familiar structure reappears. Hello, this is Top Trader Jinlog. There are critical zones where market attention converges, and where technical signals align to mark a precise point, recognizing that one rhythm, support or resistance, can change your risk, reward, and probability. VPAR is a rhythm-based analysis that visualizes those key moments with precision. You can check the charts and reports on our blog. If you'd like more stock breakdowns, just leave a comment or request. VPAR chart explanation. This is Porch Group, PRCH NAS, as requested for analysis. The circled areas in the past and present are potential short-term trend, yellow consolidation and upward trend points. These points have a higher probability and potential return when they are near the swing line, white, or medium-term line. orange, making them high probability, high return entry points. Each chart has its own wave tension and trend. Currently it is in a medium-term monthly wave trend with good tension. After breaking below the short-term trend daily wave and reaching the swing trend weekly wave near the 8.5 resistance supply level, consider buying by checking if it holds support there, observing the minute chart turning flow, and considering the turning flow if Nasdaq corrects further around 20,850. If it breaks below the current support, consider it a potential rebuying point at the 6.5 medium-term resistance supply level. Investment opinion: Porch Group, PRCH, a high-volatility small-cap stock, is currently in a pullback phase after a major rebound both technically and structurally. This phase matches a previous MACD-wide expansion pattern, and the company has shown signs of financial recovery with a surprising profit turn. 2-week target, plus 12.5% right pointing arrow $10.60. Prob 69% 2-month target, plus 26.8% right pointing arrow $11.95. Prob 62% long-term target, plus 63.2% right pointing arrow $15.40. Prob 55%. Summary: the market cooled off after a rapid surge, but now the rhythm is compressing again, readying for a second wave. This pullback could be the setup before the next structural move. Paperclip key takeaways: technical pullback after MACD-wide expansion, $8.90 to $9.20 support zone showing repeated holding behavior pattern structure, aligns with previous recovery scenarios. Debt restructuring plus earnings surprise are dual catalysts. VPAR analysis: visual phase alignment rhythm, timeframe visual structure summary: blue circle monthly breakout followed by pullback. Support forming at $8.20 to $9 yellow circle weekly first retest of center line after surge. MACD structure still valid orange circle daily sideways movement above short-term center line. Compression forming red circle 120-minute short-term trend remains positive. MACD showing bottoming signs right pointing arrow overall structure. Compression right pointing arrow expansion phase emerging right pointing arrow breakout above $9.70 could trigger momentum up to $11.95 plus. Rhythm analysis: technical indicator rhythm, hourglass monthly rhythm re-entering support zone with MACD beginning a bullish hook. RSI normalized after overbought phase, $8.20, serves as a long-term price anchor. Downward trend weekly rhythm resistance near $11.90 per support. At $9.20, MACD expanded and cooled. Currently in reset mode, RSI bouncing from lower mid-zone, stopwatch daily rhythm. MACD narrowing post-surge, volume declining short-term trend remains intact. Yellow line, $8.90 to $9.20 zone supports rhythm continuation. 1 o'clock 120-minute rhythm, short-term trend is aligned upward. MACD bottoming with RSI rebounding checkmark pattern match. 4 of the past 5 similar structures saw plus 12.4% gains within 5 to 7 trading days. Financial highlights: metric value pushpin commentary FY25 Q1 revenue $104.7 million versus EST $79.3 million. Strong beat, signals revenue rebound EPS 8 cents versus EST minus 10 cents. Turn profitable, margin improving. Total debt $409.2 million, still high, but being refinanced. Total assets $802.3 million. Debt to asset ratio remains a concern. Customer growth expanding, boosted by WA performance in Texas. News and risk summary: Pushpin converted 2026 debt into 2030 convertible bonds. Pushpin WA subsidiary achieved top regional insurance performance. Warning: debt burden remains above industry average. Warning: failure to hold structure may lead to reversion to lower range. Strategy scenario plus simulator: small diamond entry zone $8.90 to $9.20 right pointing arrow multi-time frame support. Structure match. Prob 71% bullseye target zones: first target $10.60. Prob 69% second target $11.95. Prob 62% long term $15.40. Prob 55% prohibited stop loss or risk plan break below $8.60 would invalidate short-term structure. Right pointing arrow immediate exit if volume confirms breakdown. Upward trend simulator analysis: 7 of 10 historical matches hit the first target. AVG gain plus 13.2% within 5 to 8 sessions. MACD wide re-expansion confirmed on lower timeframes. Outlook: rhythm builds silently when the noise fades. Porch Group is aligning both technically and financially for a shift. This moment may echo a previous setup, and the next move might already be in motion. Paperclip technical summary: MACD-wide expansion setup reappears. Repeat pattern match success rate greater than 70%. Compression phase resolving near $9.20. Above $9.70 equals breakout confirmation into upper rhythm zone. Viva Systems. Is this pullback just the beginning of a new trend? Hello, this is Top Trader Jinlog. In the markets, there are zones where momentum, chart structure, and multiple signals converge. Recognizing those precise points of support or resistance can shift the odds and the returns. RHYTHMIX is a rhythm-based analysis report that visualizes those structural entry points with clarity. You can explore the visual charts and details on our blog. Request more stock breakdowns anytime via comments or messages. VPAR chart explanation: this is Viva Systems, VIV NYS, as requested for analysis. The circled areas in the past and present are potential short-term trend, yellow consolidation, and upward trend points. These points have a higher probability and potential return when they are near the swing line, white, or medium-term line. orange. Each chart has its own wave tension and trend. Currently, it is showing a trend of slight acceleration at the beginning of the medium-term trend, monthly wave, and trading within an upward sloping box with relatively small fluctuations is being considered. Consider trading based on the short-term line, or consider buying on dips around 240 to 250 if it breaks below the short-term line after an upward move, or if it breaks below the short-term line. Light bulb investment opinion Viva Systems, VIV, is regaining attention with renewed momentum fueled by its expanding presence in AI-integrated healthcare SaaS. Technically, the price has entered a reconsolidation zone supported by key rhythm structures. Past breakout patterns and current retests resemble prior successful expansions. 2-week target, plus 6.1% right pointing arrow $296. Prob 67% 2-month target, plus 14.3% right pointing arrow $319. Prob 64% long-term target, plus 34.8% right pointing arrow $376. Prob 57%. Brain summary, right now, the chart may seem calm, but a new rhythm is forming beneath the surface. VEEV is aligning for a renewed move as it finds structural support in a familiar zone. Paperclip summary points. Confirmed support along the daily weekly center lines, MACD-wide crossover, and moving average alignment re-emerging, $278 to $282, acts as a recurring inflection point across multiple timeframes, breakout beyond $296, could extend toward $310 to $320 zones. Bar graph VPAR analysis, visual phase alignment rhythm, timeframe interpretation blue circle monthly pullback after breakout. Testing the upper band with support near $260, yellow circle weekly Bollinger middle band support holding, structure aligns for re-expansion, orange circle daily consolidating above $278 support, re-entry pattern building, red circle 120-minute, recovering from pullback with MACD crossover emerging right pointing arrow visual rhythm structure, shows expansion possibility upon break of $290 right pointing arrow potential upside to $305 to $319 if momentum holds. Upward trend rhythm analysis technical indicator rhythm, hourglass monthly rhythm support at $260 remains valid RSI reset from overbought. MACD beginning upward hook Bollinger upper band structure suggests expansion pause and reset. Downward trend weekly rhythm MACD recovering after short consolidation resistance near $305.20. Support between $278 to $282. RSI returning above 55 may support the bounce. Stopwatch daily rhythm center line support confirmed at $278 to $282. Band contraction complete. Preparing for expansion volume fading, suggesting accumulation rather than exit. 1 clock 120-minute rhythm, moving averages realigning upward MACD-wide crossover in early stage checkmark pattern match. 6 of 7 historical setups in this rhythm led to plus 7.8% AVG gain within 6 to 8 trading sessions. Moneybag financial highlights metric value pushpin comment, FY25 Q1 revenue, $650.6 million. Plus 1.6% solid YoY growth validates SaaS stability. Net income, EPS, $161.6 million per $1.15, beat expectations with improving margins. FY25 EPS guidance, $4.77 to $4.84. Forward outlook remains conservative but realistic. Customer retention rate 124%. Upselling and renewals remain strong. Gross margin, 73.1% above industry average for SaaS efficiency. Newspaper news and risk summary. Pushpin launch of Viva AI Health Suite with early contracts signed. Pushpin expanded CRM plus LLM integration across US and EU markets. Warning competitive pressure from Salesforce Health Cloud intensifying. Warning potential margin impact from upcoming data regulation. Bullseye strategy scenario plus simulator small diamond entry zone $278 to $282 right pointing arrow key technical and rhythm support level. Prob 69%. Bullseye target zones, first target, $296. Prob 67% second target, $319. Prob 64% long-term target, $376. Prob 57% prohibited stop loss or risk response $273. Breakdown may signal rhythm reset right pointing arrow watch for volume drop as confirmation of reversal upward trend simulator pattern match in past 10 similar patterns. 7 achieve the primary target, AVG return, plus 7.1% within 6 to 8 sessions, peak momentum zones often reached after MACD-wide reactivation. Rainbow outlook before the market surges, rhythm usually resets, quietly. Viva is not just evolving tech, it's mastering the flow of healthcare data. Now may be one of those rare setup points, where the next beat is already on its way. BWXT's nuclear momentum, temporary rally or structural breakout, BWXT NYS report. Hello, this is Top Trader Jinlog. You can view the report conveniently with charts on the blog. For ongoing market analysis, feel free to subscribe or leave a comment. VPAR chart explanation. This is BWX Technologies, BWXT, as requested for analysis. The circled areas in the past and present are potential short-term trend, yellow consolidation and upward trend points. These points have a higher probability and potential return when they are near the swing line, white or medium-term line, orange. Each chart has its own wave tension and trend. Currently, it has re-entered the medium-term line after breaking below it and is in a short-term trend. If it holds support at 116, we can see the possibility of an upward-sloping box pattern within the medium-term monthly wave trend again. There is currently a gap with the short-term line. Consider trading for further upside during a correction close to the short-term line above 130, or if it breaks below the short-term line, consider it a potential buying point on a dip at 116. Investment opinion: BWXT is benefiting from a structural shift in U.S. energy policy and steady financials, positioning itself for continued upside momentum. 2-week expected return, plus 6.7% right pointing arrow, $136.60. Probability 68%. 2-month expected return, plus 4.8% right pointing arrow, $147. Probability 62%. 2-year long-term target, plus 41.4% right pointing arrow, $181. Probability 58%. 1. Summary: BWXT is rallying on expectations tied to U.S. nuclear infrastructure initiatives. The current overbought condition could bring a short-term cooldown. Medium-term rhythm remains intact and structure is bullish. 2-bar graph VPAR interpretation: visual phase alignment rhythm, blue circle monthly, Bollinger top breakout, followed by cooling period, yellow circle weekly, post 3-wave rally, in consolidation, breakout retest possible, orange circle daily. Trading between $120 to $128, consolidation zone, red circle 120 minutes. Still aligned in short-term uptrend, overextension likely to ease conclusion, overbought short-term, but rhythm remains bullish, right pointing arrow re-entry possible on dip, $125 key zone to watch. 3. Upward trend RHYTHMIX rhythm analysis, hourglass monthly strong top expansion in Bollinger Bands RSI in overbought region. $130 plus may trigger soft pullback, trend line support in $113 to $117 zone. Downward trend weekly momentum high. MACD topping positive alignment of trend lines. Watch for pullback if $125 is broken. Resistance at $138.20. Stopwatch daily center line holding at $124.05 to $126.05. Volume thinning in consolidation, still respecting structure. Re-acceleration possible on breakout 1 o'clock 120-minute, short-term trend intact, with slight MACD reset. Narrowing consolidation may lead to breakout price above $127, could trigger short-term rally extension. 4. Moneybag financial overview Q1 2025 revenue. $682.3 million, plus 13% YoY. Net income, $75.5 million. Adjusted EBITDA, $129.8 million. EPS, 91 cents. Beat expectations. 2025 guidance. EPS range of $3.40 to $3.55 maintained. 5. Warning news and risk summary: U.S. executive order boost nuclear infrastructure momentum. Acquisition of Connectrix Inc. to enhance nuclear services and radiopharmaceutical reach. Nuclear regulatory risks remain. High price perception may prompt short-term profit-taking. 6. Brain strategy scenario: bullseye entry zone, $124 to $127. Right pointing arrow, strong structural support plus rhythm consolidation zone. Probability 69%. Bullseye targets: target 1, $136.60. Probability 68%. Target 2, $147. Probability 62%. Long-term, $181. Probability 58%. Supported by structural trend plus policy flows. Prohibited stop loss or response drop below $121 may signal structural weakness. Right pointing arrow if accompanied by falling volume. Initiate defensive exit. Probability 76%. 7. Rainbow outlook: emotional rhythm commentary. Policy provides the direction. Rhythm turns that direction into conviction. BWXT may be taking a short breath, but it's aligned with a much larger trend: nuclear renaissance. 8. Puzzle piece deep dive report: member-only pushpin institutional flow. BlackRock, State Street showing net buys $100 million plus net institutional inflow in past 4 weeks. Pushpin AI forecasting Danilfin AI score, 6.5, 10. Buy bias: 3-month outperformance probability, 41.2%. Pushpin industry trends: U.S. nuclear projects expanding in energy plus defense sectors, growing importance of space nuclear propulsion and microreactors. Pushpin analyst target price, average price target, $145 to $152. New high-end analyst target raised to $160. Microvast battery surge, end of the rally or just the beginning? MVST NAS report. Hello, this is Top Trader Jinlog. You can conveniently view the full content along with charts on the blog. For continuous market analysis, feel free to subscribe or leave a comment. VPAR chart explanation: this is Microvast MVST NAS, as requested for analysis. The circled areas in the past and present are potential short-term trend turning points. Consolidation coupled with an upward trend represents a trading entry point. Each chart has its own wave pattern trend. Currently, it is showing a state of convergence and good upward tension among the short-term, swing, and medium-term support and trend lines, displaying a positive upward wave. Consider trading near the short-term line, or if it breaks below the short-term line, consider potential buying points on dips around 2.9 or 2.4. Lightbulb investment opinion: Microvast continues to attract market attention thanks to its battery tech diversification, manufacturing expansion, and strong revenue recovery. 2-week return target, plus 1.5% right pointing arrow $5.09, probability 70%, 2-month return target, plus 8.9% right pointing arrow $6.24, probability 64%, 2-year long-term target, plus 140% right pointing arrow $10.05, probability 74%. 1. Summary: after short-term overheating, MVST is entering a technical cooldown. It has broken above a multi-year consolidation range. Revenue momentum and global demand remain positive catalysts. 2-bar graph VPAR interpretation, visual phase alignment rhythm, blue circle monthly. Breakout from multi-year bottom base, $1.10 to $2. Yellow circle weekly. Trend merge zone breakout, 2.50 to 2.90. Now consolidating, orange circle daily. Holding the $4 to $4.15 support zone, red circle 120 minute. Short-term momentum pullback and MACD convergence near re-acceleration conclusion. All chart layers realigned right pointing arrow potential breakout if volume confirms. 3. Upward trend RHYTHMIX rhythm analysis hourglass monthly breakout from long-standing base structure. First bullish candle above resistance room to expand towards $6. Downward trend weekly strong impulse candles followed by pullback MACD neutral. RSI cooling key support range. $3.95 to $4.10 stopwatch daily consolidation under dotted resistance zone sideways within $3.85 to $4.75 volume and OBV stable. Momentum easing 1 o'clock 120 minute technical consolidation right pointing arrow breakout setup MACD aligning for golden cross breakout above $4.30 would signal renewed momentum. 4. Moneybag financial overview Q1 revenue $116.5 million plus 43.2% YoY net income. $61.8 million right pointing arrow turned profitable EBITDA, $28.5 million per gross margin, 36.9% manufacturing base, US, Germany, China. 5. Warning news and risk summary, DOE grant cancellation event resolved, signed supply deals with European OEMs, over-reliance on Chinese production remains, geopolitical risk, legacy volatility, still impacts investor sentiment. 6. Brain strategy scenario bullseye entry zone, $3.95 to $4.15 right pointing arrow support zone, near consolidation bottom. Probability 72%, bullseye target zones, target 1. $5.09, probability 70%, target 2. $6.24, probability 64%, long-term target. $10.05, probability 74%. Fibonacci 1.618 extension prohibited stop loss or response break below $3.65 may invalidate rhythm structure right pointing arrow cut losses if volume plus trend line both break. Probability 78%. 7. Rainbow outlook, emotional rhythm commentary. The shadows of the past were long, but light always rises from the deepest lows. Microvast has completed its technical reset and prepares for its second wave. Price shows speculation, but rhythm reveals conviction. 8. Puzzle piece deep dive report. Member-only Pushpin institutional flow. Vanguard and BlackRock reported fresh entries, short interest declining. Now approximately 8.4%. Pushpin AI forecasting. Danilfin AI score. 0.7 buy bias expected 1 month outperformance probability. 58.2% Pushpin industry trends. Commercial EV battery competition heating up. High sensitivity to US-EU battery subsidies. Pushpin analyst target price consensus range. $5.70 to $6.80. Recent upgrades to strong buy. Coinbase, does the uptrend hold amid security setbacks? Coinbase Global Coin Nas report. Hello, this is Jinlog, your top trader. You can check the full report with charts on the blog. If you'd like ongoing stock coverage, feel free to subscribe or drop a comment. VPAR chart explanation. This is Coinbase Global, Coin Nas, as requested for analysis. The circled areas in the past and present are potential short-term trend turning points. Consolidation coupled with an upward trend represents a trading entry point. Each chart has its own wave pattern trend. Currently, after continuing the short-term trend, it is showing demand at the medium-term resistance supply level, indicating the possibility of a slight correction dip for approximately 2 weeks. Unless there is a breakthrough due to strong demand, consider it a potential buying point for a rebound at 250 during a slight dip, and at 225 during a further dip. Investment opinion. Coinbase is supported by multiple bullish catalysts. Bitcoin all-time highs, the Deribit acquisition, and inclusion in the S&P 500. Despite a recent cybersecurity incident, the technical rhythm still shows valid continuation potential. 2-week expected return, plus 6.2% right pointing arrow $281.60, probability 67%. 2-month expected return, plus 13.4% right pointing arrow $301.20, probability 60%. 2-year long-term target, plus 35.2% right pointing arrow $358.70, probability 45% right pointing arrow based on Fibonacci 1.618 extension. 1. Pushpin summary. Acquired Deribit to strengthen its crypto derivatives business, growing subscription and stablecoin-based revenue. Recent cybersecurity breach led to temporary stock dip. Chart rhythm suggests consolidation after sharp rally, preparing for another leg up. 2. Upward trend RHYTHMIX technical rhythm analysis. Hourglass monthly rhythm broke out of long-term range. now consolidating near resistance touched upper Bollinger Band right pointing arrow, now holding above $241, price centered around the middle of the long-term rhythm zone, downward trend weekly rhythm strong candles over 3 weeks followed by sideways pullback yellow, rhythm lines are converging for potential re-acceleration, MACD flat-topped, RSI resetting from overbought levels holding support at $247 to $252 increases rebound probability, stopwatch daily rhythm trading within a $241 to $276 box. Testing upper end, currently sitting near pivot point, 265.4, post-consolidation OBV remains resilient. RSI stochastic signals resetting 1 o'clock 120-minute rhythm compression after short-term overextension. MACD recently crossed bullish and moving sideways. A break above $269 could trigger a short-term surge. 3. Bar graph financial overview. Q1 revenue $2 billion, plus 24% YoY. Net income, $65.6 million. Transaction fee revenue fell 19%. Subscription revenue up 9%. Deribit acquisition, $2.9 billion. Diversifies growth beyond trading. 4. Warning news and risk summary. Security breach in May affected 70,000 accounts. Right pointing arrow short-term risk. S&P 500 inclusion. Right pointing arrow likely ETF inflow. Circle IPO. Coinbase hold stake. Could boost USDC exposure. Ongoing regulatory uncertainty and valuation concerns remain. 5. Brain strategy scenario. When, why, how much. Bullseye entry zone $258 to $266. Right pointing arrow valid re-entry zone near pivot. Watch for volume rebound. Probability 67%. Bullseye target zones. Target 1. $281.60. Probability 68%. Target 2. $301.20. Probability 60% long term. $358.70. Probability 45%. Right pointing arrow Fibonacci 1.618 extension shield stop loss or reaction below $247. Right pointing arrow breakdown of rhythm zone with volume could invalidate setup. Probability 74%. 6. Rainbow outlook. Coinbase is navigating a minor storm amid a larger bullish sea. The short-term security issue has paused momentum, but the underlying rhythm remains strong. When price tells a story, rhythm sets the tempo. Price may react to news, but rhythm confirms conviction. 7. Puzzle piece member-only extended report. Pushpin institutional flows. BlackRock and others increased Q1 holdings. S&P 500 inclusion boosts passive flow potential. Pushpin AI sentiment. Danilfin AI score 0.6, 3-month outperformance probability 42.5%. Right pointing arrow hold. Pushpin industry trends and partnerships. Deribit deal expands derivatives offerings. Toronto FC sports partnerships raise brand exposure. Circle IPO to boost USDC's institutional leverage. Pushpin analyst targets Wall Street average target $295.20 to $320 and rising. Denison Mines, is this pullback a setup? Hello, this is Jinlog, your top trader. You can check the full analysis with charts on the blog. If you'd like continuous stock coverage, feel free to subscribe or leave a comment request. VPAR chart explanation. This is Denison Mines, DNN AMS, as requested for analysis. The circled areas in the past and present are potential short-term trend turning points. Consolidation coupled with an upward trend represents a trading entry point. Each chart has its own wave pattern trend. Currently, after breaking through the short-term key point resistance at 1.52, it is showing a short-term trend daily wave. With the current demand in the uranium sector, it is challenging the medium-term resistance at 1.85 and showing the potential for a swing trend weekly wave conversion. If it touches this level and settles, anchors, hold the position. If it breaks below the short-term line, consider it a potential rebuying point around 1.55 to 1.6. Investment opinion. Denison Mines maintains strong liquidity and zero debt structure, positioning itself as a major beneficiary of the expanding uranium market. 2-week expected return, plus 14.1%. Right pointing arrow $1.94. Probability 68%. 2-month expected return, plus 30.5%. Right pointing arrow $2.22. Probability 60%. 2-year long-term target, plus 47.0%. Right pointing arrow $2.50. Probability 48%. Right pointing arrow based on Fibonacci 1.618 extension. 1. Pushpin summary. DNN holds a 95% stake in the Wheeler River Uranium Project in Canada. Strong cash balance, and over 2.2 M pounds of physical UO holdings. Sharp volume surge and institutional inflows suggest trend reversal potential. Rhythm structure indicates possible rebound phase initiation after pullback. 2. Upward trend. RHYTHMIX technical rhythm analysis. Hourglass monthly rhythm attempting to break out of long-term upper box range. Approaching Bollinger upper band. Watch for reclaim of $1.92 resistance. If OBV continues rising, long-term expansion rhythm may unfold. Downward trend weekly rhythm. Consecutive bullish candles confirm continuation expansion in price distance ratio and confirmed MACD upturn. Positioned at the second breakout box stage in RHYTHMIX structure. Stopwatch daily rhythm testing support in $1.65 to $1.72 range. MACD re-expansion plus RSI cooling from overbought levels. Reclaiming $1.94 will be key for further bullish momentum. 1 o'clock 120-minute rhythm rebounding after testing the key pivot point. 1.69 yellow line. Short-term rhythm beginning to accelerate, reclaiming volume, and Bollinger Center may trigger short-term surge. 3. Bar graph financials Q1 revenue, $1.17 million per net loss, $29.5 million, strong cash position with zero debt, holding 2.2 M pounds of UO potential upside with uranium price rally. 4. Warning news and risk summary, Wheeler River project nearing final investment decision. FID, strategic alliance with KOSPI Resources expands exploration capacity, risks, lack of near-term profitability, exposure to global interest rates. 5. Brain strategy scenario, when, why, how much, bullseye entry zone $1.65 to $1.72, right pointing arrow support, near pivot plus volume return equals valid reentry. Probability 68%, bullseye target zones first target, $1.94, probability 70%, second target, $2.22, probability 60%, long-term target, $2.50, probability 48%, right pointing arrow based on Fibonacci 1.618 extension shield stop loss or reaction breakdown below $1.58 may invalidate current rhythm, right pointing arrow quick exit or wait for realignment if this level fails. Probability 72%. 6. Rainbow outlook, Denison is entering a rebound phase with supportive rhythm, volume, and macro catalysts. With rhythm realignment underway, a follow-through move above the pivot may confirm a bullish continuation. When emotion wavers, rhythm recenters us. We don't chase price, we follow the pulse of rhythm. 7. Puzzle piece member-only extended report, Pushpin institutional flows, Van Eck Associates added 43.3% more shares in Q4, right pointing arrow. Now holds 20.87 M shares. Pushpin AI sentiment, Danilfin AI score. 0.5 probability of market outperformance in 3 months. 39.9% recommendation. Hold Pushpin industry signals uranium ETF allocation, increasing long-term beneficiary of clean energy transition. Pushpin analyst price targets, average Wall Street target, $2.50. Snowflake surges again. Can it sustain the $200 breakout rhythm? Hello, this is Top Trader Jinlog. You can view this analysis with full charts on the blog. For ongoing reports, feel free to subscribe or drop a comment. If you want faster insights, choose the priority review option. VPAR chart explanation. This is Snowflake Snow NYS, as requested for analysis. The circled areas in the past and present are potential short-term trend turning points. Consolidation coupled with an upward trend represents a trading entry point. Each chart has its own wave pattern trend. Currently, it is showing demand within the short-term trend and has broken through the medium-term resistance supply level. Consider trading based on the short-term daily wave trend, and if it breaks below, consider it a potential buying point starting from around 186. Investment opinion. Snowflake has surprised the market with strong Q1 performance and a raised full-year outlook. This latest surge over $200 signals a technical rhythm breakout and a fundamental validation of its renewed AI-driven cloud strategy. 2-week expected return, plus 6.5% right pointing arrow $217.50. Probability 68%. 2-month expected return, plus 15.2% right pointing arrow $235. Probability 61%. 2-year potential target, plus 37.9% right pointing arrow $281. Probability 48%. right pointing arrow Fibonacci extension 1.618 level. 1. Pushpin summary. Following a better than expected earnings report, Snowflake's price surged approximately 10% and re-entered the $200 plus psychological zone. This is the first time in 15 months that the stock is showing a clear rhythm re-acceleration pattern. MACD, volume, and Bollinger Band widening all support this being more than just a post-earnings spike. 2. Upward trend rhythm analysis. Small diamond monthly rhythm, mid-term bottoming structure is completed. First full-bodied bullish candle, reclaiming Bollinger mid-band rhythm shift from compression to expansion. Small diamond weekly rhythm key resistance at $193 has flipped into support. Bollinger dotted lines breaking upward with increasing slope. MACD is positive and diverging upward equals momentum confirmation. Small diamond daily rhythm, short and mid-term moving averages merged and realigned. Breakout from consolidation channel, $188 to $202. Completed RSI in bullish zone. MACD crossing confirms a new upward cycle. Fibonacci extension targets lie ahead in the $230 to $280 zone. Pushpin core point, $193. Key pivot and breakout base. Pushpin dotted resistance, $217 to $222. Primary rhythm barrier. Break confirms extended momentum. Pushpin trap potential. Minor pullbacks near $200 are expected, but rhythm holds above $193. 3. Bar graph financial overview. Market cap, $67.1 billion. Q1 revenue, $1.04 billion, plus 26% YoY. Adjusted EPS, 24 cents, beat estimate of 21 cents. GAAP net loss, $430 million, increased YoY. Full-year product revenue guidance, raised to $4.325 billion. 4. Warning news and risks. Snowflake announced stronger partnerships in AI via OpenAI and Anthropic integrations. Institutional target prices average at $218.17. Risks include high valuation, GAAP net loss, and potential rate-related tech corrections. Short-term overbought signals may cause temporary volatility. 5. Brain strategy scenario. When, why, how much. Bullseye entry zone $197 to $204.50. Probability 68%. Right pointing arrow recent breakout consolidation zone. Right pointing arrow RSI neutral bullish. Low risk re-entry near $200. Bullseye targets. First target, $217.50. Probability 68%, second target. $235, probability 61%, long-term target. $281. Probability 48%, right pointing arrow, Fibonacci extension, 1.618 level, shield stop loss. Response $192. Probability 73%, right pointing arrow, break below key support, would invalidate the bullish rhythm structure. 6. Rainbow outlook, Snowflake has re-emerged as a momentum tech stock with real earnings fuel. If the current rhythm holds above $200 and volume persists, we expect the next wave of institutional inflows to push the stock toward the $230-280 expansion zone. Price reflects belief, but rhythm proves conviction. 7. Puzzle piece member-only deep dive, Pushpin institutional flow, BlackRock, T. Rowe Price, increase their exposure post Q1, I-related ETF fund showing net inflows toward Snow, Pushpin short interest, currently at approximately 3.8%. Low, but could trigger minor squeeze, volatility risk moderate due to high institutional control, Pushpin sentiment and trend data, Google Trends. Snowflake AI, up plus 290% in the last 30 days, analyst upgrades from JP Morgan, Goldman Sachs post-earnings. Tempus AI, trend reversal or just noise, can this rhythm lead the tech surge? Hello, this is Top Trader Jinlog. You can explore the full chart and content on the blog. If you want consistent analysis, feel free to subscribe or leave a comment. To receive this report faster, choose the priority review option. VPAR chart explanation. This is Tempus AI, TEM-NAS, as requested for analysis. The circled areas in the past and present are potential short-term trend turning points. Consolidation coupled with an upward trend represents a trading entry point. Each chart has its own wave pattern trend. Currently, after breaking the short-term trend, there is a possibility of a price range box between 54 and 67. Until it breaks through within approximately a month, consider checking key dates, events, and trading within the box. If it shows a tendency to break below the 54 area, since the larger trend is an upward sloping box, it is a position to respond within the box after checking for support around 45. Investment opinion. Tempus AI, TEM, is rising on the back of booming biotech momentum. The recent breakout above $60 is not random. It reflects a shift in rhythm structure, aligned with revenue growth and market re-entry. 2-week expected return, plus 8.7%, right pointing arrow, $69.20. Probability, 67%. 2-month expected return, plus 22.5%, right pointing arrow, $78. Probability, 60%. 2-year return potential, plus 53.1%, right pointing arrow, $97. Probability, 46%. 1. Pushpin summary. After peaking at $91 post-IPO and falling more than 35%, Tempus AI has now re-entered a breakout phase. This new rhythm is supported by strong fundamentals and improving technical signals. It is approaching a consolidation to expansion inflection point, making it a high-potential early-stage trade setup. 2. Upward trend. RHYTHMIX rhythm analysis. Small diamond monthly rhythm. Early IPO breakout, right pointing arrow, long pullback, now attempting to rebuild rhythm from base structure. Monthly candles are recovering back toward the center line. Small diamond weekly rhythm, formed a $48 to $66 box structure. Recent re-entry into that range suggests second attempt breakout. Dotted resistance ahead, but volume shows potential for a push. Small diamond daily rhythm merging of short and mid-term moving averages, holding above the Bollinger centerline, stabilizing for a move, rebounded from Fibonacci retracement zone. 0.5 to 0.618 MACD near positive crossover. RSI neutral. Setup phase active. Pushpin core point, $59.20. Reclaimed key support inside the prior base. Pushpin dotted resistance, $65-67. Momentum trigger zone. Pushpin trap re-entry. Failed breakdown and reclaim rhythm pattern is in play. 3 bar graph financial overview. Market cap, $10.8 billion. Q1 revenue, $255.7 million, plus 75.4% YoY. FY revenue guidance, $1.25 billion, approximately, plus 80% YoY. Net loss, $68 million, still negative but stable. EBITDA, $16.2 million, improving. 4. Warning news and risks. AI partnerships with AstraZeneca, Pathos, institutional support from Google, SoftBank, Franklin Templeton. Warning risk from valuation, high PS ratio, and ongoing net losses. Warning high volatility can create emotional traps near resistance zones. 5. Brain strategy scenario. When, why, how much. Bullseye entry zone, $60 to $63.50. Probability 68%. Right pointing arrow just above the reclaimed centerline. Right pointing arrow moving average confluence and Fibonacci pivot. Adds confidence. Goal net targets. First target, $69.20. Probability 67%. Second target, $78. Probability 60%. Long-term target, $97. Probability 46%. Right pointing arrow based on Fibonacci expansion, 1.618 level. Shield stop loss. Risk management, $56.80. Probability 72%. Right pointing arrow below this. The bullish rhythm breaks. Right pointing arrow suggested for both position risk and emotional containment. 6. Rainbow outlook. Tempus AI shows potential rhythm recovery from consolidation. It reflects a second wave scenario that often catches early buyers by surprise. As long as rhythm structure holds, this name could lead the biotech resurgence. Tech stocks offer 2 chances. The first wave is scary. The second wave feels too late. 7. Puzzle piece member only deep dive. Pushpin institutional flow. backed by Google, Franklin Templeton, SoftBank. Recent holdings data shows increased accumulation, pushpin short interest approximately 7.3%, enough to fuel a potential short covering rally after breakout. Pushpin trend sentiment gaining inclusion in AI-focused healthcare ETFs, positive coverage across Forbes, Bloomberg, and AI TrendWatch portals. Cameco's $60 breakout. Is the uranium king back in rhythm? Hello, this is Top Trader Jinlog. You can explore the full chart and visual content on the blog. If you'd like consistent analysis, feel free to subscribe or leave a comment. To receive faster reports, please select the priority review option. VPAR chart explanation. This is Cameco, CCJ, as requested for analysis. The circled areas in the past and present are potential short-term trend turning points. Consolidation coupled with an upward trend represents a trading entry point. Each chart has its own wave pattern trend. Currently, there is a gap due to the supply and short-term trend that has broken through the 53 medium-term resistance support level. However, the minute chart flow still indicates a remaining trend, so consider buying on a dip near 54. Investment opinion. Cameco, CCJ, is one of the strongest names in the uranium sector, and its breakout above $60 marks a potential transition into long-term trend acceleration. This is not just a technical move, it's a rhythm shift backed by macro themes and strong volume. 2-week expected return, plus 9.6% right pointing arrow $65. Probability, 70%. 2-month expected return, plus 21.3% right pointing arrow $72. Probability, 62%. 2-year return potential, plus 48.0% right pointing arrow $88. Probability, 53%. 1. Pushpin summary. Cameco had been trapped in a $35 to $50 box range for nearly 2 years. Now, after a clean breakout with volume, it's entering a new rhythm expansion wave. The Bollinger Bands are expanding, and price has escaped a long-term range. We are currently observing the early stage of a re-acceleration pattern after the breakout. 2. Upward trend. RHYTHMIX rhythm analysis. Small diamond monthly rhythm broke out of a 2-year-long consolidation box. Rising volume and wider Bollinger Bands equals higher institutional attention. MACD is beginning to curve upwards with price strength above all moving averages. Small diamond weekly rhythm retest of core point. $52 confirmed support. Clean breakout of dotted resistance. $60 plus 2 consecutive bullish candles post-breakout signal rhythm continuation. Small diamond daily rhythm short and mid-term moving averages are aligned and expanding upward. Bollinger dotted top is widening, right pointing arrow confirming breakout momentum. Current zone $59.05 to $60.05 is a natural consolidation area. MACD histogram flipped positive plus RSI is overbought equals possible small pullback before second wave. Pushpin core point $52. Critical level that converted resistance into support. Pushpin dotted resistance $60 to $63. Minor obstacle before full breakout zone. Pushpin trap watch. Any pullback and reversal from $57 to $58 would be rhythmically bullish. 3 bar graph financial overview. Market cap $25.5 billion. EPS 57 cents. PE ratio 141x. Q1 revenue $549.6 million, plus to 4.4% YoY. Debt to equity 15.3%. Right pointing arrow solid and conservative. 4. Warning news and risk factors. Global uranium demand is driving the narrative. Despite Q1 earnings miss, revenue is solid, and trend remains intact. Short-term pullbacks may occur due to RSI overextension or news impact. Watch for macro policy shifts or sudden commodity sentiment reversals. 5. Brain strategy scenario. When, why, how much. Bullseye entry zone $57 to $60. Probability 71%. Right pointing arrow strong support. Near breakout level. Right pointing arrow Bollinger and MA merge zones validate risk-controlled entry. Goal. Net targets. First target $65. Probability 70%. Second target $72. Probability 62%. Long-term target $88. Fibonacci extension 1.618. Structure shield stop loss. Risk management $54.80. Probability 74%. Right pointing arrow below this level. Structure weakens and rhythm invalidates. 6. Rainbow outlook. Cameco is rhythmically transitioning from a rebound phase to structural breakout territory. If consolidation holds and volume doesn't collapse, this breakout could sustain for weeks or even months. Quiet energy always precedes the surge. The real breakout begins after the silence. 7. Puzzle piece member only deep dive. Pushpin institutional flow. BlackRock, Vanguard have recently increased exposure. Nuclear-themed ETFs, URA, NLR, show rising allocations toward CCJ. Pushpin short interest approximately 3.7%. Right pointing arrow not high but may provide short cover tailwind post-breakout. Pushpin social and trend insights. Reddit mentions for Cameco and uranium stocks climbing. Trending on X, Twitter. $CCJ breakout and uranium supercycle. Chentru's Energy. What comes after the $100 breakout? Hello, this is Top Trader Jinlog. You can review the full chart and content visually on the blog. If you'd like consistent insights, feel free to subscribe or leave a comment. To receive priority reports faster, select the priority review option. VPAR chart explanation. This is Chentru's Energy, LU, as requested for analysis. The circled areas in the past and present are potential short-term trend turning points. Consolidation coupled with an upward trend represents a trading entry point. Each chart has its own wave pattern trend. Currently, it is in the process of reascending within both medium-term, monthly wave, and short-term daily wave trends. Consider trading for further upside if 112 holds as support following a dip indicated by a lower wick from the short-term deviation. If it breaks below the short-term line, consider it a potential trading point for a reascension after a period of swing accumulation consolidation within a range above the medium-term resistance support zone. Investment opinion: Chentru's Energy, LU, surged past $100 in a powerful breakout move. And this is not just a technical push, it marks a new rhythm expansion phase within a broader energy shift narrative. 2-week expected return plus 10.4% right pointing arrow $127. Probability 72%. 2-month expected return plus 26.5% right pointing arrow $145. Probability 63%. 2-year potential return plus 64.1% right pointing arrow $188. Probability 51%. 1. Pushpin summary: LU has seen over 100% growth recently, entering a third stage of momentum acceleration. It's now undergoing a rhythmic pullback consolidation phase near the $110 level. If support holds at this core point zone, the next Fibonacci extension breakout to $145 becomes increasingly likely. 2. Upward trend rhythm analysis: small diamond monthly rhythm broke out of a long-term compression box. Volume expansion confirms entry into new valuation zone. Strong upside momentum with increasing Bollinger Band spacing. Small diamond weekly rhythm follows the pattern. Compression right pointing arrow vertical spike right pointing arrow pullback right pointing arrow retest, currently stabilizing around the $110 core point. MACD suggests a potential second wave setup after initial exhaustion. Small diamond daily rhythm shows a classic pattern. Short-term and mid-term moving averages merged and exploded, now in a Fibonacci retracement zone, 0.382 to 0.5 with rhythm rebuilding. Dotted line resistance at $127 is the next breakout trigger, while core support remains around $107 to $110. Pushpin core point, $110. Key support pivot after breakout pushpin dotted resistance. $127 marks a rhythm breakout level. Pushpin rhythm trap. Watch for fake breakdown followed by strong intraday reversal trap entry. 3. Bar graph financial overview market cap. $1.93 billion EPS, $4.79 PE ratio, 23.65x cash reserves, $470 million debt ratio, low, strong liquidity position maintained. 4. Warning news and risk summary. Boosted by U.S. government nuclear policy initiatives, risk lies in sentiment-driven overextension. Earnings growth must catch up. Pullbacks can be sharp in momentum stocks. Watch volume decline with caution. 5. Brain strategy scenario. When, why, how much? Bullseye entry zone $109 to $113.50. Probability 72%. Right pointing arrow rhythm support zone overlapping with Fibonacci retracement and Bollinger centerline. Goal net target zones. First target $127. Probability 72%. Second target $145. Probability 63%. Long-term target $188. Fibonacci extension 1.618 level. Shield stop loss. Risk control $105. Probability 74%. Right pointing arrow drop below this key support invalidates the current rhythm wave. 6. Rainbow outlook. Chentru's Energy now stands at a rhythmic inflection point. If this second pullback resolves upward, the wave structure shifts from reversion to expansion continuation. Nuclear and uranium themes remain hot, but timing the rhythm is key to surfing the wave. What coils tightly does so to spring forward. The second breakout wave always travels further. 7. Puzzle piece member-only deep report. Pushpin institutional flow. Vanguard, J.P. Morgan, show recent accumulation. ETFs gradually increasing nuclear-related exposure. Pushpin short interest, current short interest. 6.2% squeeze potential increases above $127. Breakout Pushpin trend sentiment. Google Trends. LU, plus 380% over 1 month. Nuclear energy stocks surging in finance forums and Reddit. GameStop breakout. What does the $30 level really mean? Hello, this is Top Trader Jinlog. You can check the chart and full content on the blog. If you want regular stock insights, feel free to subscribe or comment. For quicker delivery, select the priority review option. VPAR chart explanation. This is GameStop GME, as requested for analysis. The circled areas in the past and present are potential short-term trend turning points. Consolidation coupled with an upward trend represents a trading entry point. Each chart has its own wave pattern trend. Currently, it is within a short-term trend, daily wave. Within the short-term swing and medium-term resistance support supply-demand zones. Consider trading or entering on a dip near the short-term line around 27. There is strong resistance supply between 33 and 36. Consider trading if it dips or finds support at these levels. Investment opinion. GameStop, GME. The icon of the 2021 meme stock craze is showing signs of renewed strength. The breakout above $30 is more than just a technical bounce, it's a potential reversal point in rhythm structure. 2-week expected return, plus 12.3% right pointing arrow $38.50. Probability 68%. 2-month expected return, plus 31.4% right pointing arrow $45.10. Probability 54%. 2-year long-term potential, plus 92.7% right pointing arrow $66.10. Probability 48%. 1. Pushpin summary. GME recently broke through the key psychological level of $30 and is showing similar rhythm patterns to previous surges. Compression right pointing arrow breakout right pointing arrow retracement right pointing arrow reacceleration. The current range around $34 appears to be a post-retest consolidation, offering a chance to re-enter before a broader move unfolds. Rhythm analysis: small diamond monthly rhythm, long-term downtrend has compressed into a tight box, attempting to escape the upper boundary after base building. Small diamond weekly rhythm: this is the third rhythmic compression after 2021. Break above the $30 key zone, core point is being defended. Trend re-acceleration is likely if the current support holds. Small diamond daily rhythm, a familiar setup, consolidation at moving average convergence plus re-break of resistance. Third attempt at dotted line breakout, similar to previous explosive moves, currently forming a compression expansion setup right above the key support. Pushpin core point, $30. This level acted as a base during the previous surge. Pushpin dotted resistance line. Break here could trigger another vertical move. Pushpin merging structure. Convergence of short-term and mid-term moving averages is strengthening the setup. 3-bar graph financial overview market cap. $14.7 billion EPS. $0.265 PE ratio. 124.36x cash reserves. $4.77 billion debt. $1.4 billion short-term. $2.1 billion long-term stable. 4. Warning: news and risks. Options activity surging. Call volume up 270% week over week. Retail hype return. Reddit, Twitter and Robinhood mention skyrocketing regulatory risks. Meme stock volatility could trigger SEC scrutiny. Valuation concerns. PE remains extremely high, susceptible to earnings shocks. 5. Brain strategy scenario: when, why, how much. Bullseye entry zone $30.50 to $32.20. Probability 72%. Right pointing arrow solidifying above the core point, where moving averages are converging again. Bullseye targets: first target $38.50. Probability 68%. Second target $45.10. Probability 54%. Long-term target $48 to $66. Aligned with Fibonacci extension 1.618 and social sentiment zone. Shield stop loss. Risk management $28.40. Probability 76%. Right pointing arrow drop below this would negate the current rhythm structure. Right pointing arrow risk off zone if volume drops and momentum fades. 6. Rainbow outlook: GameStop is repeating its historic pattern. Retail sentiment triggers rhythmic compression and vertical expansion. This $30 breakout may become the first spark in another retail-driven breakout. Desire rekindles memory, and memory adds courage to a moving price. 7. Puzzle piece member-only deep dive: Pushpin institutional flow net buying trend resuming from Vanguard, BlackRock, and mid-sized funds. Hedge fund sentiment neutralizing after de-risking. Pushpin short interest, current short interest, 17.5%. High likelihood of short squeeze tailwinds if resistance breaks. Pushpin social momentum. Reddit GME mentions up plus 430% in the past 7 days. Robinhood holdings steadily increasing. Trending phrase: GME to $50.
누스케일 파워, 터닝 포인트 for the SMR revolution. This is top trader 진로. You can conveniently check the chart and pull left on the blog. If you want continuous analysis of specific stocks, feel free to request via comment or message. VPAR chart explanation. This is the analysis for Nuseil Power SMR. AS requested. The circled areas in the past and present indicate potential short-term trend points, consolidation and upward trend arc trading points. Each chart exhibits wave trends. Currently, after a short-term, daily wave, divergence correction and subsequently increase, it shows potential for swing, weekly wave, and medium-term, monthly waves. Consider trading during a day near the short-term line at 27. If it breaks down, the area around 20에서 25 sub JS support and a trading consideration point. Investment opinion: Nuscale Power is leading the SMR theme, backed by Trump's nuclear revival policy and global project expansion. This sets a strong upward momentum for the stock. EWEK expected return 플러스 14.8% 오른쪽 화살표 $34.7 probability 68%. EWMNTH expected return 플러스 28.0% 오른쪽 화살표 $38.7 probability 60%. EWYAR expected return 플러스 115.0% 오른쪽 화살표 $65 probability 72. 테크니컬 리듬 애널러시스 만슬리 220-MIN 만슬리 트렌드 더 스톡 이즈 브레이킹 아웃 오브 에이 롱텀 컨솔리데이션 존 어템팅 투 브리치 더 탑 오브 에이 멀티마스 박스 패턴 볼륨 이즈 인크리징 얼롱사이드 라이징 프라이스 모멘텀 앤드 디스턴스 인디케이터스 알터닝 포지티브 위클리 트렌드 더 차트 쇼즈 에이 풀백 팔로우드 바이 에이 리바운드 어템트 모멘텀 이즈 라이징 앤드 볼륨 이즈 그래주얼리 서포팅 더 무브 데일리 트렌드 애프터 브레이킹 아웃 오브 더 리센트 하이 더 스톡 이즈 풀링 백 프롬 에이 토티드 레지스턴스 레벨 It is currently holding support near the key level. Pivot $29. Suggesting a potential re-entry point. 120-MIN trend the chart shows a temporary drop after hitting resistance. The $29 area is acting as a short-term support level, and a rebound is likely if the support holds. 3. Financial flow Q1 revenue $13.4M. 위 화살표 859% 요이. Operating loss 마이너스 $35.3M. Narrowed 요이. 캐시 앰퍼샌드 이퀴벌런츠 $521.4M. 키 컨트랙트 로메니아 피드 프로젝트, SMR 테크놀로지 라이센싱. 4. 뉴스 폴리시 리스크 서머리 트럼프 S 이그제큐티브 오더 서포츠 SMR 데레귤레이션 앤드 인커리지드 도메스틱 디플로이먼트 로메니아 앤드 폴란드 프로젝트 알 백트 바이 달러 400M 플러스 인 파이낸셜 서포트. U. S. 유타 SMR 데몬스트레이션 워드 캔슬드 듀 투 버젯 오버런즈 NRC 아포스트로피 S 슬로우 어프로블 프로세스 리메인스 A 크리티컬 언서튼티. 5. 스트래티지 시나리오 엔트리 타겟 스탑로스 서머라이즈드 바이 웬 와이 하우 머치 엔트리 존 29.4달러 물결표 30.2달러 오른쪽 화살표 서포트 컨펌드 더 피벗 29달러 메이킹 디스 A 밸리드 리엔트리 포인트 타겟 프라이시즈 34.7달러 히트 프라버빌리티 70% 38.7달러 히트 프라버빌리티 60% 65달러 히트 프라버빌리티 72% 미드텀 스탑로스 리스판스 빌로우 28.4달러 오른쪽 화살표 컨시더 엑시트 월 리스판스 이프 쇼트텀 트렌드 브레이크스 언더박스 서포트. 6. 아웃룩 누스케일 파워 이즈 낫 저스트 에이 테크 리더 버드 에이 다이렉트 폴리시 베네피셔리 인 더 SMR 스페이스 페더럴 베킹 익스펜딩 프로젝트 앤드 라이징 데이터 센터 디맨드 알 컨버징 더드 에이 스트럭처럴 시프트 인 에너지 인프라스트럭처 더 스토 킵스 테스팅 이츠 피벗 리플렉팅 에이 빌드업 비포 에이 뉴 웨이브 인 더 글로벌 에너지 사이클. 7. 익스텐디드 리포트 인스티튜셔널 플로우 쇼트 인터레스트 폴리시 인스티튜셔널 액티비티 인크리징 포린 넷 바이스 노터블 인플로우 인투 에너지 심드 ETFS 쇼트 인터레스트 커런틀리 7.8% 위드 쇼트 커버링 포텐셜 니어텀 폴리시 트리거 워치 트럼프 S 업커밍 준 뉴클리어 에너지 폴리시 릴리스 구드 부스트 센티멘트 테크니컬 모멘텀 MACD 앤드 디스턴스 리듬 서제스트 컨디션즈 포 미드텀 익스펜션 알포밍 OK로 업 100% 더 퓨처 오브 SMRS 워 오버하이트 트렌드 헬로 디스 이즈 진로 You can check the full report with 차츠 on my blog for ongoing analysis or stock requests feel free to follow or leave a comment VPAR 차트 explanation This is OK로 OK로 AS requested in the comments The circled areas in the past and present indicate potential entry points for short-term trends where consolidation plus an uptrend sub AS the target points Each chart has wave trends currently It's continuing the short-term, daily wave, trend and showing the potential for a swing trend, weekly wave. Consider targeting it during dips near the short-term line in the early 40s. If it breaks down, the area around 30에서 42J support and a point to consider for trading. 1. Investment opinion OK로 is gaining strong momentum as a leader in advanced nuclear energy, riding the wave of favorable policy shifts and rising AI-powered data center demand. Trump S executive order backing nuclear, plus strategy power supply is add major fuel to the recent price surge. E-WEK return estimate 플러스 12% 오른쪽 화살표 54.75달러 probability 70% E-MNTH return estimate 플러스 28% 오른쪽 화살표 62.5달러 probability 64% 1-YEAR return estimate 플러스 82% 오른쪽 화살표 89달러 probability 55% 2. Summary founded in 2013 오클로 디벨롭스 넥스트 젠 스몰 모듈러 리액터즈 SMRS 라이크 이츠 10-EAR 듀얼 프리 오로라 시스템 더 스토가스 더블드 인 더 패스트만스 메이킹 이 데이 프론트러너 인 더 SMR 내러티브 키 트리거즈 인클루드 그로잉 AI 릴레이티드 일렉트리시티 디맨드 롱텀 파워 딜주이드 데이터 센터스 앤드 리슨트 유 S 이그제큐티브 오더스 스트림라이닝 뉴클리어 익스펜션 3. 테크니컬 리듬 애널러시스 만슬리 투 120-MIN 만슬리 트렌드 프라이스 하스 브로큰 롱텀 레지스턴스 앤드 이즈 어템팅 투 엑시트 에이 멀티어 박스 레인지 위클리 트렌드 스트롱 어버드 모멘텀 서포티드 바이 인크리징 볼륨 앤드 와이드 프라이스 익스텐션 데일리 트렌드 오버보트 시그널즈 어피어 AS 프라이스 스테이지 니어 이츠 하이스 코스트 갭 120-MIN 트렌드 쇼트텀 풀백 이즈 포밍 앳 노티드 레지스턴스 46달러 47달러 존 액팅 AS 쇼트텀 서포트 4. 파이낸셜 플로우 마켓캡 물결표 달러 5.5B 넷로스 Q1 2025 쇼즈 9.8달러 민 로세즈 슬라이틀리 임프로브드 요이 캐시 포지션 스트롱 위드 캐시 익시딩 라이어빌리티즈 애널리스트 타겟 웨드버시 업그레디드 이츠 타겟 투 55달러 위드 안 아웃퍼폼 레이팅 5. 뉴스 폴리시 리스크스 트럼프 이그제큐티브 오더 에임스 투 스트림라인 SMR 퍼미치 앤드 얼라우 리액터 컨스트럭션 온 페더럴 렌즈 AI 디맨드 오클로스 SMR SRC AS 에이클링 스케일러블 에너지 솔루션 포 데이터 센터스 파워 컨트랙트 롱텀 서플라이 어그리먼트 사인드 위드 이티닉스 스위치 앤드 아더 메이저 퍼실리티즈 리스크 커머셜 오퍼레이션즈 포 오로라 리액터즈 알 스틸 이어즈 어웨이 타겟 2027 위드 노 레버뉴 옙 6. 스트래티지 시나리오 엔트리 타겟 스탑로스 스트럭처드 바이 웬 와이 하우머치 엔트리 존 46달러 48달러 서포트 리테스트 프라버빌리티 68% 타겟츠 54.75달러, 프라버빌리티 70%, 62.5달러, 프라버빌리티 55%, 스탑로스, 엑시트 44달러, 브레이크다운 트리거드 파셜 엑시트 포 리스크 컨트롤, 프라버빌리티 73%. 7. 아웃룩 오클로아스 이머지드 AS A 피버틀 플레이어 인 더 SMR 레이스, 퓨얼드 바이 2 메가트렌즈, 뉴클리어 폴리시 서포트 앤드 익스플로링 AI 에너지 니즈, 위드 로버스트 테크 펀더멘털즈 앤드 페이버러블 레귤레이션, 롱텀 업사이드 어피어스 컴펠링, 인더 쇼트텀, A 마이너 풀백 메이 오퍼 A 베터 엔트리, 앤드 인베스터즈 슈드 모니터 데벨롭먼트 어라운드 더 2026 프로토타입 런치. 8. 딥다이브, 인스티튜셔널 플로우, 쇼트 인터레스트 카탈리스트, 인스티튜셔널 액티비티, 넷 인플로우즈 오버 더 라스트 오 시즌스, 위드 펜션 펀드 리포티드 바잉, 쇼트 인터레스트, 물결표 3.5%, 오퍼링 모더레이트 포텐셜 포 쇼트 커버링, 폴리시 워치, 트럼프 리 일렉션 리스크, DOE 펀딩 얼로케이션즈, 프로토타입 카탈리스트, 오로라 리액터 파일럿 스케줄드 보 테스팅 인 H1 2026년. 넥스트 젠 뉴클리어 붐, 라이트 브릿지 스와스 페스트 15달러, 이즈 더 랠리 저스트 스타팅. 헬로, 디스 이즈 진로, you can conveniently check the full report with 차츠 on my blog. If you'd like continuous updates or specific stock coverage, feel free to leave a comment or follow. VPAR 차트 explanation, this is light bridge LTBR, requested in the comments. The circled areas in the past and present represent potential entry points for a short-term trend, where consolidation and an uptrend merge. Each chart has wave trends, based on the medium-term trend, monthly wave, this stock is suitable for medium to long-term investment. It's currently continuing a short-term trend, so consider targeting it during dips. If it breaks down, the area around 10.15 to 11.5 is a support and a point to consider for trading. Investment opinion light bridge is gaining significant market attention amid renewed focus on nuclear energy, driven by recent policy developments and its proprietary fuel technology. E-WEK return estimate, 플러스 18% 오른쪽 화살표 17.95달러, probability 72%. E-MNTH return estimate, 플러스 36% 오른쪽 화살표 20.75달러, probability 65%. 1-YEAR return estimate, 플러스 115% 오른쪽 화살표 32.75달러, probability 55%. Summary light bridge has surged following the U.S. Department of Energy's support announcement for next gen nuclear fuel development. The stock has gained over 500% year to date, benefiting from its exposure to nuclear, defense, and clean energy themes. Its recent success with co-extrusion of uranium zirconium alloy fuel marks a major step toward commercialization. Technical rhythm analysis, monthly 220-MIN chart, monthly trend, price has broken above recent highs, attempting to escape a long-term consolidation range. Weekly trend, price continues its rally with minimal overhead supply, momentum is strong as rising volume supports extended moves. Daily trend, the stock remains near recent highs after a strong gap up, suggesting a short-term overbought condition. 220-MIN trend, a potential pullback may occur near dotted resistance, to a bounce from support could trigger further upside momentum. Financial overview cash reserves, approx. 56.9달러 M, ensuring short-term financial stability. Net loss, Q1 net loss was 4.8달러 M, obviously due to higher R&D expenses. Debt ratio, very low at 1.7%, operating under a virtually debt-free structure. Capital strategy, filed $8.150M mixed shelf offering to support future funding flexibility and R&D expansion. 뉴스 폴리시 리스크 하이라이트 체크 표시 2025년 5월 12일 Q1 어닝즈 콜앤드 비즈니스 업데이트 릴리즈드. 체크 표시 2025년 4월 28일 CEO 세트 그레 디스커스스 퓨얼 로드맵 온 슈왑 네트워크. 체크 표시 2025년 5월 6일 EVP DR 머샤코브 조인스 더 U.S. 뉴클리어 인더스트리 카운슬 보드. 주의 리스크 스틸 PRE 레버뉴 Profitability may take time until full-scale commercialization occurs. Strategy scenario, entry, target, stop loss, framed by when, why, and how much. Entry zone, 14.2달러, 15달러, entry probability, 72%. Target, 17.95달러, probability, 70%, 20.75달러, probability, 55%. Stop loss, exit, 13.1달러 breakdown 오른쪽 화살표 partial liquidation to minimize downside risk, probability, 75%. 아웃룩 라이트 브릿지 하스 이머지드 AS 원 오브 2025's most notable next gen energy stocks. 테크니컬 프로그레스, 폴리시 얼라이먼트, and a debt-free capital structure strengthen its investment case. Although short-term overbought signals are forming, pullbacks may offer buying opportunities. Commercial rollout of its fuel tech could trigger a second leg of the rally as market anticipation builds. D5, 인스티튜셔널 플로우, 쇼트 인터레스트 어커밍 트리거즈, 인스티튜셔널 플로우, 물결표 $5M 넷 인플로우즈 오버 더 패스트 3시즌스. 쇼트 인터레스트, 렐러티블리 로우 앳 1.6%, 인디케이팅 미니멀 쇼트 스피드 다이나믹스. 카탈리스트 워치, 키퓨얼 발리데이션 테스트 리절츠 익스펙티드 미드준. 폴리시 모니터, EU, 어스 듀얼 어프로블 톡스 코드 엘레베이트 모멘텀 인 H2 2025년. 이온크 풀백 오퍼튜니티, 미드텀 리드민 퀀텀 리더. 하이, 디스 이즈 진로. 디스 RHITHMIX 리포트 애널라이즈 이온크 리센트 브레이크아웃 앤드 이츠 이볼빙 리듬 스트럭처. 위드 플렉시블 엔트리 앤드 서포트 존스. 리프레전트 A 미드텀 스트래티지 루티드 인 다이나믹 리듬 애널러시스. 비지트 아워 블로그 4 비주얼 차트 앤드 리퀘스트 애널러시스 바이 리빙 A 코멘트. VPAR 차트 엑스플레네이션 디스 이즈 IONQ. AS 리퀘스티드 인 더 코멘츠. 더 서클드 에어리어즈 인 더 패스트 앤드 프레전트 인디케이트 포텐셜 엔트리 포인트 포 쇼트 텀 트렌즈 웨어 컨솔리데이션 앤드 안 업 트렌드 머지. 이치 차트 하스 웨이브 트렌즈 커런틀리 it is showing the possibility of a short term trend above the medium term support resistance zone. AS of today around the 37 short term line is a point to consider for trading. Investment insight yonk shows strong movement post surge but has not emerged with its mid term trend. AS 더 쇼트텀 리듬 얼라인즈 어버브 $35에서 37. 플렉시블 엔트리즈 위드 서포트 프롬 볼륨 플로우 프로바이드 에이 솔리드 베이시스 포 스윙 트레이드 스트래터지스. E-WEK 익스펙티드 리턴 플러스 14%, 프로브 69%. E-MNTH 익스펙티드 리턴 플러스 32%, 프로브 63%. 1-YAR 익스펙티드 리턴 플러스 96%, 프로브 55%. 서머리 스톡 소드 오버 37%. 나우 컨솔리데이팅. CEO 라이큰즈 이온크2. 엔비디아 오브 퀀텀. 브레이크스로우 인 QEC 테크 앤드 스트래터지 컨트랙트 퓨얼링 옵티미즘. 테크니컬 리듬. 만슬리 220-MIN. 만슬리. PRE 브레이크아웃 익스펜션 리듬. 위클리. 레지스턴스 존. $48.5 어프로칭. 데일리. 키 서포트 $35에서 37. 리트레이스 파서블. 220-MIN. 박스 리듬 포밍. 풀백 엔트리 라이클리. 파이낸셜 오버뷰 Q1 레버뉴 7.6$M 플러스 77%의 넷로스 39.6$M. FI 아웃룩 $7M $9M. 카펙스 포커스드 그로잉 R&D 앤드 스트래터지 퀀텀 디플로이먼트. 뉴스 앰퍼샌드 리스크 체크 표시 거버먼트 컨트랙트 앤드 AI 로지스틱스 타이 UPS. 주의 하이퍼 컨시스턴트 넷로스 돋보기 QEC AI 인테그레이션 인 스포트라이트. 트라테지 시나리오 플렉시블 존 베이스드 엔트리 포인트 1스톤 42.8$, 43.5$, 쇼트텀 풀백. 세컨드, $35, 스윙 서포트 리엔트리. 서드, $30, 트렌드 리버설 로우 테스트. 타겟 포인트 관역명 중 $48, 도티드 레지스턴스. 관역명 중 $54, 미드텀 익스펜션 타겟. 스탑, 리스판스 주의 빌로우 $29는 인밸리데이션 오브 스트럭처. 주의 MACD 위크니스 플러스 로우 볼륨는 스케일 아웃. 이모셔널 아웃룩 더 플레임 댓 포즈드 번즈 브라이터. 더 트루 트렌드 빌롱스 나투 더 퍼스트 스파크. 버투 더 리듬 댄 레가더스 스트렝스. 홀드 스테디, 트러스트 더 리듬. 멤버 온리 리포트 인스티튜셔널 플로우. $22.3 엠넷 바이 5-DAY. 쇼트 인터레스트, 다운 투 2.1%. 옵션 센티멘트, $50 콜즈 스파이크 모멘텀 플레이 포밍. ARQQ, 이즈 퀀텀 시큐리티 메이킹 A 컴백. 하이, 디스 이즈 진로. You can check the full chart visuals on the blog. For any stock analysis request, feel free to comment or message anytime. V-파 차트 explanation. Here is the ARQQ key. Quantum chart you requested feedback on. The circled areas in the past and present indicate potential entry points for short-term trends, combining confluence and uncovered trend. Each chart has its own wave and trend patterns. Currently, there's a possibility of a shift from a short-term trend to a swing trend, driven by supply breaking through medium-term resistance. This suggests considering a short-term entry now, or a swing trade entry around the $20 mark if the price breaks down. Investment opinion key. Quantum is entering a strategy pivot stage with increasing expectations around commercialization of quantum encryption technologies. From a technical perspective, the stock appears to be exiting a long-term base box, initiating a new rhythm cycle. E-WEK expected return, plus 18.0%, probability 72%. E-MNTH expected return, plus 36.0%, probability 58%. 1-YAR expected return, 플러스 112.0%, probability 41%. Summary following its 2024 earnings report. ARQQ showed a technical rebound driven by optimism surrounding its new recurring revenue model. The price action has remained above the dotted support line for 3+ seasons, indicating possible short-term trend confirmation. From a mid-term perspective, price recovery from base levels is narrowing the gap from previous drawdowns. Technical rhythm analysis, monthly 220-MINUT, 막대 그래프 monthly long-term downtrend flattening out, forming a potential volume-backed bottoming structure. MACD histogram converging at lows, signaling potential bullish decoupling, dotted support still holding, with possible early reversal signals forming. 벽난로 선반 시계 weekly first meaningful bullish candle above Bollinger center line, Bollinger band width expanding for E straight weeks, often indicating TRE breakout phase. 옐로우 앤드 블루 트렌드 라인즈 컨버징은 인플렉션 얼라이먼트, 달력 데일리 홀딩 어버브 올 쇼트텀 무빙 에버리지즈 앤드 도티드 서포트 포 멀티플 데이즈. 볼링거 벤즈 오프닝 어버드, 포밍 프라이스 스테어케이스 스트럭처, 볼륨 컨시스턴시 컨펌스 언더라잉 트렌드 스트렝스, 스톱워치 120-MINUT, 포스트 브레이크아웃 풀백 팔로우드 바이 발러틸리티 컨트랙션 앤드 리뉴드 푸시. MACD 크로스오버 인투 파지티브 존이드 라이징 모멘텀, 올 쇼트텀 이마스알 얼라인드 어버드는 스트롱 트렌드 시그널. 파이낸셜 플로우 레버뉴 디클린드 54% 요이, 번 모델 시프티드 투어드 리커링 컨트랙츠. 넷 로세즈 슈랭크 45% 요이, 듀투 코스트 리스트럭처링, 캐시 리저브스 오브 18.7달러의 인슈어 오퍼레이셔널 바이어빌리티 인 니어텀. 뉴스 앰퍼샌드 리스크 사인드 멀티에어 엔터프라이즈 라이센스 딜 위드 거버먼트 클라이언츠 인 EMEA. 파트너드 위드 인텔&드 EQS 투 빌드 퍼스트 퀀텀 세이프 CSFC 컴플라이언트 아키텍처. 리스크, 하이 밸류에이션 컨선스 위드 24% 위클리 발러틸리티. 리스크, 레버뉴 모델 트랜지션 일 리콰이어 타임 투 풀리 스타빌리지. 트레이드 스트래티지 시나리오, 엔트리, 타겟츠, 스탑로스, 심플리파이드 위드 앤 와이 하우머치 클래리파이. 엔트리 존, 25달러 마이너스 26.5달러, 72% 프라버빌리티, 컨버징 무빙 에버리지즈 앤드 고티드 서포트 리전은 옵티멀 엔트리. 타겟츠 오른쪽 화살표 31달러, 히트레이트, 70%, 오른쪽 화살표 36.5달러, 히트레이트, 55%. 스탑로스, 23.8달러, 74% 프라버빌리티, 엑시트 어폰 페일러 투 홀드 도티드 서포트, 컨퍼밍 쇼트텀 리버설. 아웃룩 ARQQ 이즈 엔터링 A 브레이크아웃 패턴 보스, 테크니컬리 앤드 오퍼레이셔널리, 퓨얼드 바이 거버먼트 파트너십스 앤드 크리티컬 테크놀로지 데벨롭먼츠. 더 리슨트 프라이스 포즈 이즈 모어 오브 A 볼륨 서포티드 어큐뮬레이션, 나 디크니스. AS 롱 AS, 더 도티드 레벨 홀즈, 더 리듬 사이클 리메인스 블리시. This makes the current price zone a risk reward favorable setup for swing and position traders. Extended insights, institutional flow, short interest, red lines, institutional activity, neutral overall for short-term net buying detected in the last weeks. Short interest at 6.1%, relatively high potential for short squeeze risk. Headline summary, recognized by IDC ASA cybersecurity innovator, expanding 5G defense adoption. Analyst opinion, in analyst rated, 스트롱 바이 1-MONTH 프라이스 타겟 52달러. 그르르 이즈 디스 에이 리버설 워 저스트 어나더 스파이크. 헬로, 디스 이즈 진로. 디스 리프트 프로바이즈 에이 컴프리hen시브 애널러시스 오브 고릴라 테크놀로지 그룹 잉크. 포커싱 온 테크니컬 리듬스, 파이낸셜 헬스, 앤드 스트래터지 아웃룩스. 차트 엑스플레네이션. 디스 이즈 그르르 고릴라 테크놀로지 그룹. 위치 유 리퀘스트드 인 더 코멘츠. 더 서클드 에어리어즈 인 더 패스트 앤드 프레젠트 쇼 포텐셜 쇼트텀 트렌드 엔트리 포인트. 웨어 머깅 트렌드 앤드 안어버드 트렌드 얼라인. 이치 차트 아스 이츠 온 웨이브 패턴 앤드 트렌드. 커런틀리, 애프터 더 퍼스트 웨이브. It is consolidating at the mid-term support, resistance level. Checking for support within approximately 2 months is needed. Or if it further declines near $10, it becomes a consideration point for range trading aimed at a rebound. Investment opinion, 고릴라 테크놀로지 그룹 잉크. 그르르, has experienced significant volatility in 2025. After reaching a high of $30.5 in February, the stock has retraced to the $16.86 level. Technical indicators suggest a potential consolidation phase, with the possibility of a reversal if key resistance levels are breached. EWEK expected return, plus 7.5%, probability, 52%. EMNTH expected return, plus 21.4%, probability, 46%. 1-YEAR expected return, plus 58%, probability, 62%. 1. Summary 고릴라 technology specialized in AI-driven security and surveillance solutions. The company has expanded its operations globally, with a presence in Southeast Asia, India, the Middle East, Europe, North America, and Latin America. Despite a net loss in 2024, Gorilla has strengthened its financial position and continued to invest in growth initiatives. 2. Technical rhythm analysis 벽난로 선반시계 만슬리 차트, significant decline from 2022 highs, followed by a stabilization phase. Formation of a potential base suggests the possibility of a trend reversal. 내려가는 그래프 위클리 차트, 컨솔리데이션 위드인 더 15.5달러 18.2달러 레인지, 모멘텀 인디케이터스, MACD, RSI, 쇼 사인즈 오브 불리시 다이버전스, 내려가는 그래프 데일리 차트, 프라이스 액션 인디케이츠 A 타이트닝 레인지, 오프턴 A 프리커서 투 A 브레이크아웃, 볼링거 밴즈 내로잉, 서제스팅 디스크리즈드 발러틸리티 앤드 포텐셜 포 A 시그니피컨트 무브, 스톱워치 120-MINUT 차트, 쇼트텀 레지스턴스 옵저브드 어라운드 17.2달러, 서포트 이스테블리시드 니어 16.6달러, 프로바이딩 A 디파인드 트레이딩 레인지. 3. 파이낸셜 펄스, 버 6.4, 2024 레버뉴 74.7달러 밀리언, 플러스 15.4% 요이, 넷로스 63.9달러 밀리언, 캐시 포지션 37.47달러 밀리언, 토탈 데트 21.4달러 밀리언, 토탈 에세츠 153.8달러 밀리언, 에쿼티 73.1달러 밀리언, 밸류에이션 매트릭스 P, E레셔, N, A, 듀토 넷로스, EV, 에비타 12.7x, ROE, 마이너스 87%, ROA, 마이너스 41%, 리퀴디티, 에디퀴트, 위드 임프로브드 캐시 리저브스. 4. 뉴스 앰퍼샌드 리스크 서머리 스트래터지 파트너십스, 콜라보레이션 위드 토요타스 로지스틱스 디비전인 타이랜드 투 디벨롭 스마트 웨어하우스 솔루션즈, 파이낸셜 컴플라이언스, 어치브 불사바리즈 옥슬리 컴플라이언스, 이넨싱 파이낸셜 트랜스페어런시 앤드 가버넌스, 글로벌 익스펜션, 래피드 그로스 인 이머징 마켓츠, 위드 A 포커스 온 AI 인프라스트럭처 디벨롭먼트, 리스크스, 컨티뉴드 넷 로세즈 앤드 마켓 발러틸리티 포드 챌린지스, 하웨버, 임프로브드 파이낸셜 컨트롤즈 미티게이트 썸 컨선스. 5. 스트래터지 시나리오 엔트리존, 15.8달러 16.5달러, 타겟 프라이시즈, 20.5달러, 쇼트텀, 25달러, 미디엄텀, 스탑로스, 14.9달러. 아웃룩 고릴라 테크놀로지 이즈 포지션드 투 캐피털라이즈 온 더 그로잉 디맨드 포 AI 드리븐 시큐리티 솔루션즈. 와일 파이낸셜 퍼포먼스 하스 빈 챌린지드. 스트래터지 이니티어티브즈 앤드 글로벌 익스펜션 에포츠 프로바이드 에이 파운데이션 포 포텐셜 리커버리 앤드 그로스. 퍼즐 딥다이브 인사이츠 인스티튜셔널 액티비티. 리미티드 인스티튜셔널 오너십. 모니터링 포 인크리즈드 인터레스트. 쇼트 인터레스트. 로우. 리듀싱 더 리스크 오브 쇼트 스키즈즈. 애널리스트 레이팅즈. 컨센서스 프라이스 타겟 오브 31달러. 인디케이팅 포텐셜 업사이드.
유버에스 브레이크아웃 리얼 모멘텀 오어 A 트랩. 헬로. 디스 이즈 진로. You can view this full chart and report visually on the blog. For more reports, feel free to leave comments or subscribe. Chart explanation. This is UBL, which you requested in the comments. The circled areas in the past and present show potential short-term trend entry points. A confluence of moving trends and an upward trend indicate an entry point. Each chart has its own wave pattern and trend. Currently, due to supply and demand tension up to the mid-term trend, if the short-term line is breached, re-entering at the swing line or mid-term trend line is worth considering. Investment opinion. Uber recently broke its OEWEK high, supported by strong earnings and institutional confidence. Momentum is technically strong, but short-term overbought signals and resistance zones must be respected. EWEK expected return 플러스 4.2%, probability 54%. EMONTH expected return 플러스 11.8%, probability 48%. 1-YEAR expected return 플러스 38.3%, probability 66%. Summary. Uber is driving a strong rally on the back of robotaxi initiatives, autonomous vehicle partnerships, and Uber's expansion. The sudden swing to profitability, along with institutional buying, signals potential structural upside. Technical rhythm analysis. 벽난로 선반식의 만슬리 차트, 브로크 멀티-이어 레지스턴스, 2021년에서 2024년 레인지. 3 consecutive bullish candles, 탑밴드 익스펜션 포밍, 셋업 시그널즈 롱텀 트렌드 리버설 컨펌드. 내려가는 그래프 위클리 차트, 스트롱 볼륨 브레이크아웃 패스트 60달러, 올무빙 에버리지즈 나우인 골든 크로스 얼라이먼트. RSI 리칭 오버보트 테러토리. 오른쪽 화살표 워치 달러 85에서 88존4 풀백스. 내려가는 그래프 데일리 차트, 브레이크아웃 어버브 92달러 레프터 컨솔리데이션. MACD, CCI 리메인 블리시. 프라이스 엔터링 프라이얼 컨제스천 존 니어 올타임 하이. 오른쪽 화살표 마이너 레지스턴스 라이클리. 스톱워치 120-MINUT 차트, 갭 어밴드 타이트 플래그 포메이션. 홀딩 어퍼 볼링거 밴드. 오른쪽 화살표 브레이크아웃 포텐셜인 넥스트 이 시즌스. 마이너 컨솔리데이션 스틸 블리시 언네스 88달러 브레이크스. 파이낸셜 펄스, 버 6.4 업데이티드. 2024 레버뉴 43.98달러 B, 플러스 17.96% 요이. 넷 인컴 9.86달러 B, 플러스 422.3% 요이. EPS 4.56달러, 레버리지 M% 리퀴디티, 스테이블, 더하기 밸류에이션 M% 레셔스, P, E, TTM 16.32, 포워드 P, E 32.24, P, B 8.80, ROE 60.08%, ROA 21.92%, EV, EBITDA 42.27, FCF 1등, 임프로빙 포스트 프로피더빌리티. 뉴스 M% 리스크 서머리 핀빌 NMS 2.2달러 비 인베스트먼트 비아퍼싱 스퀘어 컨펌스 인스티튜셔널 트러스트 핀 VWID 버즈 로보탁시 파일럿인 LA 스타팅 2026 핀 뉴 피처 릴리스 세이빙즈 슬라이더 프라이스락 루트쉐어 주의 쇼트텀 오버보트 레벨즈 달러 93에서 95 줬는 포텐셜 레지스턴스 스트래터지 시나리오 NY 하우머치 엔트리 존 87.5달러 89.2달러 엔트리 프로브 61% 애프터 마이너 풀백, 컨솔리데이션, 타겟츠, 97달러, 타겟 프로브, 62%, 104달러, 타겟 프로브, 48%, 스탑로스, 83.2달러, 브레이크다운 프로브, 59%, 빌로우 80달러는 트렌드 페일러 리스크, 아웃룩 유버 어피어스 투 비 트랜지셔닝 프롬 A 그로스 스토리 투 A 밸류 플러스 프로피더빌리티 리더, 쇼트텀 발러틸리티 메일 테스트 리슨트 게인즈, but 롱텀 프로스펙트 리메인 브라이트, 더 아이디얼 어프로치, 스케일인 스트래티지 위드 펌스탑 83달러 앤드 아이즈온 브레이크아웃 투어드 100달러 플러스 딥다이브 인사이츠 인스티튜셔널 플로우 플러스 센티멘트 인스티튜셔널 인플로우 라이징 포스트 Q1 리테일 트레이더스 퓨얼링 니어텀 게인즈 RSI 슬로우 스톡인 오버히티드 테러토리 애널리스트 컨센서스 프라이스 106.4달러 리스크 리워드 리메인스 파지티브 이프 스트럭처 홀즈 어버브 85달러 테슬라 S 리바운드 리얼 트렌드 리버설 오어 저스트 A 페이크 아웃 헬로 디스 이즈 진로 비지트 더 블로그 투 리뷰 풀 비주얼즈 앤드 레이어드 차트 애널러시스 포 모어 타임리 업데이트 필프리 투 서브스크라이브 오어 리브 코멘츠 차트 엑스플레네이션 디스 이즈 테슬라 TSLA 더 서클드 에어리어즈 인 더 패스트 앤드 프레전트 쇼 포텐셜 쇼트텀 트렌드 엔트리 포인트 A 컴플루언스 오브 머깅 트렌즈 앤드 안 어버드 트렌드 인디케이츠 안 엔트리 포인트 이치 차트 하스 이츠 오운 웨이브 패턴 앤드 트렌드 인 더 쇼트텀 트렌드 이디즈 어버브 더 미드텀 레지스턴스 레벨 앤드 니어 더 쇼트텀 라인 커런틀리 난 오버보트 스테이트 체킹 더 트렌즈 서포트 플로우 이즈 네서서리 인베스트먼트 오피니언 테슬라 이즈 엔터링 A 포텐셜 트렌드 리버설 페이즈 위드 쇼트텀 모멘텀 쇼잉 스트롱 사인즈 오브 리커버리 골든 크로스 포메이션즈 어크로스 무빙 에버리지즈 앤드 A 불리쉬 MACD 크로스 오버 서포트 더 리바운드 However, intermediate resistance remains strong, and any reversal from current levels must be closely monitored. EWEK expected return, 플러스 4.5%, probability 56%, EMONTH expected return, 플러스 12.3%, probability 49%, YEAR expected return, 플러스 38.7%, probability 67%. 1. Summary TSLA has bounced strongly despite weak earnings, supported by low tax expectations and energy storage segment growth. The rebound structure mirrors previous recovery waves, though political risk and insider selling continue to weigh on sentiment. 2. Technical rhythm analysis 막대그래프 데일리 차트 애널러시스 작은 파란색 마름모 스트럭처럴 셋업 리슨트 프라이스 무브먼트 리셈블 프라이얼 브레이크아웃 웨이브 마켓 바이 삼서클드 존스인 차트 커런트 리바운드 페이즈 미러스 프리비어스 포스트 커렉션 리프트 오프스 클린 어버드 얼라이먼트 오브 쇼트텀 라스 작은 파란색 마름모 무빙 에버리지즈 20년 5월 10일 MA 골든 크로스 이스태블리시드 60-DAY MA 브레이크스로우 컨펌드 커런틀리 테스팅 레지스턴스 앳 120-DAY MA 작은 파란색 마름모 인디케이터스 MACD 히스토그램 크로스드 어버브 0 라인 플러스 시그널 라인 오른쪽 화살표 불리쉬 모멘텀 볼링거 밴드 탑 익스펜션 언더웨이 마이너 풀백스 인터프리티드 AS 헬시 쉐이크아웃츠 3. 파이낸셜 펄스 Q1 레버뉴 19.3달러 B 마이너스 9% 요이 EPS 0.27달러 미시드 0.42달러 이스트 오토 레버뉴 다운 20% 에너지 스토리지 업 67% 넷 프라핏 달러 850M 마이너스 71% 요이 스트롱 다이버전스 비트윈 코어 오토 앤드 에너지 세그먼츠 4. 뉴스 앰퍼샌드 리스크 서머리 로보탁시 서비스 투 비긴 인 텍사스 모델 Y 베이스드 폴리티컬 컨트로버시 임팩트 브랜드 이미지 CA 세일즈 다운 21% 로스 거버 앰퍼샌드 서드 포인트 보스 솔드라지 테슬라 포지션즈 마켓 퀘스처닝 앨론 머스크 S 포커스 5.
스트래터지 시나리오 NY 하우머치 서머라이즈드 엔트리 존 330달러 336달러 엔트리 프라버빌리티 63% 페이보러블 서포트 에어리어 포스트 골든 크로스 타겟츠 360달러 리치 프라버빌리티 61% 388달러 리치 프라버빌리티 43% 스탑로스 316달러 브레이크다운 프라버빌리티 58% 빌로우 디스 라인 트렌드 리버설 메이 페일 아웃룩 테슬라 이즈 엔터링 에이 포텐셜리 익스플로시브 리바운드 페이즈 백트 바이 테크니컬 모멘텀 앤드 그로스 세그먼츠 하웨버 스트롱 오버헤드 레지스턴스 앤드 폴리티컬 노이즈 머스트 비 내비게이티드 더 세이프스트 어프로치 이즈 스태거드 엔트리 클로스 트래킹 오브 316달러 서포트 앤드 리아세싱 니어 달러 360에서 388 레벨즈 딥다이브 리포트 인스티튜셔널 플로우 앰퍼샌드 센티멘트 인스티튜셔널 인플로우즈 리터닝 쇼트 인터레스트 리트리팅 RSI 니어링 오버보트 마이너 풀백 익스펙티드 앨론 머스크에스 퍼블릭 이미지 컨티뉴즈 투 어펙트 센티멘트 미드텀 업사이드 리메인스 오픈 리프 스트럭처럴 레벨즈 홀드 TMCS 브레이크아웃 저스트 더 비기닝 오어 오버히티드 탑 헬로 디스 이즈 진로 포풀 비주얼 컨텍스트 비지트 더 블로그 웨어 유 캔 뷰 차트 앤드 온고잉 브레이크다운스 If you like continuous updates, feel free to subscribe or leave a comment. 차트 explanation. This is TMC, which I have mentioned multiple times. The circled areas in the past and present show potential short-term trend entry points. A confluence of moving trends and an upward trend indicate an entry point. Each chart has its own wave pattern and trend. TMC has been consistently maintaining an upward wave in its mid-term trend. Today, it touched the resistance level in the purple overbought zone. In case of a short-term trend divergence correction or breakdown, the entry point will be near the swing line or mid-term line around $3 again. Investment opinion TMC has experienced a sharp rally driven by expectations around deep sea mining and recent regulatory moves. While the momentum is strong, the stock appears overheated, and financial fundamentals remain weak. Ideal for short-term trades or entry after a healthy pullback. EWEK expected return 플러스 4.2% probability 49% EMONTH expected return 플러스 16.5% probability 52% 1-YEAR expected return 플러스 38% probability 68% Summary TMC skyrocketed over 300% in recent weeks, fueled by application for AEU, S. Deep sea mining license, positive environmental assessment news, and $8.37 equity raise. Yet the company still has no revenue, and is navigating early phase commercialization risks. Technical rhythm analysis 벽난로 선반시계 만슬리 차트, 브로크 롱텀 베이스, 시그널링 스트럭처럴 리버설. Mid-term moving averages crossed upward, 볼링거 밴즈 익스펜딩. RSI and MACD just 플립트 뉴트럴 오른쪽 화살표 분리실 셋업. 내려가는 그래프 위클리 차트. 익스플로시브 브레이크아웃 비욘드 미드텀 레지스턴스. 볼륨 컨펌스 컨빅션. 모멘텀 베리 스트롱. 어프로칭 탑 볼링거 존 오른쪽 화살표 니어텀 오버히팅. 내려가는 그래프 데일리 차트. 갭 UPS 위드 풀 바디지 분리실 캔들즈. 노 쇼트텀 컨솔리데이션. 트렌드 엑셀레이션 에비던트. MACD 히스토그램 피킹 오른쪽 화살표 사인즈 오브 토핑. 스톱워치 120-MINUT 차트. 맥스 오버보트. 나우 쇼잉 지그재그 스타일 로컬 커렉션. 프라이스 클링즈 투 어퍼밴드 오른쪽 화살표 포이즈드 포 이더 리뉴드 서지 오어 브레이크다운. 넥스트 디렉션 하인지스 온 웨더 $4 존 홀즈. 파이낸셜 펄스 노 레버뉴. PRE 레버뉴 스테이지 비즈니스. Q1 넷 로스 20.6$M. 캐시 43.8$M. 리슨트 $37M 에쿼티 레이즈 앳 $3. 쉐어 워런츠 앳 $4.5. 오퍼레이츠 ASA 하이 리스크. 하이하이프 내러티브 스톱. 뉴스 앰퍼샌드 리스크 서머리 파일드 오피셜 류. S. 딥시 마이닝 애플리케이션. 파지티브 인바이런멘틀 어세스먼트 트리거드 플러스 17% 게인. 애널리스츠 E. G. A. G. B. 레이즈드 타겟 투 $6.25. 스틸 페이싱 백내쉬 프롬 인바이런멘틀 그룹스 플러스 스페큘레이티브 밸류에이션. 스트래터지 시나리오 서머라이즈드 바이 UNY 하우머치. 엔트리 존 3.9$, 4.2$. 엔트리 프라버빌리티 59%. 포스트 갭 리트레이스먼트 라이클리 투 리테스트 서포트. 타겟츠 $5. 리치 프라버빌리티 64%. $6.2. 리치 프라버빌리티 42%. 스탑로스 3.55달러, 브레이크다운 프라버빌리티 60%, 클로스 갭오어 트렌드 브레이크다운 리스크. 아웃룩 TMC is a high volatility bet on the future of energy resource sourcing. While the technical setup is currently strong, it is likely nearing exhaustion. The next optimal entry will likely come after consolidation. Monitor financial dilution, risk and sustainability of momentum. Deep dive report, flow plus sentiment, strong institutional buying and percent 5x average volume. Buzz rising on Reddit and retail platforms. Short interest is high, but less threatening near term. Analysts anticipate long term resource shift. Ideal strategy. Wait for dips plus manage risk on speculative trend. LFMD, hidden opportunity or end of the rally. Hello, this is Zillow. You can check chart-based insights more conveniently on the blog. For ongoing stock analysis, feel free to subscribe or comment. Chart explanation. This is LFMD, which you requested in the comments. The circled areas in the past and present show potential short-term trend entry points. A confluence of moving trends and an upward trend indicate an entry point. Each chart has its own wave pattern and trend. LFMD has been in a swing wave since early May, and after breaking through mid-term resistance with a short-term trend, it is currently undergoing a short-term correction in the PRE market. If the short-term trend is broken, the entry point will be at the mid-term support level of 8에서 9 within approximately 2 weeks. Investment opinion. LFMD is riding a strong short-term rally backed by earnings recovery and business expansion. However, entry at this level may involve risk due to technical overbought conditions and recent insider selling. A cautious approach is advised unless a strong pullback occurs. EWEK expected return, plus 6.5%, probability 52%. EMONTH expected return, plus 14.8%, probability 46%. YEAR expected return, plus 42.0%, probability 63%. Summary. Life Mood. A telehealth company recently expanded Medicare coverage and entered the women's health segment through acquisition. The company posted positive net income in Q1, with gross margins of 88%, reflecting operational efficiency. While short-term price action is overheated, the medium to long-term momentum remains intact. Technical rhythm analysis. 벽난로 선반식의 monthly chart, broke out of long-term downtrend with 5 consecutive bullish candles. Cleared mid-term resistance levels with upside alignment. Price structure shows strong bottom support and trend transition. 내려가는 그래프. 위클리 차트, breaking above prior high near 10.5달러, attempting new base zone. High volume confirms bullish momentum, near upper bollinger band, signals potential overheating. 내려가는 그래프. 데일리 차트, RSI, CCI both in overbought territory. Needs to hold 9.2달러, 9.4달러 box for momentum continuation. If sustained, 11.2달러, 11.7달러 range is next resistance target. 스톱워치 120-MINUT 차트, 포스트 서지 컨솔리데이션 페이지, 오실레이터 쇼잉 쇼트텀 위크니스, 브레이크다운 빌로우 10.2달러 메이 트리거 래피드 쇼트텀 디클라인. 파이낸셜 펄스 Q1 레버뉴 65.7달러 M, 플러스 23% 요이. 넷 인컴 1달러, 38M, 펀드 프로피터블, 그로스 마진 88%, 어버브 헬스케어 섹터 에버리지. EPS 0.01달러, 미시드 이스트 0.14달러, 슬라이트 센티멘트 커렉션, 커버리지 익스펜딩 투 49 스테이츠 바이, Q2 언더 메디케어. 뉴스 앰퍼샌드 리스크 서머리 메이저 테일린즈 프롬 메디케어 액세스 앤드 위민스 헬스 익스펜션. 인사이더 셀링 토탈드 1.1달러 M 오버 라스트 3만스스. 테크니컬 인디케이터스 쇼잉 오버히팅. 미시드 EPS 메이 트리거 마이너 센티멘트 쿨링. 스트래터지 시나리오 서머라이즈드 위드 웬 바이 하우 머치. 엔트리 존 9.4달러 9.8달러. 엔트리 프라버빌리티 61%. 페이보러블 이프 프라이스 리테스츠 쇼트텀 서포트 레인지. 타겟츠 11달러. 리치 프라버빌리티 65%. 12.2달러. 리치 프라버빌리티 48%. 스탑로스 8.8달러. 브레이크다운 프라버빌리티 58%. 빌로우 박스 서포트 메이 시그널 트렌드 리버설. 아웃룩. LFMD is midstream in a momentum rally driven by renewed profitability and strategy expansion. While the long-term outlook is promising, technical indicators suggest the stock may be overextended. Watch for consolidation around support before entering. and monitor insider activity ASA risk gauge. 딥다이브 리포트, institutional flow ampersand, use, institutional inflow strong, volume 3x above average. Short interest declining, but reversal risk remains. Women as health acquisition boost long-term growth profile. EPS miss offset by strong growth narrative. SMCI 슈퍼 마이크로 컴퓨터, 잉크 리포트. Hello, I am 진로. 차트 앤드 텍스트 뷰 available on the blog. For ongoing coverage requests, please subscribe or comment. Chart explanation, the past and present circled areas covers AS potential pivot points for a short-term trend, with the upward trend line serving as the key pivot. Currently, trading above the white dotted swing support line. The price is in a holding pattern awaiting the next short-term trend, support. AS it approaches this level. It is a checkpoint to assess potential further upside and to monitor for a touch of the medium-term trend line. Executive Summary SMCI has rallied 36% over the past 2 days to $45.82, driven by strong AI server demand. The recent surge shows sustained buying pressure and a clear uptrend, setting the stage for further gains. Technical rhythm analysis probabilities based on backdated simulations. Page core MWD. Monthly 74%, long-term support holds, establishing a solid base. Weekly 64%, Bollinger Band expansion confirms an accelerating uptrend. Daily 68%, key moving averages remain supportive despite the rapid rise. Alignment view 30분에 120민, 120민 66%, expanded band width signals, trend persistence. 30민 72%, short-term MA crossover generates a strong IQ. 리듬 트랩, 볼륨 앰퍼샌드 밴드 위드스, 볼륨 앰퍼샌드 밴즈, 70%, A 스파이크 인 볼륨 위드 와이든드 밴즈, 서제스트 한 이미넌트 테스트 오브 더 $48 박스 탑. 트레이드 시나리오 앤 Y 하우 머치, 엔트리 존, $44 마이너스 $45, 68%, 바이온 쇼트텀 풀백 투 인크리즈 석세스 프라버빌리티. 타겟츠, $48, 프라버빌리티 70%, $52, 프라버빌리티 55%, 스탑로스, $42.5, 74%, 엑시트 이프 더키 서포트 레벨이즈 브리치드 투 매니지 리스크. 뉴스 앰퍼샌드, 파이낸셜 플로우 AI 서버 디맨드 서지 액티드 ASA 메이저 카탈리스트, 프로펠링 시레즈 샤플리 하이어. 프라버빌리티 65%, 디스파이트 스트롱 레버뉴 그로스, 넷 인컴 디클린드, 하이라이팅 더 니드 포 컨티뉴드 마진 임프로브먼트. 프라버빌리티 70%, 로버스트 오퍼레이팅 캐시 플로우 하스 메인테인드 A 솔리드 캐시 버퍼, 리미팅 쇼트텀 리퀴디티 리스크. 캐시 버퍼, $2.1 B. 아웃룩, A10 라이딩 더 AI 웨이브 세일즈 파더, 디스 랠리 이즈 저스트 더 비기닝. 트러스트 더 시나리오스 앤드 워치 더 넥스트 레지스턴스 레벨즈.
DJT 트럼프 미디어 앤드 테크놀로지 그룹 VPAR 리포트. 안녕하세요, 진로그입니다. 블로그에서 차트와 함께 텍스트로도 확인하실 수 있습니다. 그리고 계속적인 종목 팔로워는 구독 또는 댓글로 요청해주세요. 리포트 투자 의견. 개인적으로 DJT는 법적 비용 부담 속에서도 서비스 확장과 재무 안정화 신호를 보내고 있다고 봅니다. 2주 기대 수익률 약 4.4%, 달성 확률 66%, 2달 기대 수익률 약 10.2%, 달성 확률 52%, 2년 기대 수익률 약 65%, 달성 확률 75%. 1. 요약 서머리 DJT는 최근 $25.84까지 반등하며 단기 모멘텀을 회복했습니다. 단기 모멘텀 지속 확률 70%, 주요 이동평선 지지와 MACD 호전으로 반등이 이어질 가능성이 높습니다. 재무 개선 유지 확률 65%, Q1 매출 0.82달러엠, 순손실 축소 흐름이 당분간 지속될 것으로 보입니다. 박스권 상단 테스트 확률 66%, 거래량 증가에 따른 밴드폭 확장에서 $27 부근 실현 가능성이 큽니다. 2. 기술적 리듬 분석 테크니컬 리듬 애널러시스. 확률 예측은 과거 시뮬레이션 기반. 페이즈 코어, 월주일, 월봉 75%, 장기 핵심선 위에서 안정적 지지, 중장기 추세 전환 기대. 주봉 60%, 볼린저 밴드 압축 해제 후 확장 국면 진입, 새로운 방향성 포착. 일봉 68%, 주요 이동평선 정렬 양호 및 MACD 데드 크로스 해소, 반등 신호 명확. 얼라이먼트 뷰 120분, 30분, 120 분봉 62%, 밴드폭 확대, 추세 전환 가능성 상승. 30분봉 70%, 단기 이동평선 교차로 강한 매수 신호 발생. 리듬 트랩, 거래량 앰퍼샌드 밴드 폭, 볼륨 앰퍼샌드 밴드 66%, 거래량 급증과 밴드 확장으로 단기 박스권 상단 테스트 가능성 높음. 3. 매매 시나리오, 트레이드 시나리오. 언제, 왜, 얼마나를 초보자도 이해하기 쉽게 정리했습니다. 진입 엔트리 존, 달러 25.50에서 25.70, 확률 68%, 이동평선 지지 구간에서 매수 시 안정적 진입 가능. 목표 타겟츠, 27달러, 단기 밴드 상단, 달성 확률 66%, 28.5달러, 월봉 주요 저항선, 달성 확률 52%, 손절 스탑로스, 24.8달러, 확률 72%, 주요 지지선 이탈 시 자동 청산으로 리스크 관리. 4. 뉴스 앰퍼샌드 재무 흐름 뉴스 앰퍼샌드 파이낸셜 플로우 판본디 지분 매각 후 반등, 회복 확률 70%, 지분 매각 소식으로 일시 하락했지만 즉각 매수세 유입으로 가격 회복. 아메리카 퍼스트, 포트폴리오 확장, 모멘텀 유지 65%, 트루스, 파이 트루스 플러스 론칭 기대감이 중장기 성장 모멘텀 강화. 법률 비용 vs 현금 9.7달러 M 늘어난 법적 비용에도 충분한 현금 보유로 단기 유동성 리스크 제한적. 5. 전망 앰퍼샌드 은유적 마무리 아웃룩 앰퍼샌드 메타포리 클로스. 가장 어두운 밤이 지나야 새벽이 온다. 차트가 보내는 신호와 확률을 믿고 인내를 더해 다음 기회를 준비하세요.
DJT 트럼프 미디어 앰퍼샌드 테크놀로지 그룹 VPAR 리포트. 헬로, 진로, you can also view the charts and text together on the blog. For ongoing coverage of specific stocks, please request by subscribing or commenting. Investment opinion DJT is showing signs of service expansion and financial stabilization despite legal cost headwinds. EWEK expected return 4.4%, probability 66%. EMONTH expected return 10.2%, probability 52%. EYEAR expected return 65%, probability 75%. 1. Executive Summary DJT has rebounded to 25.84달러. Regaining short-term momentum. Momentum continuation probability 70%. Key moving averages support the rise and MACD has improved. Financial improvement maintenance probability 65%. Q1 revenue 0.82달러 M with reduced losses. Box top test probability 66%. 볼륨 백드밴드 익스펜션 포인트 2A 27달러 챌린지. 2. 테크니컬 리듬 애널러시스 프라버빌리티즈 베이스드 온 팩치티드 시뮬레이션즈. 페이즈 코어 MWD. 만슬리 75%. 서포티드 어버브 더 롱텀 코어 라인. 서제스팅 레이스 포메이션. 위클리 60%. 볼링거 벤즈 릴리징 프롬 컴프레션 인투 익스펜션. 인디케이팅 트렌드 인셉션. 데일리 68%, 쇼트 투 미드텀 마스 얼라인드 블리슬리, 앤드 MACD 데드 크로스 아스 클리어드, 얼라이먼트 뷰 30분에 120민 62%, 익스펜디드 밴드 위드스 시그널링 포텐셜 트렌드 시프트, 30민 70%, 쇼트텀 MA 크로스오버 제너레이팅 8 스트롱 IQ, 리듬 트랩, 볼륨 앰퍼샌드 밴드 위드스, 볼륨 앰퍼샌드 밴즈 66%, 라이징 볼륨 위드 와이드닝 밴즈 서제스트 테스팅 더 27달러 박스 탑. 3. 트레이드 시나리오 웬 와이 하우 머치. 엔트리 존 달러 25.50에서 25.70 68%. 엔트리 앤 무빙 에버리지 서포트 포 하이어 석세스 프라버빌리티. 타겟츠 27달러 프라버빌리티 66% 28.5달러 프라버빌리티 52%. 스탑로스 24.8달러 72%. 엑시트 이프 키 서포트 이즈 브리치드 투 매니지 리스크. 4. 뉴스 앰퍼샌드 파이낸셜 플로우 판 본디 스테이크 세일 오른쪽 화살표 리바운드 70%. 템퍼러리 딥 팔로우드 바이 스위프트 리커버리 AS 바이어즈 스텝패드 인. 아메리카 퍼스트 포트폴리오 익스펜션 65%. 엔티시페이티드 그로스 프롬 트루스 파이 앰퍼샌드 트루스 플러스 런치스 부스팅 센티멘트. 리갈 코스츠 vs 캐시 9.7달러 M. 서피션트 캐시 버퍼 리미츠 쇼트텀 리퀴디티 리스크 디스파이트 엘리베이티드 리갈 익스펜시스. 워우. 아웃룩 앰퍼샌드 메타포리 클로스 더 다크니스 아워 올웨이즈 기브스 웨이 투 던. 트러스트 더 차트 시그널즈 앤드 프라버빌리티즈 레이어 페이션스 앤드 프리페어 포 더 넥스트 빅 무브.
인슐린, PODD. 단기 추세선 위에 리듬 반전 지금이 기회일까? 리듬 리포트, PODD. 언제 팔아야 할까? 언제 사야 할까? 왜 오르고, 왜 내리는지 더 이상 고민하지 마세요. 단기 추세선이 말해줍니다. 중요한 건 지금 이 리듬, 그리고 추세선의 지지 여부입니다. 지금 분석해드리는 이 흐름, 차트 기반 리포트는 블로그에서도 확인하실 수 있어요. 실제 움직임을 시각적으로 확인하고 싶은 분들께 추천드립니다. 차트 분석, 과거와 현재 동그라미 친 부분이 단기 추세 가능성 타점입니다. 별표 부분 주황색 중기 추세 병합으로 중기 우상향 박스권의 파동 진행 중입니다. 분석 요약, 현재 인슐릿, PODD, 위 주가는 316.67달러, 일본 기준 단기선 지지선과 추세선이 정확하게 병합된 구간에서 반등 시도가 이루어지고 있으며 이는 단기 추세 모멘텀이 시작될 수 있는 구간으로 해석됩니다. 단기선 위 지지 확인, MACD는 수렴 이후 확산 시작 직전, 볼린저 리듬 수축 오른쪽 화살표 확장 준비 단계, 스윙 지지선도 상방 돌파 후 안착 흐름 확인, 현재 구조는 단순 반등이 아니라 중기 리듬으로 이어질 수 있는 상승 트리거로 작용할 수 있습니다. 리포트, 인슐릿, PODD는 당뇨 치료 솔루션 옴니팟을 중심으로 미국 내에서 고성장 중인 의료기기 섹터 대표 종목입니다. 이번 흐름의 핵심은 차트에서 나타나는 별표, 리듬 구조의 정렬, 별표입니다. 단기선과 지지선이 병합된 지점, 오른쪽 화살표 단기 추세 모멘텀 출발 구간, MACD 수렴 후 확산 시그널 대기 오른쪽 화살표 에너지 점화 구간, 밴드 수축 오른쪽 화살표 상단 점선 터치 반복 오른쪽 화살표 변곡 리듬 확대 시도. 이 흐름에서 우리가 주목해야 할 건 단기선이 얼마나 추세선을 타고 지지되며 움직이느냐입니다. 단기선은 리듬의 트리거입니다. 즉, 이 리듬이 살아있다면 다음 상승 파동이 도래할 수 있습니다. 진입 청산 시뮬레이션은 블로그에서 확인하세요. 팁, 현재 위치는 단기 스윙 추세의 병합 지점이자 첫 번째 확장 흐름의 초입입니다. 다만 박스권 상단 점선은 반복적으로 테스트 중이므로 확장형 시나리오로 접근이 중요합니다. 마무리 멘트, 차트는 단순한 선이 아닙니다. 리듬을 읽는 언어입니다. 지금 이 순간 차트 위의 리듬을 듣고 있다면 이미 다른 사람보다 한 발 앞선 겁니다. 당신의 리듬은 지금 어디에 있나요? 차트 이미지와 함께 더 자세한 리포트는 블로그에서 확인하실 수 있습니다. V, P, A, R의 모든 분석이 시각적으로 정리되어 있습니다.
댓글 요청 주신 팔란티어 테크 PLTR입니다. 월봉 단기선 파동 차트에서 매도세로 일봉 단기선 이탈 상태로 월봉 단기선과의 이격이 커 2개월 내외 이격 조정 가능성을 체크해야 합니다. 일봉 차트입니다. 단기선 이탈 흐름으로 1월과 같이 추세선 지지 및 이평 조정이 필요하며 스윙선 100과 중기선 85 부근에서의 체크가 필요합니다. 두 달 이후 중기선에서의 타점이 매력적인 맥점입니다. 파인스크립트로 세팅된 120분봉 기준. 현재 중기선 반등 상태로 단기선 및 스윙선의 매물을 소화할지 수급 및 방향성 체크를 하며 보유자분들은 물량 대응이 필요합니다. 월봉 주봉 일봉 단기선에서의 매수 매도 판단 시 높은 확률의 수익을 챙겨갈 수 있습니다. 테슬라는 12월 말부터 단기선에서의 이탈 흐름을 1월 초 스윙선 터치 후에 계속적으로 턴지지 수급 없이 1월 말부터는 스윙선 이탈 흐름을 보여주고 있습니다. 현기준 340 매물대 약반등 여부 후 매도세가 이어져 2에서 4개월 내외 추가 조정 텐션으로 전환될 수 있으니 주의가 필요합니다. 제주 반도체와 슈퍼 마이크로 컴퓨터 유사 수급 패턴 시나리오입니다. 작년 12월 12일 반등 맥점 수급 체크 메모했던 제주 반도체의 주봉입니다. 12월 중순부터의 수급 및 1월 초 주봉 기준 단기선위로 안착 흐름 후 주봉 기분 스윙선 터치 이후 윗꼬리 형태의 매도세가 나오고 있습니다. 제주 반도체 일봉입니다. 일봉 기준 중기 추세선과 단기선의 교차 임박지점으로 다음 주 방향성에 따라 대응이 필요하며 단기선 이탈 흐름에서는 현재 반도체 관련주들의 수급이 이어지고 있어 스윙선에서의 지지 체크가 중요합니다. 슈퍼 마이크로 컴퓨터 주봉입니다. 제주 컴퓨터와 유사 패턴 가능성으로 1번 지점에서 위 지지 형태 시 2번까지 위 목표가를 노려볼 수 있습니다. 슈퍼 마이크로 컴퓨터 일봉입니다. 보유하신 분들은 일봉 단기선의 지지 및 추세를 지켜보며 대응이 필요하며 이 종목 모두 매물대에 부담이 있어 대응의 중요성이 강조됩니다. 고릴라 테크놀로지 그르르르입니다. 주봉 기준 단기선 상승 및 스윙선과의 교차 흐름을 보여주고 있으며 일봉 기준 스윙선과 중기선 골든 크로스 후 단기 및 스윙선 확장 추세 흐름에서 단기선 부근 매수 타점이었습니다. 패턴을 잘 체크하시고 파동 텐션이 빠른 패턴으로 단기선과의 이격이 크므로 단기선의 팔로우 및 지지 여부를 체크하며 적절한 분할 매도 및 홀딩을 고려해야 합니다. 본 종목은 월봉 단기선 추세 전환 AI 관련주입니다. 월봉 단기 추세, 지지선 병합 지점의 초입으로 단기선 부근 매매 타점을 체크해볼 만합니다. 주봉 기준 단기선 및 스윙선 교차 구간으로 맥점으로 적합합니다. 재무제표 흑자 전환에 따라 직관적인 시장의 관심이 차트의 반영을 추측해볼 수 있으며 해당 종목의 디테일한 분석 및 매매를 체크해볼 만합니다. 해당 종목의 관점 및 궁금하신 점은 채팅창으로 문의주세요. 월봉 주봉 일봉 단기선에서의 매수 매도 판단 시 높은 확률의 수익을 챙겨갈 수 있습니다. 빅베어 AI 홀딩스 일봉과 120분봉입니다. 일봉 기준 노란색 단기 추세 및 지지선 병합 상승 추세와 흰색 스윙 추세선 및 지지선 지지 흐름에서의 맥점입니다. 120분봉 기준 노란색 단기선 병양 상승 추세 및 스윙 및 중기 골든 크로스입니다. 일봉 및 120분봉 매수 맥점으로 사운드 하운드 등 완성도 높은 조정 이후 상승 가능성이 높은 패턴으로 눈에 익혀두는 게 좋습니다. 엔비디아 월봉입니다. 과거 1번 동그라미 단기선 추세 및 V 반등 부분이 중장기 맥점입니다. 현재 월단기선 이타로 재진입 상태이지만 추세가 감소한 상태로 장기적으로 이번 스윙선에 매물 터치 가능성이 있습니다. 엔비디아 일봉입니다. 스윙선 138중기선 133에서 130에서 발표 전 삼각 수렴중에 있어 저항 지지에서의 수급 대응 지점입니다. 월봉 주봉 일봉 단기선에서의 매수 매도 판단 시 높은 확률의 수익을 챙겨갈 수 있습니다. 나스닥 100월봉입니다. 스윙선을 지지하며 단기선 상승 초입인 1번 맥점과 단기선 병합 지점에서 상승 초입인 2에서 3번이 맥점이니 패턴을 참고하시길 바랍니다. 현재 월 단기선을 지지하며 큰 매도세 없이 추세를 이어가고 있습니다. 일봉 차트입니다. 단기선과 스윙선을 기준으로 우상향 박스권을 보여주고 있어 큰 이벤트가 없는 한 당분간의 추세는 이어질 가능성이 있습니다. 월봉 주봉 일봉 단기선에서의 매수 매도 판단 시 높은 확률의 수익을 챙겨갈 수 있습니다.